Before we begin, I'd like to introduce the Assembly chairs and rankers who are attending this hearing. From Agriculture, Chair Donald Lupardo and Ranker Ken Blakenbush. From Banks, Chair Tom Abenati and Ranker Kieran Michael Laller. From Insurance, Chair Kevin Cahill and Ranker Andrew Garbarino. From Small Business, myself, Chair Al Sturpey, and Ranker David DiPietro. And Ways and Means, our esteemed Chair Helene Weinstein and Ranker Edward Ra. Chair from the Office of State and Federal Relations, Neely Rosick. The Chair of the Task Force on Food, Farm, and Nutrition Policy, Michaela Solages, and the Ranker John Salka. I'd like to thank my colleagues in the Assembly and Senate for joining us today virtually, as well as the many guests and experts we have testifying today. There's no doubt these are extraordinary times, and while this virus and the efforts to contain it have affected everyone and all aspects of our society, one of the greatest impacts outside of the healthcare system is the pain this has caused small businesses and their employees. As someone who has owned small businesses and grew up washing dishes and waiting on tables at my father's restaurant, it's difficult to see this impact in my own district and across the state and not be able to do something about it. That was the genesis of these meetings. As chair of the Small Business Committee, I reached out to leadership about holding hearings, and the reaction was swift and supportive. So supportive that the idea became so popular that we are now planning several more hearings across the state following this one. The reason we need these hearings is because the challenge our small businesses face is massive. The federal government has responded to the crisis by establishing several programs to help small business through these difficult times. Today, we're looking in particular for feedback on these programs. What has worked, what has failed, and what can be done differently to improve the federal support for small business. As witnesses testify, and as my colleagues ask questions, I only ask that due to the expected popularity of this hearing and the virtual format, that we all do our best to be as concise as possible. There's a lot to cover and to discuss. Also, as an information gathering pursuit, I would recommend that we all use our time for questions efficiently so that we can focus the discussion and gather as much relevant information as possible. So again, thank everyone for being here wherever you are. And since this is our first Zoom hearings, we wanted to take a few minutes to go through some housekeeping. Please do not read your testimony. We will be reading all of the submitted testimonies, so please summarize your main points. Due to the large interest in the topic, each speaker will have 5 minutes to speak. There's a countdown clock to help keep us stay on track that can be seen in your Zoom gallery view. When the light is green, please begin to speak. When the light turns yellow, you have 1 minute left and it's time to start wrapping things up. After 5 minutes, the light will turn red and it will be our turn to ask questions. Please keep your video on and use gallery view. You will remain muted until it's your turn to testify and will be muted again once all the questions have been asked and answered. Chairs and members will also have 5 minutes to ask questions. Please mute cell phones during the hearing. As a reminder for those who may be watching but are not scheduled to testify, please be aware that you can submit written testimony to the email address on the hearing notice reply form within 10 days. And a reminder to members, each member will have the option to ask questions for 5 minutes, and there will not be second turns. Remember, you do not have to use all 5 minutes. Please use the raise hand function if you want to ask a question. You will remain muted until you are called on to ask the question. So hopefully that clears a few things up. I'd like to now turn it over to my co-chair, Senator Anna Kaplan, for her introductions and opening comments. Senator?
Thank you. Good morning from Great Neck. My name is Anna Kaplan. I'm the chair of Senate Committee on Commerce, small business, and economic development. And it is my great honor to be chairing this history-making joint virtual public hearing of the New York State Legislature on the topic that is critical and urgent: the federal response to the economic impact of the coronavirus pandemic on our small business here in New York State. Before we go further, I'd like to acknowledge that we meet today during an extraordinary moment in our shared history. And while we're here because of, it's our duty to do everything in our power to help all the New Yorkers to get through this crisis. There are nearly 22,000 New Yorkers who no longer are with us as a direct result of this crisis at hand. I ask everyone to join me, observing a moment of silence for all those that we've lost. Thank you. Now I'd like to recognize the members of the Senate in attendance today, joining us from their respective districts around the state. From the majority, we have Senator Krueger, who chairs Finance, Senator Breslin, Chair of Insurance, Senator Metzger, Chair of Agriculture, Senator Sanders, Chair of Banks. We're also joined by Senator Benjamin, Senator Gorin, Senator Hoylman, Senator Kennedy, Senator Liu, Senator Martinez, Senator May, Senator Rivera, Senator Skoufis, and Senator Thomas. From minority, we have Senator Seward, Ranking Chair of Finance, Senator Helming, Ranker Chair on Commerce, Senator O'Mara, Ranker on Banks, Senator Ort, Ranker on Agriculture, and Senator Rosenhofer, Ranker on Insurance, Senator Borrello, Senator Gallivan, Senator Jordan, Senator Lanza, Senator Little, Senator Ritchie, Senator Serino, and Senator Tedisco. I also would like to say it's nice to have Senator Skoufis and Senator Seward with us, healthy, as they both have recovered from coronavirus. I also like to remind everyone participating today that we are keeping testimony limited to 5 minutes. And questions and comments should stay focused on the purpose of this hearing, which again is the federal response to the economic impact of the pandemic on New York small businesses. As many of you may know, I came to this country at age 13, fleeing revolution in my home country of Iran. My parents made the difficult decision to send me and my brother here alone while they worked to secure safe passage for themselves. A lot of people asked me if I was scared, leaving behind the only home that I had ever known. My answer always is, I was, but I remember being more excited than scared, because I knew that this country is one full of opportunity. It is a country where people can dream big. It is a country where they can work hard and make all those dreams come true. And for generations of Americans, small businesses have provided an opportunity to follow your dreams and fulfill them, uplifting yourselves, your family, and your community in process. Through these businesses, we don't just earn a living, we earn a sense of purpose, a sense of achievement, and a sense of pride in ourselves. Right now, with coronavirus putting our communities on pause since March, the threat to our small business couldn't be more real and more serious. And that doesn't just put the owners in peril. It harms every employee. It harms every downtown across the state and puts at risk the very promise of opportunity that is the cornerstone of the American dream. Those of us here today who work in the service of the public are stewards of that promise. Each of us is charged with a sacred duty to ensure that the American dream lives on by promoting and preserving opportunity. So today, as we hear testimony from stakeholders from around the state about how our federal government has risen to this unprecedented moment, I'm hopeful that we can get a true picture of the impact of this crisis on our small business community so that we can take the information and transform it into real action to help our residents who are struggling. We all know what's at stake here. We know there will be significant challenges ahead, but we're all in this together. We're New York tough, and I know we can do anything when we are united as one. And with that, I would like to start the first panel. The first panel is small business panel, and we have here with us Jeff Knaus, co-founder of Digital Hive, Bob Stark, partner at CJS Architects, Natasha Amott, owner of Whisk NYC, Carlos Suarez, founder of Casa Nila. I open it up to them for their testimony. Thank you.
Jeff, why don't you start?
Sounds good. Good morning. Thank you for inviting me to speak today. My name is Jeff Knaus. I'm the CEO and co-founder of Digital Hive, a full-service digital marketing agency. We help businesses grow by telling their stories through online marketing platforms such as Facebook, Instagram, Google, YouTube, and others. I started the company with my co-founder, Jake Tanner, about 5.5 years ago in a 200 square foot office in downtown Syracuse. We completely bootstrapped the company, no outside financing, and we lived off our savings for about a year as we made virtually no money. After that first year, we found some success, hired our first employee, and after that, the business really began to scale. 5.5 years later, we have about 13,000 square feet of office space in downtown Syracuse and downtown Rochester, with plans to expand into Buffalo. We have about 53 full-time employees and grown over 12,000% in the last 5 years and finished last year with 8-figure revenue. Inc. magazine named us the 52nd fastest growing company in the United States on their annual Inc. 5000 list. And we are extremely proud to be growing a tech and digital company from the ground up right here in upstate New York. Alongside incredible tech-driven companies like TCG Player, Pals and Mo's, Sidearm Sports, Terrakey, Innovative Solutions, and so many others, we are stopping the brain drain, keeping young talent from leaving our amazing higher education institutions and going to larger cities. We are also boomeranging back amazing individuals that have left New York State, gained some high-level experience, and now wish to return for the affordable cost of living and 4 beautiful seasons. Due to COVID-19, New York State paused like most businesses. The growth I was referring to came to a grinding halt for Digital Hive because many of our clients were deemed non-essential, such as car dealerships, small properties, casinos, and others. They were forced to close their business and thus stop spending money on advertising. To be clear, I fully support the work of our medical professional community and local government and think they have done a tremendous job in saving lives by social distancing. We are committed to continuing to follow the social distancing guidelines as outlined by the experts, no matter the business cost, as human lives are far more valuable. That said, because of the consequences of COVID-19, Digital Hive was down from initial projected revenue in March by 33%. In April, we were down 66%. And in May, we plan to be around 64% again from initial projected revenue. As soon as we saw the effects, we took swift action by cutting expenses wherever we could. However, with that big of a loss, things looked dire. We made a commitment to our staff that the very last consideration we would take would be staff layoffs. When both EIDL and PPP came to light, I read every article I could find. Luckily, we have an outsourced financial team named Gardner and Caparelli who helped us navigate through seemingly daily changes and various intricacies of the programs. They helped us to prepare the EIDL application well in advance and submitted it the very first day we were able to do so, which got us to the front of the line. They also helped us with multiple iterations of PPP applications. Our bank sent the link to apply to PPP at midnight on Sunday, and by Sunday at 2 a.m., we had submitted our PPP application with their help. I'm proud to say we have not laid off one of our staff members. I am wholly convinced that PPP and EIDL have saved our company from having to lay off any of our employees. Our employees are the reason we have grown 12,000%, and without them, we have no company. So I'm grateful to the quickness the program is launched and the legislators that worked across the aisle to get these programs out. Of course, because of the speed at which these programs were launched, it caused major confusion for myself and for my peers, and frankly, still does. We are not sure of the full parameters of the forgiveness element of the PPP. It seems there are still talks about loosening the guidelines, and I would urge you to consider that option. The financial strain for COVID will get better over the coming months, but I and most of my peers do not feel we will return to normal revenue numbers before the end of 2020. Allowing the PPP to be 100% forgivable with looser guidelines is a must to keep our businesses afloat and our employees employed. After getting feedback from my friends working in various industries, I would ask that you consider further action to help save our small businesses from devastating effects of COVID-19, and these are some elements part of that consideration. Communicate the programs to small business owners in the most simple terms so every spectrum of business owner can navigate and apply. Create special consideration for MWBE businesses. Digital Hive is not MWBE, but I want to ensure there's a level playing field for a segment of business owners where it is crucial for them to flourish and help grow their communities. Create special consideration for startups relying on fundraising in an environment where capital is dried up. Enforce reimbursements to agents to help businesses navigate these programs, as some of our largest banks in the country are refusing to reimburse entities like Gardner and Caparelli, where banks with a local vested interest in our communities have been more than willing to reimburse them for their services in helping small businesses like ours. Improve the loan term from 2-year to 5-year floor to amortize loans over a longer period, which lowers the monthly payment. Loosen the guidelines for PPP to be 100% forgivable so it can make up a portion of the bottom line loss due to COVID. I am positive there are other things that can be improved. I want to say again, I am grateful to our legislators for providing this funding quickly, as it 100% saved jobs to Digital Hive. I'm also grateful for the opportunity to speak today and appreciate you all taking the time to hear a small business owner's point of view over the recent unprecedented events. Thank you so much.
Thank you, Jeff. I also want to mention, I did not mention, we also have my colleague, Senator Carlucci, with us, who has joined us this morning too. We can take this now and give it to the next speaker. Bob, would you like to say a few words?
Yes, I would, and thank you for having me. Hello from Buffalo, New York. My name is Bob Stark, and I'm a partner in CJS Architects. We are a small to medium-sized firm of about 30 people with offices in Buffalo and Rochester, New York. We do work all around the state for the State University Construction Fund, the Dormitory Authority, various cities and municipalities. We also work with private museums, private universities, cultural institutions, and the rest of our work is probably 50 to 60% is with private companies and developers. So far through this crisis, I feel that we have actually been fortunate because of the nature of our work. For many years, our staff has been working collaboratively between our 2 offices and trading staff. So when the cutbacks happened, or the mandate happened for people not to come to work, it actually worked out pretty well for us for people working remotely. And it has been a little bit of a challenge based on the collaborative nature of our business, but it's actually worked out quite well. We have received a PPP loan. We went through a local small bank that we have a relationship with, Canandaigua National Bank, and they were very helpful. It went, we thought, very smoothly. You know, it was a little bit onerous, as all those kinds of paperwork can be, but we applied immediately when the deadline came, and I believe we got our money the next day. It's been very helpful for us to maintain our staff. We have not laid off any people. I can say that probably 50% of our projects were put on hold and remain on hold. Fortunately, the work that we had in the pipeline allows us to keep everybody working. And the PPP loan was just essential for us to keep everybody on board. We really value our staff, and it's very hard to train staff and get staff. So to try to shed staff and then bring them back later could really be a very difficult thing for us to deal with. We also applied for the SBA federal economic injury disaster loan. That did not go quite so smoothly. I mean, we're not even actually sure where that was at. That was the loan where you would initially receive the $10,000, and then if you were approved, decide or calculate what you might require later. And we really haven't heard anything on that. We're moving forward. Our communications and actually between our offices has maybe gotten a little bit better because we're forced to communicate every day on what everybody is doing. So far, we feel that we've been very fortunate, and I'd really like to thank everybody for providing the PPP loans and the opportunities to garner these funds, because if it was not for that, we would be in serious trouble. So far, we are moving along. I don't think this is sustainable with the government shutdown. It's very important, I think, that construction be allowed to start back, which I think is probably something that's going to happen pretty soon. And considering the fact that the construction industry is used to working under various safety standards, I think that they would be able to accommodate any issues that were needed to do that. So at this point, I would just like to thank you for the opportunity to give you my testimony and thank everybody for helping small businesses and recognizing how important they are to our entire economy. Thank you.
Thank you, Bob. Why don't we start next with Natasha?
Good morning.
Good
Good morning, everyone. My name is Natasha Amon, and I own a kitchenware retail store called Whisk, located in downtown Brooklyn. And I think I'm going to be painting a somewhat different picture than the prior speaker. So within a day of the New York State closure order, I furloughed 6 of my 11 staff, and my sales plummeted. Myself and my remaining crew have been working tirelessly, most at reduced hours, to effectively flip our front-facing, customer-oriented business model to that of an internet business. And it has been exhausting, to say the least. I did apply for a Paycheck Protection Program loan less than 24 hours after my bank, HSBC, opened its portal on April 3rd, but I failed to receive a loan in that first round. The lack of transparency on the part of my bank was incredibly frustrating. I am happy to report that I did receive my loan in the second round of funding. It is so rare that a small business owner gets to share their thoughts and perspectives with actual policymakers. And I would argue that the federal response seems like it was crafted without the engagement of any small business owner. I am sympathetic to the reality that we just had to get money out, and it was never going to be perfect. But now there is a silence on important and nuanced details that demand reaction. Forgiveness on my loan will be determined based on whether or not I've met 3 thresholds. 1, have I spent it all within 8 weeks? 2, has a minimum of 75% of my loan been used for payroll expenses? And 3, have I restored Whisk's full-time equivalent headcount by June 30th? Here are my concerns. First, the PPP was designed with 2 misconceptions. 1, that across the country, we would all be back to business as normal come end of June. And 2, that small businesses would still be in operation, though perhaps at reduced levels, and so would actually find payroll monies helpful. Second, PPP runs against the CARES Act, which added the $600 weekly bonus for all UI recipients. The PPP demands that we keep old or new staff on payroll, but for Whisk, staff can now earn more on UI than in their $17 an hour job. Staff will be reticent to come back to Whisk for reduced pay and in the face of uncertainty, in that if we are not fully operational come end of June, they will be facing furlough again. Third, the program does not enough to consider the overwhelming commercial rent reality that those of us in New York City live with. Last, the Family First Act allowed for up to 2 weeks of emergency paid sick leave time for employees, with that pay allowed to be used as an offset against payroll tax liabilities. On March 20th, the Treasury issued guidance that small businesses could immediately begin to take advantage of this provision, and I applied it. But then the Treasury later declared that the act was in effect only as of April 1, a full 10 days later. We all know that New York City is not close to meeting either the governor's or the mayor's indicators for reopening the economy. Given this, my immediate recommendations include: 1, extend the timing on PPP loan forgiveness until the end of 2020. 2, with respect to commercial rents, loosen the 75-25% split. 3, ensure that 2021 UI premiums on businesses do not reflect all the furloughs we have been forced to make. 2 weeks ago, I had to pay over $4,000 to New York State for quarterly UI because just one staff person had been on UI in 2019. While the CARES Act provides vague language to ensure that employers are not hit with premiums for COVID-19 furloughs, the Department of Labor has told me they believe this only extends to the $600 weekly bump provided by the CARES Act. We absolutely need to ensure that in 2021, all of us businesses still alive will not be saddled with ridiculously high premiums. 4th, demand that the Treasury issue clear guidance on how the FTE headcount will be measured and whether one payroll period at the end of the loan period will be sufficient to measure that test. We need this answer this week. 5, ensure that all emergency paid sick leave time granted in March is allowed to be applied as a credit against IRS payroll tax payments. 6, do not use banks as lenders for future loan or grant programs. And then, once we are open, let's ensure that there is federal funding for local agencies like the Small Business Services Department of New York City and Chambers of Commerce to allocate a steady supply of basic surgical masks, latex gloves, and hand sanitizer to all small businesses, as well as disinfecting cleaning services to regularly clean our stores. Create a small business retail team to make practical and helpful recommendations for in-store merchandising and point-of-sale setup that helps create appropriate in-store shopping experiences. And last, promote local. If anything is more clear now than ever, online selling is a vastly more inefficient and expensive way to get products to the consumer. We need to keep people shopping local. Thank you.
Thank you. And next we have Carlos Suarez.
Good morning. Thank you so much for giving small business an opportunity to share our realities with you. Thank you specifically to my state senator, Brad Hoylman, for the invitation to speak. I'm here to share the story of New York restaurants and to ask for your support. My name is Carlos Suarez. I started my restaurant business in 2006 and today own and operate 4 restaurants in Greenwich Village, ranging from a 50-seat pizzeria called Rowi's to a 120-seat Italian restaurant with a rooftop garden called Rosemary's. We have a 5th location in construction that was slated to open in May and would have taken our employee count into the 300s. Faced with a 90% decline in business, on March 15th, we laid off 204 employees. We continued for a few weeks offering delivery, but suspended all operations on March 25th when we felt it was no longer safe to continue. We are now working to reopen our restaurants safely for delivery and takeaway and look forward to reopening to diners when it is safe and economically sensible to do so. I'm working with fellow restaurant owners and health and safety experts on a campaign to align independent restaurants on a common set of health and safety standards that inspires confidence in our industry on the part of our employees and our guests. I would characterize the federal government's response to COVID-19 from our perspective with 3 words: chaotic, flawed, and inadequate. Chaotic. I spent days compiling my 6 EID loan applications, submitted them in mid-March, and waited for weeks, only to be told that the SBA had scrapped their original application system and I was to resubmit applications through their new system. It is now May 13th, some 2 months later, and I have still not received a response from the SBA on 5 of the 6 applications. Despite receiving a call a month ago regarding one of the applications to say that the application was in fact approved, we have received $10,000 in express funds. What am I supposed to do with that? I'm still waiting to hear from the SBA. Flawed. Speaking specifically about 2 critical issues with PPP. Firstly, there's the forgiveness window. Our 8-week forgiveness window for our PPP funding is expiring in 4 weeks. at which point our restaurants will still be closed to diners, and we will only just have opened for delivery, employing about 10% of our former staff. The forgiveness window needs to be expanded to 24 weeks or greater, as is currently proposed. Otherwise, the federal government is simply asking businesses like ours to dig an even deeper hole of debt from which most cannot possibly recover. Secondly, there's the repayment term. A 2-year repayment term for a loan of this magnitude is fiscal suicide, putting aside the fact that for 12 of the 24-month term, we may be forced to operate at reduced capacities. And finally, inadequate. There are two primary issues for us. The federal government has failed to address the fact that the insurance industry is not covering COVID closures under business interruption insurance. What good is BI insurance if it can't be relied upon during a government-mandated closure? Secondly, the road to recovery. We are currently faced with over $1 million in short-term payables from AP to rent, and based on our latest guidance, are forecasting a 60% sales decline for the next 12 months, which for us translates into another $500,000 to $1 million in operating losses. Even if the PPP forgiveness window is expanded and the term is extended, we will clearly not have enough capital to sustain ourselves. 2 months ago, on March 13th, we had a thriving business, feeding 5,000 diners a week, employing 250 people, and on the cusp of exciting growth. Much as I did back in 2006 when I bootstrapped my way into business, we will do everything we can to rebuild our business. But our grit may not be enough, and the consequences for the chaotic, flawed, and inadequate federal response will be tragic for cities, communities, and families. We continue to look to our government to lead us through this.
Thank you. Those really were wonderful testimonies, and we will take those into consideration. I would also like to add, we are joined by Senator Brooks also. I'm going to pass the first question to Senator Liz Krueger to ask from our panel.
Thank you. It's nice to see all my colleagues, even if we're all in tiny little boxes. And I like all the beards on all the men that I haven't seen in a while. So for the four of you who just testified, I think there was general agreement from 3 out of the 4 that the federal process for applying for loan funds didn't make sense, didn't work, or doesn't match your business model to be that useful. But I'm curious, you were all in business, you all had different kinds of insurance. Did any of you find that any of the insurance that you've been paying for over the years has been actually helpful to you now that you found yourself in crisis?
No, as Mr. Suarez said, BI insurance has basically been useless for us as well.
That is the same for WISC. I've submitted a claim and I received a call from somebody who checks the claims, and he said it's all good and well that we've processed this claim, but he has little hope that anything will come of it.
So going back to, I think at least 3 out of the 4 of you talked about applying for the federal PT funds. When you did get them, did you get an explanation from the bank you went through as to why you weren't getting them, or anything sort of as you move forward of maybe it's coming soon, or just a black hole? What was your experience?
Well, I could speak to the first round when I failed to get a loan. I have a very good relationship with my banking manager. Everything was in order prior to April 3rd when the SBA initially opened the program. I had everything organized and it was submitted less than 24 hours. I was told for the next almost 2 weeks, don't worry, you're going to get it. Everything's in order. As monies were very clearly running out, it was well documented in the media. I said to my banker, I don't understand what's going on. I still haven't heard anything. He then told me that other people who had submitted their loan application after WISC had received their monies. This was a first come, first serve program. So I felt very shocked that there were other people getting their loans afterwards. There were no red flags, nothing. I was just placated the entire time. And to be honest, after I found out that the monies had run out, I was very upset. So I spoke with the boss of my banking manager, and then her boss, and then her boss at HSBC. And I have no idea if that made a difference at all, but certainly in the second round, I got the loan. But it took a lot of effort and a lot of pandering to get there.
Yeah, just to follow up on that, I mentioned in my testimony that we had a consulting outsourced financial company that was helping us through this process, which made it incredibly, Gardner and Caprelli, as I mentioned, they made it so much easier for us because they were there by our side. They were helping to prepare all the applications. A lot of my work was just signing on the dotted line because I trusted them. They do all of our books and things like that, so they knew us inside and out, and they were following it closely for all of their clients. But I think putting myself in the perspective, I'm also an owner in a restaurant called Exo Taco in Syracuse, and putting myself in the perspective of smaller businesses that either don't have that financial support or don't have that partner, it would be overwhelming to try to keep up with all of the changes that were happening, the pandering, to your point, just going and speaking. We have a good relationship with our bank as well, but everyone is trying to get the same money. So I think that trying to put myself in a different shoes to some of my peers, unbelievably frustrating for a lot of the folks that I talked to trying to get through this process. We were very fortunate. We got PPP in the very first round. We got EIDL relatively quickly. There wasn't a lot of communication in between when we applied and got it, to be honest. That was kind of frustrating, but I'm very grateful that we did get it because, like I said, it helped save jobs. But if it weren't for, a financial partner, it would have been nearly impossible trying to run a company and do this.
I just have about 30 seconds left. So in round 2 of the federal funds, they've expanded it beyond banks for sort of fintech type companies to also be able to make the loans, places like PayPal to make these loans and other online. I'm wondering whether any of the 4 of you who just testified have looked into that model, and does anyone think that's going to help or hurt in round 2? It's okay. None of you can have experience with it. It's okay.
I have not had experience with that, but I know here in New York City that the hope is that the CDFIs that now have that special allocation will somehow be able to make more generous loans. But I ended up sticking with HSBC because I think the fear was that to switch out and go with a lender who I didn't know, it seemed too big of a risk.
Right. And you're bringing up, yes, there's a separate pot of money for CDFIs, although it's not that large a pot of money. Supposedly work with the business universe that they are best familiar with. Thank you, Madam Chair.
Thank you, Senator Krueger. I also want to mention that we're joined by Senator Jackson. And with that, I'd like to pass the baton to Assemblyman Sturpey to go ahead and have their questions.
Okay. I think I'm going to start off here, and I'd like to ask Jeff a couple of questions. I mean, you talked in your recommendations about enforcing reimbursement to agents that help businesses navigate the programs. Can you explain a little bit what that is all about and what kind of reimbursement would they get?
Sure. So from my understanding, the way that the law was written is that financial agents that help small businesses navigate through this process were supposed to be reimbursed by the financial institutions that receive these loans. I believe from my understanding, which is limited, that the language was intended to be that, but it could be misinterpreted. And I think that some financial institutions, some of the larger ones that maybe don't have as vested interest in their communities, are putting the cost structure back onto the financial advisors, saying, hey, we're not going to reimburse you for all the time spent. I mean, like I said, at 2:00 in the morning, I was submitting the PPP application alongside of someone at Gardner and Caprelli who had a kid and was woken up anyway. So we were very fortunate to have them. And like I said, the cost of their service and hours were supposed to be fallen upon the banking institutions that got these loans, that disperse the loans. And if they don't reimburse them for that, either the financial agents will be out of luck, and all that time that they invested in helping small businesses will get not compensated, which I don't think is fair, or it's going to fall on the small business folks to reimburse them, which again was not part of the law. So that's where I'm urging to reconsider how to reinforce that.
Okay. Also, you talked about creating special considerations for startups relying on fundraising, et cetera. Can you go into that a little bit, how that would work?
Yeah. So from, my peers that have, raised capital through venture capital and other means, obviously right now everyone is struggling due to COVID-19. And so some of these venture capital firms, I have a company that I've personally invested in, and about $1.5 million vaporized within a week because a lot of the commitments that were made by angel investors and some other folks just went away. So those commitments can't be done. So I think because they're startups, they have different models in terms of employees, in terms of space. They're on burn rates, right? They're not like a traditional business that's relying on cash flow and things, and they're trying to scale quickly. So I'm not sure of what the way that the programs could work, but I just want to be thoughtful around these startups that have a lot of potential to grow, have a lot of potential to hire more full-time employees and gain net new jobs to New York State. And giving them special consideration around the loan terms for their specific business needs.
Okay. And finally, Syracuse is not a big place, and most of the players there, and friends of yours who have other businesses. And how would you, what would you estimate the number of people that were able to get PPP or EIDL? Was it the majority, just a few? How did it end up?
I would say the majority of the folks that I specifically spoke with got their PPP either in round 1 or round 2. So the majority of the folks that I talked to from a business owner standpoint got the PPP. The EIDL was a major different story. I think the process to one of the testimonies, I think it was Mr. Stark that said that was a completely different process, even for us. And many business owners didn't know much about that one. They didn't know about the emergency injury disaster loan. And so I think they were uninformed because I think the communication wasn't the best. I also think that it was a harder process. I will say that we were one of the first people in line for EIDL, and we didn't hear anything for weeks on it, and we didn't know even who to talk to. We tried to talk to our SBA representatives and things, but they were also kind of clueless. So I think that the PPP was funded well, either in first round or second round for my colleagues. EIDL was definitely a different story.
Okay, thanks. Back to you, Senator.
Thank you. So in your individual cases, are there specific improvements for your industry that can be implemented either on a state or federal level to better assist you in your particular type of business when it comes to assisting during this difficult time?
Well, I would reiterate that this program, the main program that we're talking about here, PPP, is designed for businesses that are still kind of open, right? It's not designed for the businesses that are actually not allowed to be open or that are open at such a small level of what they previously were. So I think what all of us who are in that situation, and that cuts across retail, it cuts across restaurant, bars, hospitality, what we are demanding is that the states work with the federal government to say, we've got to amend how this loan program works. If we can make the amendments to extend the forgiveness period, so it's not just 8 weeks, if we can get a clear answer as to how you establish the full-time equivalent headcount, which is now part of the requirement, that only come on the last payroll of the very end of the program. There's still how much money is still left in the pocket? Maybe 80 billion, 90 billion. Maybe some restaurants and other retailers who never applied because they thought it would never work for them because they're not open, maybe they still could take advantage of these remaining funds. But we need to know that that flexibility is in place.
Additionally, I would add the term of the PPP loans needs to be extended 2 years. As I said, is fiscal suicide. Our PPP loans equate to about 10% of sales, and we expect the next 12 months to be 60% down year over year, leaving us 12 months to repay a loan that equates to 10% of previous sales levels. It's just not possible. So we're not going to go into debt, if we can't repay this thing. So the term clearly needs to be expanded, 5 years or 10 years.
Yeah, I agree with that completely. And for us, our reliance as a service-based industry, with marketing services, we rely so heavily on the success of other industries, businesses, restaurants, retail. And so I think being able to help as many people as possible through this, that's really what we're looking for, because our business is so reliant on them.
And can I just add that part of the reason why I say this 8-week period, which is now written into the PPP loan forgiveness portion, is not acceptable is that even if we are opening as a retailer, right? Even if I'm opening sometime in June, maybe July, I will not be open at full capacity. I will be social distancing. I will be limiting the number of customers in the store. I will have a reduced staff, perhaps. All of these questions around which support the notion that it simply isn't workable under this quick, tight timeline.
I agree that the 8 weeks is a tight window. It actually works for us because we have everybody working, but it's still very tight to hit it if you do want forgiveness on the loan.
Great, thank you. Back to you, Assemblyman Stokes.
Thanks. Assemblyman Victor Pichardo, you're up next.
Good morning, everybody, and to the small businesses for joining us in this panel this morning, as well as my colleagues. It's good to see many of you guys trying to get back into regular order. So my question is to Ms. Amat. I have a question specifically around commercial rent. In terms of the issues that we're dealing with in right now in terms of COVID-19, what kind of arrangements have you made with the owner of the building in terms of dealing with the rent? You mentioned something about a 75-25 split. I didn't quite catch what that meant, but also, is there any other suggestions that you could make in terms of helping particularly small businesses deal with the commercial rent properties? And keep in mind, I have a lot of small businesses in my district, particularly around bodegas. So could you explain that a little bit more? I just sort of missed that part. And what other suggestions do you have in terms of dealing with commercial rent properties and those types?
Sure. Thanks for asking that really important question. So I hope that every member of the State Assembly and every member of the State Senate fully reads the PPP loan program, just so that we can all understand all these nuanced details, which are so important to get right. The loan, because of the way that it was funded, the Treasury has said it has to be at least 75% of your loan has to be spent on payroll. That leaves 25% for either rent, mortgage interest, or utility payments. So that's the 75-25% split. But of course, in New York City, we know that, especially if we're not open or we're barely open, that level of split just doesn't work here. So for example, under my loan, the allocation 75-25 means that I have less than 1 month of rent to be able to be covered under this loan. However, I went to my landlady, who's been extremely easy to talk with, and she gave me a discount on May's rent. So that makes a big difference for me. I cannot speak for all the other retailers out there who do not have that good fortune. I'm sure all of you on the panel are so aware of the urgency here in New York City to ask that not only is the eviction moratorium, which I know has been delayed or extended, not only that happens, but that there's actually a real look at rent relief, because way too many businesses will be suffering and dying if they continue to pay even discounted rent. Even discounted rent is not matching my sales. So there's still a big disjuncture there.
And then also, you recommended that it would be extended, the PPE program extended until the end of this year. But I also saw some of the other panelists and witnesses today mentioning the end of 2 years. Do you,
I
what,
think
what would be the best?
Is I'm talking specifically about the loan forgiveness time period, whereas I think the other gentlemen were speaking about if you were to return it as a loan at the 1%, you want to have an extended loan term period. But for forgiveness, the 8-week period does not work. And I will say that the only reason why I took a PPP loan is because of its forgiveness factor.
Understood. Thank you so very much. Thank you, Mr. Chairman.
Senator?
I'm going to ask Senator Carlucci to ask the next question from the panel. Senator Carlucci? Is he muted or is he?
Yeah, no.
I think, okay, there we go. Can you hear me?
Yes.
All right. Well, good afternoon and thank you. In my district alone here in the Hudson Valley, stores are losing over $1 billion in sales. So we know that stores are closing, livelihoods are being crushed, and employees are losing their jobs. And what does the federal government do? What we've heard from our panelists today, not very much for New Yorkers. Our economy, as many of us know, is completely dependent on our small businesses. 98% of the businesses in our state are fewer than 100 employees. More than a third of them are less than 5 years old, meaning that there's little money in the bank to help keep them afloat during this really hard time. And the PPP was created, but then New York got shortchanged. Only 6% of PPP available came to New York. And much of that money was siphoned off to large publicly traded corporations. Now there's a new round of funding through the PPP, and still there's very little guidance. So, you know, forgive me, and I know my colleagues share this frustration, but we're not going to sit idly by and wait for the federal government. We have to take action, and that's really why we're here today. So first, I have a few questions, and as Natasha mentioned, when small businesses close temporarily and employees are laid off, something called the experience rating suffers, which means that hikes to their unemployment insurance rates would be incurred. Do any of our panelists have any idea what they expect these rates to be in the future?
I don't know an exact, but if I furloughed 6 people, I'm very concerned because so I opened up this location of Whisk in 2018. My rating at that time was, I think, 3.625%. Then in 2019, I had one full-time staff person who I was forced to let go, and he went on UI. My first quarter payment, which I had to pay 2 weeks ago, amidst all of this, right? There was no, I was not allowed to delay this payment. I would face penalties. So I had to make the payment of over $4,000, which for a small business shop, barely open, is very meaningful. That was the amount I paid because one person had been on UI. So adjusted for my experience rating of 3.6, it was a huge amount of money. So to think about 6 people now being furloughed, I mean, it stands to reason that it could be well over $10,000 a quarter.
Yeah, I'll follow up that, Ms. Ma. I have not even thought about that, to be honest. And that's I think the point. The point here is there are so many pitfalls to this whole thing. We are losing revenue, like incredible amounts of revenue by the day. We are having to furlough our staff. We are having to make drastic decisions that no business owner wants to make. And on top of that, we have additional concerns that we're trying to, like, it's like plugging the dam every day, you know, of things and pitfalls that we have to keep in mind. So I don't know the exact number either, to be honest. We have folks that handle that in my establishment, but I will say that it's just another thing that this has really created, and that's why I think back to the point of all of us, if we can make this easier, more simple for people to understand, if we could have more forgiveness, if the amortization, if there is forgiveness or if there's not forgiveness in it, that can be longer. 8 weeks is a certainly tight time frame. All of those things need to be considered, so we can just go back to like operating our business and taking care of our people.
Well,
That's what we really need.
Yeah, I think you're absolutely right. And that's why I really appreciate Natasha bringing that up. And that's why we're having this hearing today, to really bring to light some of these things that really have not been brought out into the daylight. And something like the experience rating, that's something that we have control of here in New York State. And I've drafted legislation, and I'm hopeful that we can pass that this year to make sure that one of these unforeseen consequences of having an unemployment insurance rate premium increase is not on the backside, that we are not penalizing our small business owners for something that's really been beyond their control. So I really appreciate you bringing that up. The other question I wanted to bring forward is that in New York State, we've worked hard to delay taxes and make sure that mortgage payments are not needing to be paid on time if people are having problems. The concern I have is that when it does come time to pay these backdated payments, that there won't be the funds to pay it. And
I'm sorry, Senator, your time has expired.
Okay, well, thank you very much. Appreciate the answers.
Thank you. Assemblyman Sturpes.
Sure. Up next, member Marianne Buttonshaw.
Thank you for the opportunity. Thank you to the witnesses and my colleagues for hosting this hearing, as it is very valuable to hear from all of you. And some of my colleagues have asked the questions, and I understand the PPP struggles as well as insurance and your rent. And we will continue to work towards coming to a goal that could support you. In regards, I am the sub-chair of exports, and I know that one of you did speak in regards to attempting to move forward with more exports, whether it's a product or services. And I would just like to hear from you of what we could do to help you with that in regards to not only exports that would be international, but as well as exports out of the state of New York. Is that something that you're not even at the point of considering?
Yeah, based on my line of work and the service line of work, you know, we do some work in other states, but very little. So it's really not a concern to me.
I would agree.
Okay. And as far as the restaurants and small businesses, I know what you do best is plan and order to determine what you need to be successful. If you were to look at the needs for your PPE, and you open and you face the struggles of opening, could you identify what length of time you plan on determining how much PPE you will need for your staff? Is it 2 weeks, a month, 2 months, to ensure that you could remain open and not have to close due to the lack of having those supplies?
Well, we have, pretty large staffs being in the restaurant business, and these supplies are certainly vital. I'm hearing from colleagues who are operating their restaurants for delivery that accessing PPE currently is rather challenging. I know you might have heard of Dominique Ansel. They're getting their masks from their partners in Hong Kong because they can't access masks, whether it's through Amazon or other kind of domestic sources. So that's definitely a concern going forward. We're, like I said, just about to reopen for delivery. So we're just starting to source those materials now. I appreciate you bringing it up because I do sense it will be a problem specifically for the restaurant industry, given the number of people that we employ, the proximity with which we work, and the kind of conditions that we work in that will require us changing out masks and gloves on a very frequent basis. The group that I mentioned earlier, working with other colleagues in the industry to establish a common set of standards. One of our additional goals is to pool our purchasing power to access PPE for the restaurant industry, so that other operators have the supplies they need to ensure that their employees are safe. The worst thing that can happen here is that we're so starved of cash that we go back to work and endanger the lives of our employees. So I think it's a great question, and would love support on it.
Yeah, I would echo that as well. It's critical, and I think that once we do start to see the reopening of the economy, we're probably going to see surges in sales, or at least the demand for sales of certain PPE. And I will tell you that I have spent inordinate amount of hours trying to buy hand sanitizer, latex gloves, and basic surgical masks. I've bought cotton cloth masks for everybody who does come to work to pack up the orders that we're doing. And it's exhausting. I mean, just that part of the business on top of everything else is just, I'm living on barely any sleep. I did make in my recommendations a suggestion that federal funding should be allocated to agencies that are really good, at least here in New York City, for talking and knowing who to connect with on the small business front. So SBS here in New York City, the chambers are terrific. If they had the funding, I think they could work then with groups like the New York City Hospitality Alliance for restaurants and bars, and then retailers to provide these kinds of basic pieces of equipment, so that we're not competing against each other, so they're not running around trying to get a taxi to even load all these pieces of equipment in. So I think federal funding for that kind of support and anticipating it so we don't run out is critical.
Thank you. I know I've exceeded my time.
The Senator.
Next question comes from Senator Kennedy.
You, Chairwoman Kaplan, and thank you to the panelists for your great testimony today. I know we have many other panelists to go, but this has already been extremely enlightening, and to hear what's happening on the ground in the community by your respective businesses is so important for all of us. So thank you very much. I just want to recognize all of those leaders that have really been out in the community on the front lines, those frontline essential workers that have helped to keep our communities across the state of New York functioning during this very difficult time. My hat is off to them, and all of course the heroes on the front lines that are doing such incredible work saving lives. So each of you has touched on very important aspects of your respective businesses, and obviously Bob Stark, you're in a different place than Natasha and Carlos are, and Jeff out in Syracuse. We're looking forward to welcoming you here to Buffalo as well with your expanding business. A lot of the economic challenges that you are discussing here today, we are hearing about every single day, among other issues, including the unemployment debacle that we're all dealing with. Could you specifically touch on and this is open to any of the panelists, any challenges that you foresee that you believe will be the largest challenge for your business as we move to reopen the state, whether it is the safety measures your employees will have to deal with, as Natasha you just touched on, or potentially the pipeline of supplies that we will all have to be paying attention to as well?
I'll say just to follow up on the last point that was made, PPE for us, we are so fortunate to be in a place where our business runs completely remotely without skipping a beat. We're very, very fortunate. I do not take that for granted. And so we don't anticipate going back to a physical office until by minimum July 1st, but potentially the fall or even 2021. I mean, we've had discussions about that just to keep our employees safe. And really, we don't necessarily need to. We love the camaraderie, we miss our people, but at the end of the day, so that won't be a huge challenge for us. When we do go back, we'll have all the safety precautions. But for us, our major barrier to success and growth, because we still project a growth year this year. The biggest barrier to that growth would be reopening the economy and allowing other businesses and in all industries to be able to get back to work safely. Without commerce, without revenue for some of these other businesses that are our clients, they have no ability or need to advertise. And so for us, being able to tell their stories, being able to market to their consumers to help grow their businesses, without getting back to work, we're also not going to be able to thrive. So that would be my biggest challenge.
Yeah, I agree with that totally. We're really in the same types of businesses, I think, Jeff, providing services, but we're providing services to a lot of these businesses that are no longer open. I do not see when the economy does open back up, our employees coming back immediately as well. A lot of that has to do with, we have a lot of employees with families, and the schools are closed and they're home with their families. And again, we're very lucky with the way that we work and the technology that we have to be able to accommodate that. So we don't anticipate immediately bringing people back when things open up. So that does give us some flexibility to sort of wait and see what happens.
I would just say that, to be very frank, it's money. For any business that's a service provider in the sense of in-store, in the experience, whether that's through food or through products they want to buy, we need to know that we have the cash flow, because I don't know how much longer I'll have a discounted rent for. We are doing some internet sales, but here's the reality. I have learned, and I'm not going to go on about this because I could, and I won't, but I have really learned in the last month that for every order we ship out, it is so costly on the business. It takes so much more time. There's inevitably problems with shipping with USPS or FedEx. And the nature of the business has fundamentally become so much more inefficient and expensive. So for as long as I am having to do that type of business, I can't keep on the same level of staff because I can't afford it and I can't pay the rent.
I'd like to get one last question in here about the business interruption insurance, because I recognize each and every one of you has touched on this. And those business interruption insurance policies that have been silent on this, there's actually a bill that the Senate is pushing forward, carried by Senator Gounardes, that would actually rectify this for those companies that are silent on this issue. And we've sent a message to the governor requesting that he look into potentially rectifying this. So that's something that's very much on our radar as well. But thank you all again for your efforts and your testimony.
Thank you. Assemblyman Starkey.
Thanks. Next, we have member Rodney's Bishop. You're up. Are you there?
I'm here.
Okay.
Waiting to be unmuted. Thank you, Assemblyman Sturpey. Thank you, Senator Kaplan, and thank you all my colleagues for having this hearing today. It's quite important that we listen to our small businesses because they are the ones who are hurting, but as they hurt, we hurt. Small businesses are our lifeblood of entrepreneurship in our country. They provide services of vital need to our diverse community, and we must make sure that they survive and they continue to be vibrant. In my community, more than 50% of people are hired by small businesses, and I chair the subcommittee of the Minority and Women Business Enterprise. And very often we're talking about obstacles on top of obstacles, and certainly during this pandemic, it's very difficult, very difficult. So hearing your testimonies is essential because we need to take actions as legislators on the state and city and as well as the federal. So this is very helpful. It was very helpful to hear about the different perspectives on the PPP. As you know, the vast majority of the people who got PPP were not small businesses, and they had to roll out another set of funds. And still, it's been difficult. My question to all of you, and some of you have different business models, the ones with the brick and mortar, obviously I've heard there was some issues on supply chain. The supplies, the warehousing, the manufacturing, and the transportation. I wanted to get a sense of how you're able to operate if each part of those chain are being impacted. I'm hearing that, transportation is very difficult. We know rent is hard, the warehousing is hard. Do we have workers actually supplying, producing, and manufacturing the products? So I would like to know a little bit about that. And I would also need to understand, are any of you working with the government? And if you are, that's also an expertise in my area in terms of how is government reacting to the procurement process and working with you all. So please take the stand. I guess Natasha, or you can answer.
Sure. Well, I can't speak to procurement and working with government because that's not something we do. But certainly I can speak to the fact that there are many popular kitchenware items right now, right? I sell kitchenware and everybody's staying at home a lot more. People are discovering cooking, which in theory is a wonderful thing. It is really hard to sometimes meet demand. I have heard, but I have absolutely no proof that some of the large online retailers have been hoarding goods and products. So it's sometimes taking me a lot longer to get some of these basic items that I would like to sell as well online. Certainly on a transportation front, I would say that we are encountering an enormous number of problems with USPS and FedEx deliveries. We do not currently work with UPS to service our deliveries. And it's gotten so bad that yesterday I'm a huge exerciser. And yesterday I power walked 6 miles downtown Brooklyn, delivering orders to customers that requested it to ship because I'm fearful of the amount of time I will be spending in having to fix problems, figure out where orders are at. And so I'd rather relieve that where I can, where it's possible. So those are kind of my cluster of issues with respect to that.
We do quite a bit of work with, the Dormitory Authority, the Construction Fund. We don't have a lot going on right now in the pipeline with them, but we do work with, the City of Buffalo, some municipalities. Things have definitely slowed down a lot, working with government, because of obviously the conditions that they're put under in their workplace. Frankly, I've found that our work in the private sector has been moving better and more smoothly, just because they seem to have more flexibility and can control their own destiny a little bit more.
Okay, thanks, Rodney. Senator?
I'm going to ask Senator Ort to ask his questions next.
Thank you, Senator Kaplan. And thank you to the presenters who have gone thus far and to my colleagues who are here. So from what I've heard from all the different colleagues or from the presenters is that while there certainly is areas that can be improved upon or changes that can be made in a future round of federal legislation, the truth is the PPP, while not perfect, has kept a lot of folks afloat. I mean, that's just the reality of what I'm hearing. I don't think anyone believes that the calamity or the economic conditions would be better without the PPP. In fact, it seems like maybe we need a more robust or some fine tuning of the PPP. But certainly it seems like the PPP was a positive step. I do think timing was, from all the federal officials I've spoken to, both in Congress and at higher levels, the focus was just getting the money out the door. And I know there were 2 different rounds, and but it seems like that has been a benefit. I guess my question or a point that I would like to say is everyone on this call, I haven't seen Speaker Pelosi or Senator McConnell or Senator Schumer on the call. Everyone on this call is at the state level and is at a state legislative level. And so while there needs to be improvements made, I would like to maybe hear what can the state do to help small businesses? Because at some point, whatever the future funding is, my suspicion is it's not going to be enough. It's not going to be total and complete. And there's going to be a role that we as state lawmakers, who are all elected, need to do. There are things that we're going to need to do, whether it's regulatory reform, whether it's lowering costs for your businesses to operate in New York going forward. I just can't believe that there's 213 lawmakers here that can't do anything. So I'm hoping that while we're focusing on the federal level, that leads to action at the state level, because we're going to have a role to play here and a job to do. And I don't think we can just pass that off to the federal government completely. And so I guess I'd be curious to hear from any of the presenters what we as state lawmakers in the state of New York can do both in the short term and in the long term to make it more affordable and to make it better for your businesses to be here, not just in relation to the pandemic, no doubt, but I think in the long term, as we reimagine or review the economy here in New York State for small businesses.
So I'll jump in and I'll say, I think there's 5 things. One, the UI issue, which we already touched on. That's something that New York State can work on and advocate for. And I really think we need to get that clarified immediately, how the experience rating will be affected. 2, rents. New York State can definitely consider the options for both commercial tenants and landlords. And this may inevitably hit back to the banks. And I understand at that point, it may or may not be just a state decision, but there's certainly a lot of room there for the state to act. Senator Gianaris has a bill. That is something that the state needs to look at seriously, because for businesses that cannot be open, what are we supposed to do to protect our space? And WISC is, operating again at a modicum of what it used to be, but at some point I will not be able to afford my full rent. 3rd, payroll taxes. If there's anything we can do to affect what we pay in at the New York State level. And I'm not a huge fan of just saying defer payments, because at some point you're on the hook for that. And if you're not reaching sales now, you're never going to be able to catch up. But let's look at something around payroll taxes. And then 4th, you are advocates. So even though it's not about policy, your role in advocacy to the federal government and with city governments is critical. So never walk away from that advocacy role. It's critical. And then finally, I think, one of the points I touched on at the end of my testimony is about promoting local. As a state government, what we should be doing in thinking ahead to the future is everything we can do to ensure that the likes of Amazon and Walmarts and Targets do not take over retail. It is environmentally dangerous. It is so costly and intensive. So whatever kind of package of support that comes out, think about that at a state level. How do we promote local? How do we keep people shopping in their community? I think there's a huge opportunity there to get that dynamic of shopping done better than how it has been.
Anyone else?
As Mike crushed that. I don't really have anything else to add. That was exactly on point. I mean, really. So that was those outline points for me were the major things, especially the last 2. Advocacy to be our voice, right? We're doing this for a reason. We're sharing our time for a reason and are sharing our thoughts for a reason with you, because we want you to advocate for us to the federal government and understand what our concerns are. So yeah.
Okay, the time for that question has passed.
So I want to thank you again for being here and answering these questions. And that's exactly what we're trying to do, to find solutions going forward that we all have to do our part. to help all of the small businesses, whether it's local level, whether it's county, state, or federal government. We all have to work together. With that, I pass it on to Assemblyman Sturpes.
Thank you. Next up, Member Ed Bra.
Thank you, Chair Sturpey. Thank you to all our panelists for being here. I just wanted to ask kind of a specific, really industry-related question. I was happy to hear those previous answers, though. I think it's very important that in addition to advocacy with our federal representatives, we do talk about today state issues and things we can do to help our businesses in New York State. But I wanted to particularly ask Mr. Stark a question. Because one of the things that our conference has put out a plan called Jumpstart New York, and one of the things we talked about was how we might be able to provide some regulatory relief. And one of the conversations we talked about, and I know a lot of this relates to our local governments, and we need to partner with them just as we need to at the federal level. But what initiatives might be able to be undertaken at the state level, and again, partnering with our local representatives to enable the type of projects that your firm might be working on to move forward quickly and get people back to work as the economy is reopening.
Well, I think there's been a lot of talk for the last number of years about infrastructure improvement, but I think that generally starts at the federal level, and of course trickles down to the state. And at least in my experience, we haven't really seen that happen. So it's all about getting the money flowing for projects, and keeping people working. It's really that simple, I think.
Anything further though in terms of permitting and those type of processes that may need to be looked at?
Generally speaking, we don't have a problem with permitting and things like that. Generally, the government officials that we work with are very professional. So I think it's more a matter of funding than anything. I mean, everybody could always streamline paperwork but these are public officials doing their jobs, and it's hard to be critical on a basis of specific things of what they do. But generally they're doing a good job. At least I've found over the last 10 or 15 years that the permitting process. I mean, we have to deal with codes, and the codes are changing for a lot of reasons. Energy efficiency, the environment, things like that. But do they make things easier to do? Well, maybe not, but it's hard to be critical of them.
And then in my remaining time, I wanted to just go back to the conversation previously about our state role, in particular promoting local, which I think is going to be a very important thing for all of us, not just to promote the businesses, but to make sure as we're reopening that our constituents are aware of the impact that has. It has a great impact on the business, their employees, but certainly on our local sales tax, which our counties are struggling with now as well. One of the things that I think might be something to look at is, we've spent money on different state level programs and promoting them, but partnering with, whether it's all the way down to the local chamber or regionally, to promote those local businesses. So I know Ms. Ahmed, I apologize if I pronounced that wrong, but you talked about your local, chambers. Do you think that's something that would go down to the local chamber level? How might something like that be facilitated to promote those local businesses?
Yeah, I mean, definitely the chambers, in the Brooklyn Chamber and the Manhattan Chamber, they're both wonderful partners for me. They are led by wonderful people who care so much about the state of community. But I think with some more funding, there could be a really strong campaign that encourages people to shop local when things are safe to do so. I think what we don't want to see come out of this is that people have developed a greater armchair reliance on shopping, on consumerism, and that they feel comfortable to go out. So I think also involves part of that campaign perhaps could be where we connect the PPE equipment, so the actual, setup in the stores, how staff present to the public. Do people feel like they look at a store like Whisk and say, oh, they're clearly set up to allow it not to be too crowded. They're clearly wearing appropriate wear, whether it be a surgical mask, gloves. So I think we could combine both of those parts, because I think that outward facing perspective that the customer will have is going to be so important to ensuring that people want to stay local. I don't know if this is at the state level, but I would just also add that I think anything around the current discussions with monopolies and the anti-monopoly movement, I know that's happening at a federal level. I don't know if it's happening at a state level. I think that's critical also to be looking at.
Thank you.
Okay, Senator.
Next series of questions come from Senator Hoylman.
Thank you, Chair Kaplan, for your leadership and my Senate and Assembly colleagues. Yes, I couldn't agree more when it was said that the federal response has been chaotic, flawed, and inadequate. Of course, that began with the response to the public health crisis, the lack of testing, the inability to plan for contact tracing has led us into this economic crisis. And the fiscal response from Washington has been subpar, to say the least. When you have members of the Senate saying that blue states should be bankrupt like ours, and states like Alaska receiving $3.4 million in federal aid per positive COVID test, while New York receives just about $24,000. It's an outrage, and I join all my colleagues in raising our voices and advocating to our federal representatives. And if we're Republican or Democrat, we should be uniting behind our governor's efforts to get more federal aid for our small businesses. I'm very distraught by the descriptions painted today by our small business owners. It's an incredibly grim one. We're looking at a small business apocalypse, really, in my district, and I think in all members' districts, unless we change the loan program standards for our small businesses. I think that's what it comes down to. And Carlos, you said that the repayment terms are essentially fiscal suicide. Could you discuss a little more why and how that's an impossibility for you and your fellow restaurateurs to take advantage of those loans? And secondly, what does the restaurant industry look like after COVID has passed at this point?
Sure. Thanks, Senator Hoylman. We're sitting on as much as $2 million in PPP funds currently. The forgiveness window started 4 weeks ago and is closing in 4 weeks, at which point that $2 million grant becomes a loan if we choose to spend it. The repayment terms currently require that that $2 million is returned to the federal government over the next roughly 2 years. We forecast our business being down 60% the next 10 to 12 months. We had a thriving business before all of this, and even under those conditions, a $2 million loan repaid over 2 years would have placed, massive monthly pressure on the business to repay. There's absolutely no way that 12 months from now, we're going to be in a position to start to repay a $2 million loan. It's just not rational for us to start to spend the money. So that money will have to go back to the federal government and will have been useless.
And so, and you're a restaurant that has, a number of employees, the number of locations, you're probably better off than most of your fellow restaurateurs. Would that be true?
Yeah, I mean, I feel very fortunate to have a wonderful team who, are either working whether they're getting paid or not. So I have, resources both, as a team and as kind of network resources to navigate this crisis. And I definitely feel for those who are, recently into the business or just don't have the resources, whether they have a single restaurant or a small coffee shop, to navigate the complexity of the crisis. It's comprehensive in its complexity. As one of the speakers asked about, our rating, unemployment insurance ratings. Again, haven't even considered the impact there.
And how much personal liability are you on the hook for?
So we have 5 current leases. I would be on the hook for hundreds of thousands of dollars, probably $500,000 in personal liability under the current rules. So what would be very helpful is if businesses are forced to close due to COVID, that the personal guarantees associated with those leases are extinguished. Yeah, that would be tremendous.
Thank you very much, and thank you again, Chairwoman.
Okay, next up is member Tom Avenatti. Hi, Tom.
Let me get muted here. Okay. Good morning, Mr. Chairman. How are you?
I'm good, thanks.
And to all of you, I want to say good morning and thank you all for joining us. I think your presentations and responses were excellent, very informative. I think we could use some people like you in the state legislature. You're very articulate. So I want to thank you for really being helpful. Today, we're taking our first step in the legislature's examination of the impact of the federal response in protecting small businesses. Unfortunately, this health crisis has resulted in a financial crisis for our small businesses and our families. And we in the legislature need to do whatever we can to make sure that when we emerge from the health crisis, our small businesses and our families emerge from this financial crisis. But also, unfortunately, the crisis has overwhelmed the state and local governments. And only the federal government can print money, figuratively and literally. So we're looking to the federal government. We're looking for a federal response that helps all. I've heard that only some 5% of the small businesses in New York have received PPP loans, which is clearly not enough. And I'm very concerned about where we go from here. As chair of the Assembly Banks Committee, my role is to focus in on how the state and federally chartered banks in the state are assisting small businesses. Trying to see how they operated under the federal constraints and whether those constraints worked or were in the way, and what we can do as regulators in the state to make the experiences of small businesses better. So I'm going to put out there 3 questions and ask the 3 of you all to respond to the 3 questions in any way you'd like. First of all, what kinds of banks did you apply to? Were they state or federal? Did you shop around or use a bank with whom you have a relationship? And how did the banks respond? Did they respond satisfactorily? And if not, what can we do as state regulators to make your experience better? Secondly, are you able to access other sources of funding outside of what this program was? And thirdly, we've heard about your expenses. What's happened to your receivables? Thank you.
Well, I'd like to say we deal with a few banks that we have relationships with. And when we originally applied for the PPP, we were saying, okay, do we go to a big bank or do we go to a small bank? Who's going to be able to help us the most? And we decided to go with a smaller bank. We thought we would get more attention. and that worked out very well. We did get the attention that we needed, and we did get our loan right away. I have heard from some other people who have spoken here that they went with some larger banks, and perhaps they had so many clients and were so overwhelmed that made it difficult for them to process loans. So I think we made the right decision there. I forgot your second question.
Were you able to access other sources of funding, and what's happened to your receivables?
Well, we also applied for the SBA disaster assistance, and that was just a black hole. We haven't heard anything from that at all. As far as our receivables, we have a couple of projects in the pipeline that have been carrying us through, but that's going to dry up very quickly. So the PPP hopefully will get us over that hump. But otherwise, our receivables we anticipate will be down by perhaps as much as 50% unless the economy picks back up.
I'll just speak to the AR piece of it too, Assemblyman Avenatti. We anticipated going into this that exactly what Mr. Stark just said came true. Our receivables have slowed way down, and it also puts us in a tough place because we're a small business. Obviously, we're relying on the receivables from a cash flow perspective. PPP and EIDL are doing their jobs for us in terms of cash flow, but ultimately it makes it very hard to have conversations with our clients to say, hey, I know you're a little bit behind, I also know you're struggling. And on top of all that, there's a health crisis. So it's made the conversation very nuanced. We're trying to do our best, but we will also have very slow receivables for the foreseeable future and are doing our best to work with our partners to overcome that.
Here from me at WISC, yes, we went to a large bank. That is the bank we have a relationship with, HSBC. And I think we're all familiar now with the story that here in New York City, a lot of us, because there are very few local small banks, we all were forced to bank with the larger banks, and that was not to our help at the beginning. In terms of the communication with the bank, they were lovely, but the person in charge of communicating with me had no role to play in the loan processing. So that was where things went awry, because all he could say was, well, I'm not seeing any red flags, but he didn't actually have any knowledge of what was happening. So there was a lot of placating throughout the first round when I did not succeed in getting it. Did I access other funds? I have applied for EIDL, which I did get, which will then be deducted from my PPP loan for forgiveness. I mean the EIDL grant specifically, not the loan. I have applied for a series of small business grants. The US SBA came out with one. The site crashed. I was not able to access it. Facebook has launched small business grants. I applied. So far, I've heard nothing. And I've applied twice to Verizon, their partnership with LISC, a local funding agency. And so
I'm sorry, but the time is up for the question.
Okay, Senator Kaplan.
Thank you. The next series of questions go to Senator Sanders.
Thank you. Thank you, senators, and thank you, chairs. It's good that we are back doing these type of hearings. I want to, of course, encourage us in the future to make sure that we have representatives of women business organizations and people of color business organizations here. In regards to the PPP program, the IG, the Inspector General of the SBA, has put out a report last Friday saying that the SBA misapplied the CARES Act, that you, according to page 5 of that report, you guys could have had up to 10 years to pay this back, and that the 75-25% was not by law, but by their rules that they created in the IG in that report coming out last Friday, is saying that it's a detriment to business. This is not over yet. We're working on it. I have been working with the Congress's Banking Committee Chair of Financial Institutions, Greg Meeks, and we designed, or I helped design, PPP2 after the failure of PPP1, the gross failure. So PPP2, we believe, is better We don't have the information yet. It's not over yet. So we'll see soon enough. And at that point, I hope to do a hearing on the entire program on this. Senator Ort wanted to know what the state can do, and I think his is an excellent point. I am trying to design a program, a state PPP type program. Were I to design this program, what should be in it, what shouldn't be in it, and what should I look out for?
Senator Sanders, I would just also say that if, as you're talking to about a PPP2 to improve things, I think that's great. But I would also urge you to ensure that some of the loosening of regulations is also applied to those, like the four of us that are on the call, that those are loosened guidelines for us that have already received the PPP, because we as we've said many times, those regulations are very, they're restraining. And so I'm all for creating a new program, and I think it's a great idea. I just want to make sure those regulations are applied to us too, because 10 years is obviously better than 2. 75-25 is obviously better for folks like Carlos and Natasha. So.
Well, we certainly are looking at those things to see how can we backdate this, if you wish. How do we make sure that this is available to you? It's not over. It's a work in progress. Please.
I would also just say that, the very nature of PPP is think about what it's called, Paycheck Protection Program, right? So it's focused on the ability of a business to keep its staff employed.
Yes.
So maybe what we should be doing, not necessarily looking at a PPP2, but we should be looking at a new form of support that hits at the support that we're actually missing, which is support for rents, which is support for inventory flows, which is support for internet-related business marketing tools, things that are really not hit on in a paycheck protection program.
Yeah, I would second Natasha's point. That's great. For restaurants, of course, if it's required that guests are 6 feet apart, or we can only put 50% of our guests can fit back in our restaurants, we can only expect to have 50% of business we had previously. We can't employ the same level of people that we had previously. Yet we still have the same rent, yet we still have the same insurance, et cetera. So I agree with Natasha that an expansion beyond supporting payroll would be very, very helpful.
It's going to be difficult to do that. As you can imagine, the climate down in DC is where people are starting to talk about they're becoming fiscal conservatives, if you wish. It's going to be difficult to do these things, but I certainly will take it forward. Madam Chair, thank you very much.
Thank you.
Okay. Thanks. Next up, Member Harvey Epstein.
Hi, thank you. Thank you both to the Assembly and Senate Chair for having this hearing. I want to just take a few minutes just to kind of talk about what you're talking about the commercial spaces. And I'm wondering, obviously we have a budget crisis going on, and I understand the problems about rent. So there are a couple of options on the table. I wanted to hear what people thought about. One is allowing people to break those commercial leases, even if you have, let's say, 10 years left on your lease, allowing you to break those leases early. One is that would be helpful. Two is whether there's a forgiveness program in place, whether allowing the rent to be owed but not to be collected in the form of possessory judgment in housing court. It might be the debt might be still owed, but you wouldn't be able to collect it. Versus 3, obviously a big cost would be like canceling rent and getting a hardship fund set aside for the landlord. That's a tougher one. And 4 is whether we would do like a SCREE-like program, which we give the landlord a real estate tax abatement in lieu of waiving some commercial rents for the commercial tenant. And I'm wondering which of those or a combination of those might be useful for any of the small businesses on the panel.
For me, on the first and last point that you made, thinking about commercial real estate, being able to adjust our commitments and our contracts for leases would be helpful, primarily because Again, we may not go back to the office physically until June 2020 or until 2021, right? So we have 13,000 square feet of office space that's literally just sitting there and no one is utilizing. So I think that being able to either renegotiate those or opening up. The problem is, and I think Natasha mentioned this, we have a wonderful landlord. We have not asked for a discount at this point just because we do have a great relationship and we're in an okay place from a financial standpoint. But certainly, just obviously from an overhead standpoint, it's not good. So being able to renegotiate contract leases as well as you had mentioned potentially setting some dollars aside for landlords so that they can, or some kind of deferment to take up some of the commercial lease. I mean, that would be great, because again, it's heartbreaking. I went in the office for the first time in 2 weeks yesterday. No one's there. It's heartbreaking to see a big empty office. It's a cool space. Nobody's using it. So it's a bummer for sure.
I think the leases could be a big problem all the way around, because when this thing is all over, I don't know how many people are going to realize that they've adapted well to working remotely. And, people who are renting 13,000 square feet of space ultimately say, why do I need 13,000 square feet of space? I can easily function at the same capacity with 5,000 square feet of space. And I do worry a little bit that that's something that's going to happen across the whole country. And it could be a major issue for property owners.
I would agree that substantial support will be required for the real estate industry. From our perspective, there are two phases. There's the phase where our sales have gone to zero due to government mandated closure of our business. How are we supposed to, pay rent when our business is literally closed? And then we face this phase two, which is the government allows us, to reopen our business, but due to social distancing, business volumes are a fraction of what they were. And of course, our lease was negotiated, under conditions where we could occupy the full space. If we can't occupy the full space, how can we pay the full rent? So the real estate industry is definitely going to need a lot of support.
I would just add very quickly that for the retailers, if we are operating as internet businesses, we're still on the hook for retail rents, right? Often on Main Street, but we can't afford to pay those rents. So opening up the option to renegotiate leases across the board is going to be important. Absolutely. I do think that even businesses that are essential and that are operating, I do know some that are actually trying to get out of their lease. Often here in New York, there are good guy guarantees, but often those still require that the landlord's startup costs to provide that space be borne by the tenant when they break their lease, even under the terms of the good guy. And in one case, I know that would cost the tenant hundreds of thousands of dollars. So some option to renegotiate even the good guy guarantee is going to have to be looked at. And then I think a tax abatement for landlords is going to have to be part of the package.
All right.
Thank you. I don't have any more questions from any of the senators, but I'm going to pass it on. I understand there's more assembly members who have questions.
Yes, we have one left. Member Yulin New, you're up.
Hello. Just wanted to say thank you for all your time. I know it's been 2 hours, but I just wanted to also bring up the fact that, in my district, I represent Lower Manhattan, so a lot of folks probably know a little bit about what's been going on there. But Chinatown has been hit particularly hard due to the fact that there is two epidemics happening at the same time. One is, of course, the virus, and the other is racism and xenophobia. And a lot of the runway for our restaurants and our small businesses were actually burnt out by mid-February, when people were already starting to avoid the Asian communities all over the city. And I think that has been particularly devastating for a lot of the small businesses in my district. And I just kind of wanted to ask, for Carlos, who's in the restaurant industry, you probably know that when you mentioned that smaller restaurants have an even harder time, it was very telling that you knew also like what the small restaurants go through. And so I guess just kind of like help us to all be able to know what the runway looks like for brick and mortar businesses, what it's like to seat folks, what it's like to depend on turnover. And then also, I know that Ms. Amit also probably has some thoughts on switching over and how a business is able to have to look, I guess not even able to, but has to look towards a different kind of modernization in this time. But I know that the restaurant industries all over the city and all over the state are thinking that it may be an end to restaurants the way that we know it, and what that sounds like and what that feels like, and how that impacts our economy is something that I don't think anybody is prepared for. So would love to be able to kind of get your thoughts on that.
Sure. Just quickly then, we are a small business, but sure, a few years ago, there was only one restaurant, and it was me, a chef, some line staff. I couldn't imagine trying to navigate all the guidelines that you need to navigate at this stage to ensure the safety of your staff. So I really do feel there's a looming crisis, which will be that restaurants will reopen and the employees will be put at risk. So that's why I'm trying to work with others in our industry and health and safety experts to devise a single code or standards that are easily communicated to restaurant operators and PPE support, so that they have the supplies to provide to their staff, so that their staff are safe. So that's I think the primary concern, looking ahead. Secondly, there's fear on the part both of the staff and of guests. And unless as an industry or as a community, we come together and proactively kind of take on these challenges, that fear will linger, and guests will stay at home, cooking, ordering in, etc., and our restaurants will be empty. So there's a big, kind of leadership void that we're trying to fill by proactively pulling together, safety standards with the help of experts, and then putting out a positive message to our staff and to guests that it's safe to eat out when it is.
And we've seen like that a lot of folks are very worried that once if we are able to open again, and then there is a ramp up, that there's a risk of having to close back down again, and that's very scary for folks. And why is that, and what is the cost of that?
Yeah, as we saw in South Korea last weekend, that's a huge risk. It'll undermine confidence, for even longer in our industry, and it'll make the process of rebuilding these businesses and bringing people back to work that much longer and harder. I think it could be devastating.
Yeah, and I just wanted to put on the record also that not one of our I haven't heard of a single small business in Chinatown actually received the PPP loan. I haven't seen, they've applied for all 6 different programs, and they haven't received anything. And I also wanted to, just note that I also had the question that our chair of banks had as well, because I think that there is a big lack there, and I think that there's something missing within the bank system that is very dire for the allocations of PPPs. Thank you so much for allowing me this time.
Okay. I want to thank the first set of witnesses. You did a great job. We're going to the second panel. I just want to remind everybody, both members and witnesses, to be as concise as possible. We're in 2 hours and we have our first panel. We've got 6 panels altogether. So the more concise everybody can be, the better. So we're going to move on to panel 2, which consists of Heather Becchetti, President and Chief Executive Officer of the Business Council of New York State, and Greg Gorilla, New York State Director of the National Federation of Independent Businesses. And we can start with Heather.
Like, before we start, I want to thank our first panel. Thank you so much for your time, for being here and giving us your insight as to what you've been dealing with and helping us really highlight those concerns and issues and see how we can help you out. Thank you.
Okay, Heather.
Okay, thank you. First, I just want to say thank you very much for the opportunity. I'm a former Assembly staffer, former Senate staffer, and I have a great appreciation for what you all do and the degree to which you represent your constituents. The Business Council of New York State is the State Chamber of Commerce and the State Manufacturers Association. 2/3 of our members are small businesses. And what you heard from that first panel greatly reflects what we've been hearing from our small business members throughout the state. There's a lot of concern, a lot of confusion, and definitely a lot of need for additional support. I know that the focus on the topic is on the federal response, but I wanted to start off by saying that, from the inception, small business in particular have been dealing with a lot of ground rule changes in terms of the federal sick leave, the state sick leave, and then, the PPP and the EIDL program and a lot of confusion around that. We've tried to act as a resource for them, as have other chambers of commerce across the state. Sadly, chambers of commerce were excluded from eligibility for the PPP program, which I think is a grave oversight given the degree to which chambers have supported small business throughout this. I want to say, I think our greatest concern is that in the federal programming, there was no differentiation between states that were hardest hit and those that were not. New York received funding allocated based on population, with virtually no consideration given to the disproportionate impact that it has had on our state and on our economy. And I would urge all of you as legislators to press our congressional members to really factor that in as we go forward. I participate in a number of national organizations that are entities like myself, and I'm hearing from other states that they have, through their CARES Act money, been able to allocate funds for things like small business grant programs, to shore up their own state unemployment insurance fund, so that they don't have to, moving forward, place a tax on employers who had to lay off workers due to this. We won't be able to do that given the resources that we were given, because all of them have been forced to deal with sort of the emergency and the crisis of it. So I think that would be our biggest ask, would be that there be more weight given to the disproportionate impact that it had on New York. So some of those funds could actually reach small business and help them navigate the crisis. In addition to that, I do want to say there's been a lot of discussion about the percentage of small business that received funding. Based on our data, which is from the SBA and state labor data on employment, about 60% of small business in New York State that was eligible did receive some form of funding under either the Payroll Protection Act or the EIDL program. The numbers are available, and it's, I mean, depending on how you want to describe small business, there were 271,000 loans given in New York, 460,000 businesses, fewer than 500 employees. So that's about 60% did receive some form of funding. That being said, the rollout was very, very confusing, very difficult, and New York did not receive a proportional share in the first round of funding. Lastly, I just want to turn to one of the questions, which was how can New York help? First and foremost, what we're hearing most questions about right now is reopening guidelines. Businesses want to know that if they follow the guidelines, if they follow the guidance, that they're not going to be then sued down the road. And I think having some clarity around that is something that is going to be really, really critical. And second, support small business and support chambers of commerce, because we're out there every day trying to help these businesses get through this. We've been an information resource, and I can attest to the fact that chambers of commerce around the state have been overwhelmed with requests for assistance from their members, and they could use some help and support as well.
Thank you. Very concise. Okay, next up, Greg.
Thank you, Assemblyman. Thank you, Senator Kaplan. Thank you, all the members on the call today. As mentioned, I'm Greg Barilla, State Director for NFIB, representing thousands of small businesses across every community in New York State and hundreds of thousands across the nation. I'm also a small business owner by marriage. My wife's independent cycling and fitness studios in downtown Rochester. Compass Cycle, shameless plug. It has been shut down since March 15th. I wish you and all your families and communities nothing but safety and well-being. Our economy is in rough shape right now, no secret about it, and it's small businesses that are in the roughest shape of all. Most small businesses have enough cash on hand. I'm talking about runway. Most small businesses have enough cash on hand to operate for about 6 weeks without new revenue. Small business owners are less likely to have business or personal savings accounts because under normal business circumstances, the wisest use of profit is reinvestment in staff, equipment, or facilities at their business. When we talk about local job creation and sustainable economic development, we're talking about small, independent businesses. Businesses that stabilize local tax bases, support community and charitable organizations, and make our cities, towns, and neighborhoods different and special. 8 weeks ago, without any ability to prepare or plan, small business owners closed their doors to commerce. They did this because public health demanded it in order to flatten the curve, give our healthcare system and workers the opportunity to confront COVID head on. But just because something is necessary doesn't make you sleep any easier. NFIB's members and all small business owners are experiencing unprecedented anxiety and uncertainty. Many of them are simply down to the felt. Like all of us, they want to reopen New York's economy in a way that is safe, full, and fair. Because of the actions taken by New York State and because of our frontline workers, we can begin to discuss how that's achieved. During the initial outbreak of COVID, and furthermore, when New York and downstate became the pandemic's epicenter, states took the lead in confronting the public health crisis, while economic and social support came from federal programs. These programs, to some extent, have been lifelines for small businesses. It is important to understand their effectiveness, where they fell short, challenges that still exist, and most importantly, applicable lessons for New York State. The Paycheck Protection Program is by far the most in-demand and attractive program, evidenced by its initial $250 billion appropriation being exhausted in a matter of days. There were problems with the construction of PPP and its execution, but for many small businesses able to access its funding, it will literally make the difference between staying open and bankruptcy. A national survey conducted by NFIB's Small Business Research Center, published late last week, has found that 77% of business owners nationwide have applied for PPP, and 61% of loan applicants have received their loan funding. This is a marked improvement from the program's initial rollout, which included horror stories of relief designed for small businesses being gobbled up by high-end multi-state steakhouse chains and billion-dollar sports franchises. While the PPP should continue to be improved, it has been far more effective and efficient than the EIDL program, as evidenced by earlier testimony today. The single biggest problem we now see with PPP is ensuring its recipients have clear guidance regarding its forgivability. For small business, forgiveness is essential. New debt, even with low interest, is not an option during this level of uncertainty. NFIB is also seeking increased flexibility regarding the 75-25 expenditure ratio and increasing what would be considered forgivable expenses, including not just real estate costs and renting, but also businesses like manufacturing that may have equipment costs, upkeep. Some people lease their equipment. These are all significant pieces of overhead for small businesses. This brings us to what I think is the most important part of today's conversation. What can we do as New Yorkers to ease our reopening and ensure it's safe, full, and fair? The first and most important thing we can do is improve communication between small businesses and all employers and ESD or any state agency deemed to govern or influence our reopening strategy. As we speak, construction in certain parts of the state are planning to open up by the end of the week. We are still awaiting clear guidance, unless some came out during this hearing, about how to open construction facilities and operations safely at the end of this week. We need to be doing a better job communicating between small businesses and ESD. Reopening also must be fair. We have seen large big box retail able to operate through this entire crisis, but we have not seen small businesses with very similar operations be able to operate while their competitors are continuing to bring in revenue. So with that, I will open it up to questions, and I thank you for the time today.
Thank you. Okay, we will start off the questioning with Assembly Member Robert Smullen.
Thank you very much, Member Sturpey and Chairwoman. We really appreciate the opportunity. I know that New York is the home to 608,351 small businesses, and they've all been affected very differently. But the key fact is that they employ 54% of the state's workforce. We've been talking this morning about a variety of programs, but what I wanted to see is what you know that New York has done to help small businesses to be able to get through this pandemic.
Sure, I'll take that first. New York State, first of all, has a little bit less ability. We understand that the public health emergency and the cost to confront that has largely been borne by the states. And hopefully, to my colleague Heather's point, there will be additional resources coming from the federal government to reimburse New York for some of those expenses. So a lot of the relief programs have come from the federal government. But before session closed, there was some relief, as we've talked about, on mortgages and rent payments, but also some immediate sales tax revenue that was due, I believe, March 20th. Some types of small businesses were given some relief on that, which was incredibly important, because the biggest problem when we instituted New York on pause was small business and their cash on hand. So allowing certain small businesses to keep some of that sales tax money that was due to the state for a little while longer gave them some initial breathing room while they figured out some of these federal programs.
So one of the things that we proposed was Jumpstart New York. And a couple things that it would do would be to provide some zero interest forgivable loans from a state level. Is that something that would help out the small businesses that you've heard from, that would be able to fill in the gaps, if you will, between the federal programs by repurposing existing state programs, monies, and specific programs that would then help our businesses in New York State that are supposedly falling through the cracks here?
I mean, I would first echo Greg's comments, but also say that obviously forgivable loans at the state level would be something that would be very welcome. The question is where does the funding come from? And in New York, the vast majority of the federal funding has gone to deal with the immediate health emergency, which we understand is necessary. But because of the way the federal government allocated the money, states that aren't dealing with this kind of health emergency are able to do programs like forgivable loan funds for small business and shoring up the state's UI fund, which will impact every business down the road. So that's why we think it's so critical that we lean on the federal government to allocate the funds differently, and it's got to start with our congressional delegation, that we get some recognition of the fact that we're dealing with this on a much higher level than any other state.
And we agree that it's a proportional effect that it's having on New York as the epicenter, and that it's not a per capita decision, but it's more of a proportional thing. Now, looking to what the bridge is beyond the reopening phase, what I'd like to discuss is some of the possibilities about reducing the regulatory requirements and some of the overhead costs for small businesses. What would be helpful amongst state regulations to either extend the emergency regulations that have been waived, or those going forward that would help small businesses to help those that can survive, but then to help those who need to regenerate themselves to start again? What would be most helpful from your perspective?
I mean, I'll start, and I'll let Greg weigh in too. But I think that the first thing we need to do is evaluate all these regulations that have been suspended. Are they necessary moving forward? We need to look at whether or not we have some regulations that really don't serve any purpose. And then, beyond that, what is the cost benefit of some of the regulations that are in place, and how do they impact small business? And with that, Greg, I'm sure you want to weigh in on this.
So I think there's a couple of things. One, as we look to beyond COVID-19 and what we need to do to not only, right now it's about surviving. So now how do we thrive once this is over? I did love your mention of forgivable loans. We have a lot of different low interest types of loans in this state through ESD or various other economic development programs. But debt is to finance growth. And that's not what we're talking about right now. That's not the problem we're having. The problem is financing operations and reestablishing operations. So loans would need to be forgivable, I think, to have any real effect. And now on the or regulatory front, let's first do no harm and look at some of the things that are already coming down the pipe. And it's been mentioned by others today. There's going to be a lot of fear about businesses reopening, rehiring if we don't address the liability concerns that are out there. The state needs to communicate clearly with the insight and cooperation of the private sector what is going to be expected from small businesses when they reopen, and if those rules are followed, some protection on liability.
Okay, thank you very much. Now,
Thank you very much for the time. Thank you.
Thank you, Heather and Greg. So there were two $30 billion sets aside, included by proposed to be processed by small and medium-sized community banks and credit unions. I believe that the smaller banks have loaned more than 30 billion, and that medium-sized lenders are close to reaching this threshold. Is that correct? And if so, do you have any idea of how much more funds these particular entities would be able to distribute? And why do you think these particular types, any insight that you might have as to steps that could be undertaken to resolve these concerns?
So,
go ahead, Heather.
I was just going to say, I think that the set aside was a good idea to ensure that, especially small businesses that don't have relationships with large banks with a lot of experience with the SBA, that they are able to access the funds through the bank that they deal with, which includes credit unions and SBDCs and the like. And I think that was a very good thing. I think, whatever funds are left, I think they have equal access to. And I know that there are still a lot of funds remaining to be accessed. So I would hope that on a proportional level that they would continue to participate in the programs. I think in particular, in MWBE situations, there's smaller lenders having access to this is going to be really important to them. So I'm not sure I've answered your question, but
the message is really to go ahead and apply. Still, there's opportunity.
Yeah, absolutely. They're still participating. It's just the set aside has been fulfilled.
Yes, they're still participating. They may not have their dedicated $60 billion in funding, but they are certainly still participating. I believe there's somewhere around $90 to $100 million left in the PPP program for round two. Now, granted, that data is a couple of days old, so there's obviously been loans processed in the interim. But I think it was great to see some spotlight and dedication shown to these small, medium-sized community-based lenders. I'm not going to defame anybody, but anecdotally speaking, in our office in NFIB, and I can't imagine that anyone's heard more about people dealing with PPP or EIDL loans than we have in our office. Anecdotally, there was just a better experience with the smaller local community, even larger regional banks. And as you went up the food chain to the very highest, that's where you saw, I think, a lot of anxiety and disappointment. So obviously getting more types of lenders. There was a question earlier about some of these e-lenders like Kabbage and folks like that. Getting those types of lenders, competition is good. And we've seen this second round of funding increased participation through some of those alternative types of lenders. And I think that's all led to a better experience in round two.
My next question is, I spoke to a woman from Great Neck who was employed in a medical field. She owned and operated her own private practice, sharing office space with another medical professional. The individual she shared space with has decided to retire as a result of the pandemic. She is now looking at the need of locating a new office space and moving her long-standing practice. Have you heard similar stories from individuals who find their business model so significantly changed that they either have to move or bring in new partners or undertake significant changes to their business model as this woman? And what advice would you give her?
I mean, yes, every business that I've spoken to is facing significant challenges and changes to their business model, including, how do you bring people back to work even once it's permitted? They are all very concerned about complying with the directives, but also being able to attract customers or clients who may be concerned about the safety. It's different in every industry, and a medical practice, I'm sure, because it's hands-on, that would be very concerning. My advice is talk to your local chamber of commerce, reach out to business associations that represent people in your field. There's an association for everything, but they certainly would have ideas on how to evolve. We've been working with all different sectors to try and develop reopening plans, but some of that also includes a discussion around not just how do you configure your workspace, but how do you evolve your business model to survive in what is certainly going to be a very different operating environment in the future.
One last question. Can you identify from the conversations you've had with small business owners, what would be the most common occurring problem they are having with the CARES Act? And from your conversation, can you offer us any insight what they need to do going forward?
Sure. I mean, you go, Greg, go.
I think what we're seeing has been an evolution over the last couple of weeks with the CARES Act. And the CARES Act's a big piece of legislation that was, I think, $2.5 trillion, give or take a penny. And the direct small business relief was a relatively smaller portion of that when all said and done. And I'm not going to speak to the entire CARES Act, but the problem was accessing funding. Now that people have access funding, it's how do I spend it and how do I spend it appropriately? Because as I mentioned before, we can't have forgivable loans turn into new debt. That is a second recipe for disaster in this whole process. So I think it goes back to, as we are continuing to explore changes to PPP and through Treasury or guidance issued by United States Department of Treasury and other as we go actions, they have continued to tweak around the edges and make some changes. Or as we explore state-specific solutions when we reopen or after, flexibility is the key. That goes for how we roll out our reopening as well.
Okay.
We need to understand every business is unique and flexibility is important.
All right.
Thank you.
Great. Thanks. Next up is member Tom Abenati. Got to unmute.
Unmute me.
You're okay now.
Okay, there we go. Thank you. Hello, Heather. Nice to see you. Let's see, where's, there he is. Thank you for joining us as well. I want to, again, in my role as chair of the Banks Committee, I want to focus in on what seems to be the main vehicle that the federal government is using, which is the banks. Have you seen any evidence that the response is different and the impact is different depending on geography and industry?
I would say in the first round, yes. If you look, a huge percentage of the funds went to, in particular, Texas for reasons that we can't ascertain. Second round, New York actually kind of caught up. And so based on geography, yes.
What about geography in the state of New York?
Oh, within the state.
I'm concerned that the costs are so much greater downstate that I'm hearing that fewer people were satisfied with what happened because the costs are so expensive. And you heard some people before talking about how their rent is so much higher, their insurance premiums are so much higher, and everything else.
Well, right. So the 75-25 rule is something that I think is more acutely felt in areas where the actual cost of bricks and mortar are that much higher than they are in the rest of the state. I mean, I think that's certainly true. So that would be a geographic difference. And you know, I think the volume of applications probably was dramatically higher in the downstate region. I mean, I've heard from a number of businesses in upstate that received their loans, although not in the first round, in the second round, relatively quickly. That was not the case with the first round, and it certainly was not the case in the New York City metropolitan area.
Hey, Greg, what about you? What was your?
You know, there's also been some evidence that rural communities have had some issues with this as well, and that obviously density and the volume is probably not the problem there, but there may not be as many lenders in those communities or businesses with the same type of relationships with lenders that other larger population communities have. I don't know that the whole story's been written either, so I think this is something incredibly important that as we finish up PPP round 2 is well understood. And I believe it was mentioned earlier about an SBA study done by the IG's office on Thursday or Friday of last week that scratched the surface. So it's good to know that they're looking at it because we're going to need to improve this at the federal and state level to make sure it's fair and equitable.
Well, are you two both able to solicit information from your members to help us as we go forward as to what we can do to get more lenders into particular areas or to ease the process so that there's a broader distribution of the funds?
Yeah, absolutely.
I mean, the banking committee, I'd like to work with the banking community to see if we can solve the problems your members are facing.
Absolutely. I mean, we have access to our members, and I'm sure that they would all be very happy to weigh in.
Okay. Now, there's one industry that was mentioned, and I don't know if it's going to be represented in this hearing. We may want to talk to in future hearings, and that's the real estate industry. Not every owner of property is a large, big conglomerate that can absorb the losses. A lot of properties are owned by, even in the suburbs, by, families. They may have a small shopping center. They may have a 5-family house. They may own a couple of stores. And this is income to them and to grandma and to everybody else. Have you heard anything from those entities, those parts of our economy?
Yes, I mean, absolutely. And I think it just shows sort of the domino effect. If folks, can't pay their rent and the landlord can't get the rent, then they can't pay the mortgage. And it ends up having a catastrophic economic effect. So, I mean, I think it is something that, again, other states have had a lot of flexibility in dealing with this because the funds, they didn't have the emergency situation the way that New York does, and have had a lot more ability to use the funds in ways that support businesses, including, small business, real property owners. And that's something that's very important. And moving forward.
Sounds like we need to have a cost of living factor baked into what we're doing here. Right?
I mean, I would assume so, yeah.
But we don't have that now, right?
Right.
That's my understanding. We don't.
Okay. So, can I remind everybody, keep your eyes on the clock, okay? Senator?
Thank you. I also want to mention that we've been joined by Senator Biaggi and Senator Robach. And the next questions come from actually Senator Martinez, who asked me to ask the questions from you. Do you feel the PPP program was properly distributed to businesses that had the greatest need? How should additional PPP funds be distributed to ensure businesses that were unable to gain access before uninsured equal benefits? And do you believe businesses will be able to comply with the June 30th deadline to restore employment and salary levels?
Well, I mean, I think that's a pretty complex and multifaceted question. So I'll just take the last part of it first. There's certainly some concerns about that June 30th deadline. And it was mentioned earlier today by the retail owner and the restaurant owner. There's a lot of types of businesses that are density based. That's the business model. Restaurants, gyms, any sort of entertainment venue. And I'm not talking about football games and concerts. I mean, small entertainment venues. They are not going to be able to open on June 30th. They received a PPP loan. What's next? And we don't have those answers. So I think that's an important consideration. It gets back to my point about flexibility. And if we can make the program any better to ensure the right businesses are getting these funds, first, I liked what they did with PPP2 was that if you were already in the queue, you were next up to make sure we didn't have to start again and we didn't automatically favor businesses that had, advanced accounting departments or accountants that worked for them or contracted with them, so that those in the queue were already rolling. If we refund this program and improve it, hopefully that needs to be the paradigm moving forward. I guess I'll kick it over to Heather because I can't remember the front end of the question.
I think the front end was, did the right businesses receive the funding? And I think that kind of points out one of the fundamental flaws in the program. I mean, the fact that all that money was deployed as quickly as it was is impressive, but so many smaller businesses had a lot of difficulty getting their loans processed in the first round. Some of that was corrected, but the lack of clear guidance on who was eligible, I think pretty much ensured that by virtue of the fact of not everyone getting funding, folks that probably were hardest hit weren't able to access funds, particularly in the first round.
Obviously, the Los Angeles Lakers or certain other organizations, sorry for any Laker fans, I mean, that was not what this was intended for.
No.
It was an abuse of the system, and that was atrocious.
Okay. All right. So next up, we have member Ed Ra.
Thank you, Chair. I wanted to go back to something that was discussed a little bit earlier with just generally both in terms of workers and customers and safety as you reopen. I know that Greg, in particular, you had mentioned that as we get up to this Friday with certain regions starting phase 1, that there's not been clear guidance, and obviously many of your members have been not just in this process, but in the past couple months probably have been looking to entities, whether it's ESD or others, for guidance on whether they even qualified to be essential in the interim. So can you elaborate a little bit more on, do you think it's ESD is a better way to, is the way to coordinate that and get clear information? I know we also now have these, regional control rooms and all of that's going to be involved in the opening as well. So what do you think the best way to facilitate that information really on both ends? Because I think your members are going to have a lot of information that needs to be heard that I think you said in your written testimony, we can't be afraid to adjust as time goes on. I think that's going to be crucial, and I think it's going to have to be a two-way conversation.
Absolutely, and I'm not criticizing ESD. I mean, this is unprecedented for a lot of different aspects in a lot of different entities. I think they did their best. I mean, we were on the phone with them, every day, and when they had answers, they gave them. They were overwhelmed, but we're not in a day-to-day public health crisis anymore in large parts of the state. And I'm not to mention the crisis we are in, but we have the opportunity to take a little bit of a breath, see what we've done these past couple of weeks or months in communicating with the private sector and state government and improve it. I think ESD should continue to be the primary vehicle. Don't need to upset the apple cart too much. We've already gone 2 months down that road, but we're going to bring businesses online on Friday in certain regions. And then hopefully in successive weeks after that, additional types of businesses. And hopefully it all goes safe and we don't have to completely recalibrate our reopening strategy. But there's going to be confusion, anxiety, and what we don't want that to become is anger as this moves forward. There are businesses that are going to be confused about whether or not their business can operate. And why can a business one county over operate and mine can't? So I think incorporating organizations like Heather's and mine into that discussion process and allow us to do some of the work for you. Allow us to identify some contradictions or red flags during the process of devising these guidelines. Allow us to communicate them to our members quickly and efficiently, in addition to what ESD and state government is doing. I just think this is an unprecedented opportunity for state, local government, private sector, the legislature, executive branch to work together. And the only way to do this safe, fast, and fair is to communicate with one another.
Right. And then just lastly, with regard to that, the other thing that you mentioned, I know both in your written testimony and in your initial comments, were just the whole idea of, essential versus non-essential, and obviously we're shifting now to trying to evaluate based on safety, which makes perfect sense. How might, if you have any ideas, in terms of what the phases have been laid out, we know there are a number of different types of businesses that don't necessarily fit neatly in, and we're still trying to determine where they're going to fit in. So how might, that be adjusted to make sure that we really are focusing on what businesses can be operated safely and getting them online sooner rather than later?
Well, safety obviously comes first, but we have to look at what we've already been doing and make sure there's equity in who we're allowing to operate moving forward. I can't tell you how many phone calls, and I'm only use one example, but phone calls I received from a small business owner a week or two ago who is an independent local flooring retailer, but they only sell flooring and they're not essential, but they drive by their local Home Depot and there's a truck with a whole bunch of flooring product in the background because Home Depot sells enough of the right products, they're essential. But a business who's smaller, by nature, less dense because it's a small business, has a smaller footprint, easier to clean, easier to social distance, they're not able to operate, and they already have the DAC stacked against them from these huge big box corporations. So again, these are the inequities that I think we can look at now and just say, well, if we have put established practices in Walmart, Target, and Home Depot that have led those really large operations with big footprints to operate safely, efficiently, and deliver certain products to their customers, are there other types of businesses that we can do that with? And should we advance them? Again, letting safety be our guide, but can we advance them to a greater stage of being open than just door-to-door pickup?
Yeah, I would just add on to that, manufacturing is one of the areas where there were some, differentiation based on whether they were considered essential or not. And it got to be, sort of confusing. People couldn't figure out, well, I make pallets, that's part of the supply chain, but are they really essential manufacturing? And so more clarity, we've all learned a lot from this, more clarity moving forward as to who's in and who's out and how do you get a waiver would be helpful.
Okay, Senator.
Thank you.
Next series of questions come from Senator James Seward. Senator Seward?
Hello?
Yes.
Thank you, Madam Chair, and my colleagues. I think the issues that we're discussing here today are critically important to our state. After all, our small businesses employ half of our state's workforce, nearly half of our state's gross domestic product. Numbers come from our small businesses throughout the state, and so these are critically important issues to the people of our state. Now, I think it's no question it's important for us as state legislators to advocate at the federal level for some changes in the CARES Act and specifically the PPP going forward and other aspects of the CARES Act. We're certainly going to do that. And I appreciated the testimony from both Heather and Greg in terms of what we can do at the state level to be of more help here to our small businesses. And that's what I'd like to key in on. I think it's important to point out that even before the pandemic, it was not a panacea here in New York State. Remember back earlier in the year, we were pre-pandemic, we were dealing with a very tight, difficult budget with a looming deficit. We were dealing with this out-migration issue. We lost last year 180,000 people left the state of New York. And at least from the upstate perspective, kind of an anemic economy lagging behind, the downstate region as well as the rest of the country in terms of our economy. Hearing about over-regulation, taxes, fees, those types of things from small businesses. And as we look to emerge from the economic shutdown and to be of help to small businesses, I think it's important for us at the state level to deal with some of these systemic chronic problems that we have seen over the years, and come up with some specific programs and yes, funding, even in a tight budget, difficult budget. For example, there are some sources that come to mind. The coronavirus relief funding from the federal government, that's over $5 billion that have come to the state. Unallocated is to my knowledge. Perhaps some of that could be used to help small businesses. You know, Hollywood is in a pause. And how about the film tax credit? Let's direct some of those funding toward the regular people and Main Street businesses throughout our state. There's money in the budget, you know, for ESD capital program, the downtown revitalization competition. That's $100 million right there. There's a potential source of funding.
Do you have any questions for the panel?
Yes, I do. I'm getting to that. And as we move forward with other ways that we can help small businesses, my question to the panel is this. As we emerge from this, what we've gone through, would you see as potential opportunities for our state and our businesses throughout our state, new business opportunities in terms specifically in having protective gear, the PPEs produced right here in New York State, some of this medical equipment that's needed, ventilators and other medical equipments. Would you see this as a business opportunity that we as a state should be pursuing for the benefit of the people of the state and particularly our businesses that we're trying to help?
Oh, Heather's muted. Well, I'll start off. Senator, first of all, great to see you healthy and well.
Thank you.
Fight for sore eyes. So absolutely there's an opportunity. I think one of the things we learned here is that we rely on foreign production of a lot of this material for various reasons. But I would say this could solve two problems at once. I have a lot of concern for small business members of NFIB. As they begin to reopen, there are clearly, at least initially, going to be requirements on social distancing and PPE and other measures in the workplace. During this crisis, we have seen billion-dollar companies and entities as vast as the state of New York struggle to procure some pretty basic materials. So as we bring more businesses online in New York State and across the country, there's going to be a crush for things as simple as face masks. And I have concerns that small businesses that don't have the same access to supply lines and large quantity order of manufacturing could struggle to find some of this stuff that they're going to be required to have. So we need to manufacturing here would be great, and making sure we have a supply that everyone that needs it is incredibly important.
I know the time is up, but I just wanted to jump in and say New York historically is a very robust paper industry. We are very strong in pharmaceutical manufacturing historically and medical device manufacturing. These are all real opportunities that are before us if we can find the ways to incentivize repatriation of this kind of manufacturing.
Okay.
Thank you.
Thank you. Next up, we have Assembly Member Deborah Glick.
Hi, everyone. Thank you very much. Heather, I have 3 questions. I'm going to put them out all at once so that I'm concise in deference to the chairs. One, which kind or which businesses, small businesses didn't apply and why? Maybe that will inform how we go forward. What agencies in the state do you think could and should help put together a safety code for businesses, one that's understandable, considering that we have a variety of businesses? So we have an alphabet soup of agencies. Which do you think we should be focusing on to see that they get together and have a task force on this to help small business figure out how to open safely? And if there aren't changes, and the Democratic bill in Congress now does do some of the changes that have been suggested, like the 75-25 rule and if we don't change some of the repayment or timeline triggers, what effect is that going to have on businesses that took out PPP loans, but the triggers don't work for them? The short timeline for bringing back staff when you're clearly not reopening in parts of the state by June. So those are the top line questions. If you could give me some guidance on, especially on what agencies could be helpful.
Right. So I'll take, I did write them down so I could be quick, but the first question, I don't know the answer, which small businesses didn't apply. I don't think that data is available to us yet, but it's something we're certainly going to be keeping our eye on because I do believe that some of this will relate to which small businesses have very robust relationships with their lenders. So I think there might be a connection there. So when we find that out, we will certainly be willing to share that information. Agencies that should put forth a safety code, my inclination on that would be ESD and DOH. The reason for that is ESD deals with every sector, and what you would want would be not for this panel to be kind of freestyle putting together these plans themselves, but consulting with industry. And we've been working on this from day one, essentially, on how do you safely reopen a business, but it's different depending on what industry and what sector you're in. So those are the two. I mean, there may be others that I'm not thinking of, but to me, that's the obvious choices. And as far as the legislative changes, yeah, obviously, if there's no change to the 75-25 or eligibility of certain businesses like C6 entities, chambers of commerce, you're going to see some businesses not come back. And those who took loans are going to be in a precarious position moving forward. So, we're hoping to see some changes and some more clarity, but also some flexibility in how small businesses were able to use the funds. Because, for example, like a restaurant, if you're closed, you might have employees who are actually going to earn more on unemployment and continuing to pay them just for the purpose of forgiveness of the loan still may not put you in a financially viable position. So there, tried to answer them as quick as I could, hopefully.
I appreciate that. The one other thing that I'd like to ask, since we were both very pointed and sharp in our questioning and answers, it seems, and it hasn't come up today, but it seems that in many instances, small businesses, and have you heard this, small businesses are saying that if you're an owner of a small business and you let your two people go and you can't bring them back right away, you also can't pay yourself. So is that actually one of the restrictions? The payroll protection plan was essentially for employees, not for an owner who is now doing the job of, their 3 former employees.
Well, I think it would depend how you run your payroll because it is based off of payroll, right? So it's basically it's refundable on a percentage base. It's forgivable on a percentage basis. So in your example, there's 3, so you'd have only 33% retention of payroll. That means it would be 33% forgivable. That's my understanding. If you're an owner and you're on the payroll, then it shouldn't make any difference whether or not you're an owner.
Okay.
Thank you.
Thank you, Deborah. Senator?
Next series of questions go to Senator Borrello.
Thank you, Madam Chair. Appreciate it. Can you hear me?
Yes.
Okay. First of all, I'd like to start off by saying thank you to both of you for participating in this. I am a proud member of the NFIB, even long before I was a senator. I'm also a member of our local chamber. My wife and I are proud small business owners. And, as a senator and a small business owner, I have heard the struggles of small businesses across my district and beyond. What's going on as part of this pandemic, and certainly, most importantly, the arbitrary and capricious manner in which businesses have been allowed to operate, while some are considered essential and people operating in the exact same industry and same space are not allowed to the point where I've actually had businesses tell me that their competitors have called them to buy raw materials from them. So it's really truly egregious, in my opinion. But my question deals with unemployment. In particular, I have heard from business owners all across the state about the fact that the federal government's knee-jerk reaction was to pay all this additional money for unemployment, to the point where better than 90% of people collecting unemployment are now making more on unemployment than they were when they were working. And that has had a tremendous strain on our workforce, particularly for those small businesses that are able to operate right now. In addition to that, New York State doubled down on that bad idea by giving virtually anybody a long list of reasons to quit their job and collect unemployment. So this is the feedback I'm hearing from fellow small business owners. And I'd just like to hear from both of you what you're hearing about the impact of this and the advocacy that you see needs to be done to change this.
Thank you, Senator. On the unemployment issue, yes, the $600 federal supplement almost works in contradiction to the PPP loan program. PPP loan program is designed to bring employees back to work. That's why the bulk of the money goes to 75% for payroll. And now with the incentivization of initial $600, it is difficult for small businesses who now need to bring employees back onto the payroll to make sure this is forgivable. They need to do it. And there is a disincentive for their workers to return because of the $600 supplement. We have heard Senator Schumer and Congressman Katko in the same news article, the news story, talk about a need to address this. So obviously there's a bipartisan understanding of the conflict here. So hopefully that continues to get addressed. A couple of things that have been mentioned throughout this hearing is protection against potential unemployment insurance spikes. There is state legislation that has been introduced, I believe, by Senator Carlucci and Assemblyman Zabrowski. That is important to take a good, hard, long look at. And for anyone who's been doing this as long as I have, you will remember in 2010, after the last economic recession, small businesses and employers of all shapes and sizes were hit with what was a surprise unemployment insurance assessment. And that was based on the fact that we had to borrow money from the federal government to keep our unemployment insurance fund solvent in New York. Well, Politico reported last week that we have again sought, I think, $3 to $4 billion in a loan to cover our unemployment insurance payments. So we need to make sure that when that federal loan comes due, which is different than a lot of these other programs, this is a standard program the federal government offers, that we don't hit small businesses and other types of employers with an out of nowhere surprise unemployment assessment to repay back this loan like we did in 2010.
Yeah, I remember that sneak attack, and it caused a lot of people's bank accounts to actually overdraft. I know business owners that did do that. Yeah, so I totally agree and appreciate that. Also, I've introduced legislation to hold harmless businesses on their experience rating, as others have, and in a bipartisan way. I think that it's critically important that we do that. That could kill a lot of small businesses, the massive increase in unemployment insurance costs.
Okay. Next up, we have Assembly Member Doug Smith.
Thank you so much, Chairman, and thank you everyone for being here and being able to do this. A few things. Now, you mentioned the chambers of commerce and how helpful they can be. I can say firsthand that I represent my district's down on Long Island. I have 4 excellent chambers of commerce that span my entire district, and they have really worked with me as a sub-business council to help hundreds of businesses in the community. So I wanted to ask, and given what you had said about them not being eligible for, a lot of these programs, they do have staff that are, like I said, an extension, they're helping their members. Do you have any thoughts, just really briefly, on what we can do, either the state or the federal government, to include them going forward?
Sure. So just so you know, we were aware when the first PPP legislation was drafted that C6 had been intentionally excluded from the legislation. The original legislation said all nonprofits and then limited it to C3s and C12s. We did some advocacy, so there was a high level of awareness among members of Congress that this is an issue. I think this is one of those things where every chamber of commerce, every legislator should lean on members of Congress to ensure that C6s are included in the next round, because they are so vital in helping small business in sorting through really the whole, not just the loans, but also the new, what the standards and guidelines are going to be for reopening, how to secure PPE, all of these things. So they're really critical for small business. So that would be my advice, would be to pressure every member of Congress that you have a relationship with to make sure that they're included. I know that there is legislation pending right now in DC. Obviously, it's caught up in the whole debate over liability versus including state and local municipalities and additional aid for government. So, you'd hope that this is something that wouldn't get caught in that morass, but that's
Okay,
my
yeah. Thank you. That's kind of what we're feeling as well. Now, when we're talking about the PPP loans, what I'm hearing from a lot of businesses that I represent in my community are, as you mentioned, I think you cited about 60% have been successful, and largely that may have depended on a relationship with their local bank. But right now, what I'm hearing is that the Small Business Administration changed a frequently asked question, a FAQ on their website, FAQ on their website, that really is changing and making my businesses feel very uncomfortable. And some of them may only have 20 employees. So these are the small businesses we're talking about, but they're fearful that and some of them were debating whether to actually return the money. And now it's become something that's gotten such bad publicity. And they've sought counsel. And all I can say is, look, you legitimately do need this to continue to operate. You really don't know going forward, and this is what this program was made for. Do you have any thoughts on that and advocacy or things that we can work on to ensure that we have these large companies that employ thousands, maybe they shouldn't be getting it, but these small, really home-based businesses, these small guys, wondering if they should return the money?
Yeah, well, I would just say off the bat that a large employer over 1,000 should not be eligible for PPP. That was designed for smaller businesses, 500 or fewer, which is the federal definition of small business some of the time. But as far as concerns, I think their concerns are legitimate. There's been a lack of clarity as to what the standard is going to be for both accepting the loan and also for how you have to use it in order to be eligible for forgiveness. And I'm sure Greg is going to want to weigh in on this as well. But I think having clarity and communicating with the SBA directly are two very important aspects of it.
Absolutely, and I would encourage members or not to send any small businesses in your community to have this organization or my own, and we'll be happy to help them with any information that we do have. And if you are, and I'm not giving legal advice, but if you are a small business of 20 employees, you've obviously been in New York. You've been economically impacted by COVID-19. If you're trying to access PPP, you are in all likelihood doing exactly what you should be doing. Obviously, the rules can be confusing, but they should not be concerned that they are going to get the bad publicity or some federal auditor coming after them, like we saw with some of these large restaurant chains and others. That's exactly who this money is intended for. It can be confusing, but I think they're pretty safe in pursuing funding and just making sure they're following the rules and how they disperse it moving forward.
Thank you.
Thanks.
Thank you.
Senator?
Thank you. Senator Skoufis, you're next.
Hey, thank you very much. Good afternoon, and thank you, Chairwoman, for the kind remarks at the start of the hearing. I want to focus, I know both the Business Council as well as NFIB had mentioned that approximately 60% of the eligible businesses have applied for the PPP or other federal assistance. I'd like to ask about and focus on the remaining 40 or so percent and ask why have they not received federal assistance? Are they simply in the pipeline and their application hasn't been processed yet by the federal government? Have they, for whatever reason, been compelled to not apply? Or have there been other issues or problems? Were they locked out? Did they the program? I know the first round ran out of money very quickly. Can both of you briefly talk about why nearly half of eligible businesses have not received any federal assistance?
So, I mean, I can say that first, many of them may not have applied. Second, included in that number are businesses that are not eligible, those being any kind of nonprofit that's not a C3. So they would not have applied. And I don't know what percentage of the businesses that is. But there's funding available now. There's still additional funding available. So it may be that some are in the pipeline. And frankly, it may be that some of the small businesses are in a sector where they're not experiencing financial hardship, small grocery store, for example, or, something like that. So I can only guess, but a certain percentage of those businesses aren't eligible currently under statute. And probably a certain percentage don't feel a necessity to borrow money to get through this for whatever reason. And, Greg, you might have a better sense as well.
I think it's all of the above. Some businesses, God bless them, were maybe extremely well capitalized going through this and didn't see the need to go through this federal program and surmise that they could wade through this on their own with their own individual resources or other sources of capital. Others, like agriculture businesses of certain kinds, they may have been pursuing relief not through PPE or EIDL, but through FDA programs or other federal programs designed for agriculture interests. But there is a certain percentage, which I think is what you're trying to get to. And the last national survey, and this is national, but it's easy to extrapolate down to New York. About 7% of small businesses, 7 to 10%, simply were intimidated by the process. And that doesn't mean they didn't need it. So, that is what, if that's an accurate number or if it's larger, that's where we got to be focusing to make sure that anybody who does need this is getting it. Certain entities simply won't need it, or maybe the 75-25 doesn't work for their business model. Their overhead is based on equipment, machinery, or real estate cost. So they didn't want to take on additional debt if they couldn't get it forgiven. But there's certainly some subset out there that needed it and didn't get it, and that's where we need to focus.
And just to follow up on that, so nearly or upwards of 1 out of 10 businesses are intimidated and they need the help, but they just simply haven't applied. What do we do about that, right? So I'd ask, is it just sort of an educational issue? But the news about this has been 24/7. I know your organization and others, chambers, have been reaching out and fielding thousands of calls. What more can we do to reach the upwards of 1 out of 10 businesses that need help and just haven't applied because they feel it's an insurmountable process?
Point them to our web pages, mine or Greg's. We both have information and guides on how to apply for the loans, checklists, basically a whole lot of information for people who are feeling confused about the process.
Yes. Is it as simple as that? Do we just wait to hear from or identify businesses as we stumble upon them, or should we be doing something more proactively? I guess is my question.
Well, whatever ability you have through your communications resources in your Senate office and every member in Senate office on this line today, communicate these things to everybody you can. We're trying to do the same, whether it's through our own dedicated communications channels or earned media. And you have to understand that there's a lot of confusion at the beginning about how long this was going to last. Nobody knew how long that they might be shut down. People thought a week, 2, a month. As this continues, people who may have been initially thought this isn't for me, maybe it's for them now. And we need to continue to keep this program open and fund it to some extent, even though it seems like the crush has died down a little bit in terms of the amount of loans they're having to process a day. But make sure that we don't just assume everybody who needed it is all set, and continue to communicate and keep this program open and operating and making it more flexible as we go along if possible.
Thank you.
Thanks very much for your testimony and your answers.
Thank you. Assemblyman Sturpey?
Yes. Let's see. The next member is Member McDonald.
Thanks, Al, and good morning or good afternoon, everybody. And Heather and Greg, it's good to see you. And thanks for your organization's great work. Not going to spend too much time on PPP. Seems like you guys are covering everything. I will say this, your organizations have been very helpful with their timely updates, which has been helpful to really understand the program. And to some of the other comments, I will say this, I think some of the reticence with businesses are because there seems to be ever-changing philosophies in Washington. So once it gets clarified, I think there'll be more of a take-up. Last week, Member Fahey and I had a forum with the Capital Region Chamber, Rensselaer Chamber, and the Upstate Black Chamber of Commerce. And the one good thing that came out of it is that so far with this second round, the loan amounts are smaller, which would be a indicator that smaller businesses are now feeling a little more comfortable and being able to participate, particularly because community banks are involved. My question to you actually goes to a different funding source, which is IDAs. As you know, IDAs are sitting on probably about $109 to $110 million throughout the state of New York in their accounts. I've been working with our Capital Region IDAs, but also with other statewide organizations to allow IDAs during this time with some very prescriptive guidelines, really mimic legislation that Fred Thiel carries in the Assembly. I forgot who the Senate sponsor is, to allow IDAs to go back to being able to administer loan programs, which they had that authority back until the mid-2000s. You know, I know here in Capital Region in Albany County alone, the IDAs have banded together saying we can provide a business loan program for up to a total of $2 million to our respective communities, because we know that as much as the support's critical now, there are industries like the restaurant industry that aren't, and maybe even the hair salons, that aren't going to be able to open up right away. They're going to be another month or two, and they're going to need money down the road. Have your organizations weighed in at all with the executive? Because I know there is a consideration of an executive order. And really, what are your positions? And that's my question.
I'll jump in and just say that I think that we would generally support permitting IDAs to reengage in lending at the local level. I mean, this particularly would get to some of the micro businesses that may not have good banking relationships. You know, so I think that in general, we would be supportive of it. And we're looking for every tool that we can find to try and help small businesses navigate this and get through it.
Thank you.
I would second that, you know, and Assemblyman, thank you. You sent that legislation along to our office a week or so ago. And, you know, we've had conversations with the New York State Economic Development Council. And this is a perfect example of every single tool we have in the toolbox. We need to look how to sharpen it better and direct it towards where we need it the most. And IDAs are a tool that is focused on community economic development. And if we can come up with ways that are more impactful and you know, certainly follow prescriptive guidelines to ensure the money's going the right places for small businesses, we have to look at that absolutely.
Thank you. Thanks, Al.
Okay. Senator?
Thank you. Senator Jordan, you're up. Senator Jordan?
Trying to unmute myself.
Okay.
Thank you, Chairwoman, and thank you, Assemblyman, for having this hearing today. It's vitally important that we listen to our small businesses and hear from the experts. So I've been looking forward, especially today, to the testimony from the Business Council as well as NFIB. You are the heartbeat and the pulse of our businesses in New York State, and we appreciate that. As a former small business owner who employed 14 part-timers, I truly understand the pain that businesses are feeling across the state. When you have a small business and you have a bad couple of weeks, that's bad. When you have a month that's bad, then you start to really wonder what's happening to your business. When you've been out of business now for 2 months, that's when you start, from what I hear from many of our small businesses, that's when they start to think about considering closing, that they cannot recover. And small business employs so many people in our state and is responsible for so much of our economy that we can't let that happen. As part of our Reopen Reset plan that my Senate Republican colleagues and I have we've called for a re-examination of New York State's rules and regulations to see which ones, aside from public health, could be suspended to help businesses recover faster. As a study done in January of 2014, it was found that in New York State, there were actually 22 miles of regulations, if you were going to put them string them all out and measure them. It was 22 miles worth. And right now, New York State is of the worst in business climate before the COVID virus was here and attacked businesses. So I'm wondering, are there any state regulations unrelated to health and safety that the Business Council or NFIB would like to see suspended or gotten rid of totally?
So I'll just take that and I'll sort of change your question a little bit. I would say the first step would be, let's take a look at all the regulations that have been suspended during the crisis and reevaluate whether or not they are necessary moving forward. And you know, it varies by industry. You know, there are things that are just kind of a pain, and then there are things that make operations very difficult. So that would be my answer to that. In addition to that, I think moving forward, we really ought to do a cost benefit analysis of regulations that we impose on business, because sometimes while the intent may be good, the outcome, the cost of compliance outweighs the benefit and drives up the cost of doing business in New York.
Yeah, and I would add on to that, again, taking a little different direction towards my answer. One of the most important things that we have going for us right now that we did not have after the Great Recession is a property tax cap in terms of protecting what is a huge piece of overhead for homeowners, but also businesses and renters. That being said, we just saw the recent numbers at the end of last week. Sales tax returns versus for county revenue is down a quarter across the entire state. So we need to take a really, really good hard look at mandate relief for local governments to make sure that they're not continuing to be strained, and that we can continue to control property taxes on businesses who are trying to reemerge.
Thank you.
Appreciate that. Thank you.
Assemblyman Sturpey.
Thanks. Next up is member Carrie Warner.
Thank you, Chairman, for organizing this very complex hearing today, and thank you to Heather and to Greg for your very comprehensive testimony. I wanted to focus on two things. One is the role of community banks. I've heard anecdotally, and it's been mentioned today, that in communities where there is a strong population of small local community banks, those small businesses were more successful in the first round in securing the PPP loans than communities where there was fewer banks or primarily the large national banks. And so my question is, what are your, A, was that your experience statewide? And B, what would you advise in terms of how we could encourage the expansion of local banks into communities where there are no banks? And then I'll just ask a second question just to tee it up. And that is, Heather, you mentioned bringing medical device companies back, that strengthening the medical supply chain in New York so that we have businesses that can ramp up to meet the needs of our citizens to respond to crises like this, or in the aftermath to ensure that small businesses have access to the PPE they need for people to have confidence. And I'm just wondering if you could reflect a little bit on what are the steps we could take to try and encourage some of those medical device companies to repatriate back to New York State. Thank you.
So I'll take that one first, I think, because New York has, as I mentioned, a long history of medical device manufacturing, and actually probably 8 to 10 years ago, there was a tax proposal that basically imposed a additional tax on medical devices that were manufactured in the US and exported elsewhere. And so many of our manufacturers actually moved some of those manufacturing operations offshore. I believe that tax has since been removed, but the manufacturing has not come back. We do have a high cost structure compared to other countries like China that maybe don't have the environmental protections that we do or the labor protections that we do. And I think there should be consideration given to the relative importance that we've seen now of having access to this kind of manufacturing locally. I do think it's probably going to require some kind of an incentive to encourage companies to open up manufacturing facilities in New York. It's, as I mentioned, it's a high-cost state, but it would be worth it because we would have access to materials that are produced, and perhaps the cost of the end product might be higher, but that could, consideration could be given to the fact that they were produced in an environmentally sustainable way and that labor was appropriately compensated. Our paper industry is very, very competitive and could be the base of PPE manufacturing in New York. But again, we've been beaten by the cost structure, by the low cost ability of countries like China to import, to manufacture and import at a cost lower than it can be manufactured here. So I think, some consideration should be given to that. But I do think we have a big opportunity in front of us.
Thank you.
So on the first question, Assemblywoman, and I'm not an expert on banking regulations, NFIB does represent a few small community banks and credit unions, but I would not include high finance as a prominent member of our portion of our membership. But anecdotally, and this is purely anecdotally based on my own conversations with members of ours working through the PPE program or PPP program, I think your assessment was right. You saw communities that had a diverse array of banking and lending institutions, from large banks to regional banks to local banks, have more options, and people were able to, I think, have an easier process during this loan period. And then you got to rural communities that just simply didn't have enough lenders. So maybe there's an answer there with the way that banking's done. It's so digitally oriented nowadays that ensuring that even if banks don't have a very large retail presence in a given community, that they're still trying to access and communicate with customers there through digital means. But it was clearly a problem, and the experiences that our members had was so wildly different based on a lot have had to do with your lenders. So I think as we learn more about PPP as it comes out, and there's continued to be investigations from the IG and the SBA, we just have to recognize where these problems existed and correct them.
Thank you, Greg.
Thank you. Thank you. Senator Gorin, you're next. And in the interest of saving some time, please be a little bit more precise with your questions and your answers so we can move this. We still have a lot of other panels we need to hear from. Thank you. Senator Gorin.
Anybody there?
Okay, now I'm unmuted. Thank you, everybody. Thank you, Senator Kaplan, Assemblyman Sturpey, and everybody on this call. Two quick questions. One, looking at the definition of small business as 500 or fewer employees, it seems to me, when I'm talking to a lot of my business, small businesses, there's a different standard as to their business. I'm talking about people 50 employees or fewer, 10 or fewer. That seems to be more the backbone of the people in my district. And the program is kind of equating people at 500 or less, who we also want to make sure are helped, similarly to what I would consider a more traditional small business on Main Street. Those seem to be the people that are hurting the most and not getting the opportunities. So I wonder if there's any thoughts on maybe taking a look at that definition and reevaluating programs. Second quick question is, people who are unemployed now, who many of whom think they're probably not going back to their old job, some are calling me saying, can we get some relaxations of some of the restrictions on what they're able to do so that perhaps they could go and become entrepreneurs and start up their own business and use the time and the resources they have now to do that. Anybody have any thoughts on that? Thank you.
Well, I'll answer the first question. And that is, that's as difficult as defining where upstate begins and downstate begins. What exactly is a small business? The federal definition, generally speaking, is 500, but we've seen in numerous pieces of state legislation where we define that differently. We define it by revenue. We define it by 25 employees, 50 employees. We have micro businesses that are 10 employees or less, 5 employees or less, as recent as this past session with the paid sick leave bill. So that definition, it is not fixed in stone, but yes, we need to always be considering there is a difference between the 10 employee shop on Main Street and a 450 person manufacturer, which is still an important part of the economy, but they're just different entities.
Yeah, I don't have much to add to that. I mean, I think the definitions vary widely, even between the state and the federal government. I agree. 500 employee shop is a little different than a 5 employee shop. As far as relaxing restrictions on the unemployed, I'm not sure 100% what you mean, but I would say this: there's a lot of tools right now available for people to upskill for positions that are right now available. We have a partnership with SUNY that actually is Skill Amp is what it's called, where you can go look at available jobs, see what the skill sets are, and actually take the courses that necessary to fill those positions. So that's just one thought on that.
Yeah, I mean, some of it was like, initiating, setting up a corporate structure, an LLC, maybe starting to pool money together with a couple of fellow unemployed partners, and just a concern that the way the rules are written, that, they would lose out on the benefits they're getting now.
I mean, I think only if they're actually getting paid. So that, that would be a good thing, right?
It would be. Okay. Well, thank you so much.
Thank you. Senator Sanders, you're next.
Good afternoon to the chairs again. Much has been spoken about the PPP program. Former Labor Commissioner, Secretary Robert Reich, pointed out in PPP 1 that 80% of the monies went to the largest 10% of corporations, according to Robert Reich. Under that, he believes that the PPP 1 was a hoax, according to him. And I'm really concerned that these giant corporations need to be more patriotic at a time of this crisis, that they should remember that this money was designed to prop up the smaller companies, and by gobbling this money up, they are putting us, the country, at risk. The PPP2, however, was better designed because it took in smaller banks, CDFIs, and the fintech industry. My question or my suggestions to both Heather and to Greg are, if you have any ideas on a state PPP program, you need to get them to me. Or we're still playing with the idea, we're not totally out of the woods yet, that we may come up with a PPP3. A PPP3, it's almost, it depends on the day, it's 50-50 or whatever, it's rough down there, but we may come up with that. And your ideas on shaping that one, give me some information that I can get to my congressman, who of course is the chair of the subcommittee on financial institutions, so that we can work on these, what would be good for New York. Thank you, Madam Chair.
Thank you.
I'd be happy to supply you with ideas on PPP3 and/or a state program. As far as the 80% going to the largest 10 corporations, I would just say if they have more than 500 employees, they're not eligible under the PPP guidelines, even in round 1. So I would suggest that if that's true, they should return the funds.
Thank you.
Senator, in my hand, I have, it's got my notes on it, so I'm not going to send this exact copy. It's called the Legislative Plan for the Survival of America's Small Businesses, and it is 10 points on how to improve PPP and other federal and state programs. I will send that to you. I will send it to the chairs and encourage them to distribute it. It's federally facing, but it gives an idea about how to improve this program.
Thank you very much, Greg. We will definitely share that with everyone on this hearing with us. Next is Senator Little.
Thank you.
Go ahead.
Thank you very much, and I won't take much time.
But one of the things that we're all hearing, and I'm hearing up here, is some of the unfairness that goes on with who is open and who can't be open, who's selling what. You know, the big box stores sell everything from kitchens and carpets and paint and all of that, and Walmart does the same. So as we go forward, I'm hoping that these associations that work with hairdressers, with nail salons, with all of those businesses, as well as the smaller retail stores, will put out plans or guidance for these entities so that they have some consistency. You go in one store and another store, it's all the same, mask, spacing, everything alike, that we can move forward and help more and more of our small businesses get open. We're on the verge. The North Country got the okay today. The Capital District, which is Warren, Washington, and the rest of the Capital District is very, very close, just one more thing to achieve. So I'm just hoping that you're working with them as, you know, lead business councils to get this going.
Every day, Senator. And, you know, we put a letter into Empire State Development on Friday that specifically called out the inequity of certain huge big box retail being able to operate when their competitors, for the sole flaw of not selling the right combination of materials, have not been able to operate. And we understand it was, you know, very chaotic at first, and we needed to make sure certain vital types of retailers were open, but we need to be doing better going forward. It's a priority of ours.
Thank you.
Thank you very much. I want to extend again a thank you to our panels, Heather and Greg. We're going to start with the next panel. Panel number 3 is, we're starting with Tom Cosgrove, the Farm Credit East, and also Julie Suarez, the Associate Dean of Cornell College of Agriculture and Life Science, and Lauren William, New York State Farm Bureau. Please go ahead, take this time and give us your testimony.
Tom, maybe you can start.
Okay, can you hear me?
Yeah.
Yes.
Great. So my name is Tom Cosgrove with Farm Credit East. I oversee our public affairs, our knowledge exchange, and our marketing group. As most folks probably know, Farm Credit East is a cooperative. We provide credit and financial services to farms, forest product, and fishing businesses in New York and across the Northeast. We've got about over $4 billion in loan commitments to our more than 10,000 customers in New York. And as a cooperative, most of our board of directors are elected. And that includes our chair, Lori Griffin from Stillwater, New York, and our vice chair, John Nope from Canandaigua, New York. Appreciate the opportunity to make some comments about the federal response to the COVID-19 pandemic and its effect on small businesses. Certainly most farm businesses are considered small businesses. And like every other sector of the economy, it's had a major impact on the food and agriculture sector in New York. Farm Credit East issued a report a few years ago called Northeast Economic Engine that really looked at the economic impact of agriculture and food in the state, estimating $40 billion in economic activity and supporting more than 160,000 jobs in the state. And we know that although we don't know the level of impact, we know that a lot of farm families are facing financial hardships right now. And I certainly want to assure legislators that Farm Credit East and our team are going to be working with our members on a case-by-case basis to help them get through this challenging time. So since the pandemic started, Congress has passed 4 major pieces of legislation. I'm going to comment on 3 of them: the Paycheck Protection Program, the Economic Injury Disaster Loan Program, the Coronavirus Food Assistance Program. These were all programs that were somehow touched in those laws that have been passed by Congress. I would mention, though, that in the CARES Act, there has been some significant tax provisions that affect both individuals and businesses. I'm not going to get into those today. Those I think are less immediate than the subject of today's hearing, but I do think they're important, and our Knowledge Exchange group has some information on those on our website. Relative to the Paycheck Protection Program, I think one of the challenges for folks in agriculture accessing that program is that it was administered by the Small Business Administration. And that's certainly not a criticism of the SBA, but like most farms, Farm Credit East has really had very little interaction with the SBA over the years. In fact, ag producers are ineligible for some SBA programs. And like farms, Farm Credit East, we are the primary provider of credit to farms in New York State. Our primary partner on the lending side in the federal government is the USDA Farm Service Agency. And so we really weren't set up with ready access to the SBA program. So nonetheless, we want to make sure our customers had an opportunity to participate. So as a result, we put in focused on a couple things: producer education. Held several webinars, had regional specialist teams set up to help provide the information that was going to be needed to apply for the program. We did make arrangements with a third-party provider to process applications for Farm Credit East customers, and we did assist other customers in accessing the program. In the first round, it was somewhat disappointing that agriculture had a fairly low share of PPP funding. But when the additional funds were provided by congressional action in April, we're encouraged that more farms did receive funding or are currently waiting for their loans to close as part of the process currently. But I would say that it was a difficult program to participate in for many farms. Despite certainly the efforts of the SBA staff to help people. I won't spend a lot of time on the EIDL, but I would point out that that's an example of a program where farms were not originally eligible for the program. And now, again, when Congress acted in April to provide additional funding for the PPP, as well as the EIDL, they did make ag producers eligible for that program. But there was a delay in the window being opened up. There is a window currently open for ag producers to apply for that program, but there are some interactions with the PPP that may cause some issues and challenges. Just going to look for my timer clock, and it is getting low. Okay, so I guess the last comment I would make is on the coronavirus food assistance program. A lot to unpack there. Certainly, I think the assistance that has been put forward is possibly not going to be enough. We certainly support the recommendations of the New York Farm Bureau and other organizations that are going to make recommendations. Want to applaud the efforts of Commissioner Ball as well, and happy to take any questions at the end.
Thank you. Julie, would you like to go next?
Great, thank you so much. And you may have noticed I'm not Catherine Bohr. She sends her regrets. She was called away to another meeting. But again, Julie Suarez, I'm Associate Dean of the college and really appreciate the opportunity to be here today and represent CALS and our extension system and our over 150 years partnership with New York State as your land grant. So I'd like to emphasize, first of all, that good public health is simply not possible without access to nutritious food as regionally sourced as possible. And so as we seek to reimagine what our state will look like in the post-COVID-19 era, we simply have to create a more resilient farm and food system. I have more comprehensive remarks about the federal programs and what we've been seeing happening in our supply chain and for our farms in my written information, but I'll share just a few highlights with you today. When we think about the supply chain, according to the USDA in 2017, US families spent more money on food consumed out of the home than on food consumed at home. This is why the almost immediate cessation of food consumption outside the home, including in our schools, restaurants, and institutions, had an extraordinarily disruptive effect on our food system, and that's why you as a consumer have seen all these images of farmers dumping milk or other crops. From CAL's perspective, we have to restructure to ensure that processors in our supply chain networks can implement changes more quickly in the future to avoid both shortages for consumers and financial losses for farmers. New York's economic development program should in the future really try to focus on improving resiliency to supply and demand shocks by allowing access to capital for food processors to build more flexibility into their facilities so they can more rapidly adjust should we see shocks like this in the future. When we think about the economic impact in New York State from COVID-19 here in New York, it's really clear that the dairy sector has been the hardest hit, with the equine and ornamental horticulture sectors also experiencing grave losses. The craft beverage community is negatively impacted from the loss of visitors to tasting rooms like our wineries, cideries, distilleries, as our produce farms with storable crops like cabbage. Farms that were able to pivot very quickly to online and direct marketing have had a far easier time navigating this crisis. So there is opportunity out there for New York farms, but it certainly has been a very difficult adjustment. I want to touch briefly on USDA ag programs and other federal relief, and my colleague Tom has done a great job talking about PPP and the EDIL. But there are a number of agricultural assistance programs that have been announced by USDA that details are actually going to be forthcoming, frankly, tomorrow, which will be interesting. Very little cash assistance to the farm community right now has been dispersed, which exacerbates the financial challenges for farmers in New York State. So first, the USDA announced that $16 billion in payments will be made to farmers based on their actual financial losses from price reductions. This gets a little complex, but the goal of the USDA is to cover 85% of the price losses from the period of January 1 to April 15th, and 30% of the price losses from April 15th to October 15th. The seasonal weighting of this program is geared towards other regions of the country already in production and provides a really uncertain safety net for New York specialty crops farmers who will experience COVID-19 marketplace impacts later this season when our crops are in production. Additionally, payment limitations per farmer and per commodity are still under consideration by the USDA. New York's dairy and specialty crops farms tend to have a much higher production expenses than typical row crop agriculture, so think Midwest corn and soybeans. So USDA relief programs may not be adequately designed to provide relief to New York. Policymakers really have to carefully and thoughtfully monitor the USDA's relief efforts to determine whether there are, in fact, adequate funds available to support New York producers throughout our growing and harvesting season, and especially in our hard-hit dairy sector. USDA has talked about food assistance programs, and they've really done a good job of augmenting nutritional programs so far. They just announced $3 billion has been allocated for the purchase of fresh produce, dairy, and meat for community food assistance. Farms that have had experience in New York's Farm to School program were likely to be better positioned to take advantage, and our extension system and the State Department of Ag and Markets are working with potential applicants in the future. However, the USDA just announced the first awards under this program, and I have to say we were extraordinarily disappointed to learn that many of New York's applicants were not awarded funds. I hope sincerely that future rounds contain more New York awards. This does, however, make the governor's effort in Nourish New York and New York City efforts to purchase locally even more importantly, both from a food security perspective and also from a local farms perspective. The CARES Act, as Tom Cosgrove pointed out, did make farmers eligible for the PPP program, but in the first round, PPP funds were gone by the time guidance was released by SBA to help lenders understand exactly how sole proprietors such as farmers could apply. There's also a lack of clarity and eligibility for farmers with seasonal labor costs. The second round of PPP funding has been smoother, with many more farms securing needed funds from what we're hearing from our extension system and our partners. A change in the formula for calculating seasonal.
I'm sorry, your testimony time is up.
Also assist.
Thank you.
Yep.
Thank you. Lauren, would you like to start your testimony?
Yep. Good afternoon, everybody. On behalf of New York Farm Bureau, thank you for providing our organization the opportunity to testify today on the impact of coronavirus on New York's ag industry. My name is Lauren Williams, and I handle national affairs for New York Farm Bureau. And we represent over 20,000 farm families across the state, which represents all sizes, types, and commodities of farmers. And, you know, to really start off with, I don't think anybody really could have predicted the impact that our farmers and our food supply were going to feel when this whole thing began across the country. Not only have our farmers experienced the loss of markets, dumping of products, and labor disruptions, there also remains uncertainty of, you know, what the future holds for these businesses. And I think when we talk of recovery time, or, you know, if these farms are able to bounce back, we're talking not in months, but, you know, years going forward. Especially focusing on the dairy industry, we were just coming off of 4 years of low milk prices, and 2020 was going to be a positive year. And now it looks like that's not going to be the case. So definitely have a lot of concerns there for dairy, but also commodities like specialty crop, equine, and horticulture as well. And I will point out that, you know, it hasn't been all negative. Those farmers who are able to be direct marketers have seen increases in interest in the local food movement, which is really positive. And we've also seen our distilleries and our ethanol industry step up to the plate and make sanitizers, which we view as a real big positive. again, kind of as everybody said, really want to thank the Department of Ag and Markets for all of their efforts to kind of link our farmers who have excess produce or food to those who in need across the state, including those in New York City. So focusing on now the federal programs, the CFAP program, or the Coronavirus Food Assistance Program that USDA is going to administer. As Julie said, that program is going to provide $16 billion in or direct assistance to farmers. That may sound like a lot of money, but once it's divided across the country, we have real concerns whether or not our farmers in New York are going to be able to receive adequate support and have the resources and money they need to move forward. And, you know, our farmers haven't received any money from that program at this point, which is definitely concerning because we're now in kind of the third month of the impacts going forward, and we are going to continue to see those impacts. A lot of the details of that program and concerns we have in my written testimony, but I think specialty crops and horticulture have been a typically underserved industry by USDA programs, so really want to make sure that those guys find support in that program. Won't get into too many details of PPP and EIDL because I think we've really touched on them, but I think we face the same hardships that other industries face with, you know, trying to find lenders that were approved to be an SBA lender through PPP and ineligibility initially for the EIDL program. So, you know, continuing to try and get our farmers signed up for those programs. So looking forward, kind of what we're, you know, looking for from the federal level going forward is making sure more money is allocated to USDA through Congress as we see the need continue to be there. Also want to talk about the need to make sure our farm workers have the supplies they need. We've been working with Ag and Markets through Cooperative Extension to make sure we get masks and sanitizers out to farmers and farm workers who have continued to work through this pandemic. So we think that's a real critical need going forward, and making sure everybody has that guidance, you know, as they continue to be open, but as they reopen, you know, their UPIC operations or their agritourism operations or their equine operations about how they can move forward. So also focusing on ag finance for our businesses, working with Farm Credit East, but also Farm Service Agency to make sure our farmers have the funds they need. And so the question when we look at the state, what the state can do, a big one for us is ensuring that the state provides the critical funding that's there for current ag programs that were allocated in the state budget. We think those are critical. One I'll point out is New York FarmNet, which provides a lot of mental assistance and business assistance to our farmers. So thank you.
Thank you, Lauren. So I'm going to ask the first question. I know you mentioned dairy, but is there any other particular sector that has been particularly hard affected by COVID-19? And is it possible that various sectors of agriculture could be better served by different types of assistance? Could you speak a little bit about specific problems different types of agriculture businesses are experiencing and what your recommendations are?
Yep, so I'll tackle some of that. So we kind of focused on dairy, but I think, equine, we have had big concerns there just because their operations haven't been able to be open. Other than exercising horses, they're not able to do riding lessons or offer any other larger operations. Also, the horticulture industry, they were not considered essential under the governor's guidance. So those folks have had to close down. So through the Easter and the other spring season and Mother's Day, when people are typically buying a lot of flowers, they weren't able to operate as normal. So a lot of significant hurt there. And not to put those big box stores on the kind of spotlight, but they were still able to sell flowers because they met those minimum requirements, but whereas some of our smaller shops may not have been as well. But I think we've also seen some specialty crop guys who had some cabbage in storage, and they were kind of forced to dump some of that because, they saw restaurant closures in the Chinese markets, because they use a lot of cabbage in those industries.
Senator, I think you asked a really good question, and I just want to point out, because of the seasonality of New York State agriculture, we're really coming into our production season now. Farmers are out in the fields, they're planting, they're getting stuff ready for crops. So we'll really start harvesting more in that July, August, September, October, November timeframe. And so depending upon what happens with our economy, with our institutional markets, with our restaurateurs, the impact of COVID-19 on farms in New York will be felt for a long time. That's why we pointed out we're so concerned over the federal assistance package and whether that will be enough to have a good supportive network for our specialty crop farms as our season progresses.
Thank you. And across New York, we all are hearing about food banks and the dire need of food and goods for families to provide for themselves. I attended 2-3 different distributions, and I see long lines of people who are on these lines for the first time. While at the same time, we also hear about the upstate farmers having a surplus of consumables. The governor undertook Nourish New York to connect these two perfect partners together. How successful has this program been, and is there capacity for our farmers for further participation? Prior to Nourish New York, was there any other programs that the nature here of this nature in New York, and post-COVID, do you think these programs could be sustainable? Any one of you?
It's kind of like a who's on first. I guess I'll tackle this one first and then turn it over. I think the Nourish New York program was absolutely vital. Cornell Cooperative Extension and CALS have partnered with the agency in a number of different ways, likely trying to identify farms with surplus crops, as has Farm Bureau and I'm sure Farm Credit as well. As I mentioned in my testimony, with USDA bids not primarily going to New York-based food hubs and farm aggregators and dairy co-ops, without Nourish New York, I can say with some confidence that it would have been very, very difficult to see any more New York products going to food banks. It was really disheartening to see that first round of the Family's First Food Box Distribution Awards. So Nourish New York has been a great initiative. Prior to Nourish New York, there's also the HIPNAP program, and I may get the acronym slightly off, the Hunger Prevention Assistance Program run through DOH. That's been really successful. Cooperative Extension runs a gleaning program with local farms that donate straight to food banks and community food assistance programs in the Hudson Valley. And that HIPNAP program has also helped facilitate purchases by food banks of fresh fruits and vegetables. I don't know what the current funding level is, Senator, but I can look that up and get that to you. But that's been a way that New York State has been leading the way, frankly, and matching local food products or local farm needs into the food assistance programs. Programs like that have been really helpful, demonstrated economic impact, as has the Farm to School program.
Thank you. Assemblyman Sturpey, you're next.
Thank you. I'll take this myself, and I don't want to tire you out, Julie, but I was reading your written testimony, and I thought it might be interesting for you to explain to everybody the problems with this CFAP direct payments and the fact that they want to give out 80% between January and April, I think, and then 30% after that, and how that affects New York.
Yeah, that's a great question. I'd be curious on Tom and Lauren's thoughts on here too. For the dairy industry, clearly that will be an appropriate program. But for other sectors in New York State agriculture, it's really a complete gray area. And as Lauren's already touched on, both ornamental horticulture and equine and aquaculture were largely also shut out of some of these programs too. But if you're weighting the assistance towards a price loss between January to April, that means other regions of the country that are already in production, California, et cetera, Florida, where you've seen kind of these images of dump crops rotting in the fields, which is not a good situation for anyone. But those farms are going to get the higher level of assistance versus when our farmers start to come into production and start to sell, we're at that 30% of the price coverage, loss coverage. So that's going to have a very real impact on New York State specialty crops farmers, and potentially a detrimental one, particularly as we don't know how long that 16 billion will last. Sounds like a lot of money, right? 16 billion, but when you divide it up throughout the entire country, we're just not sure what the impact will be.
And maybe if I could weigh in on that one too. It's a good question. I agree with Julie's comments. Yeah, I mean, a couple different things. You know, one of the things, points I wanted to make in my testimony is that, you know, because EIDL and PPP really weren't set up well suited to agriculture. I mean, I think it's extremely important that CFAP is simple, that it's simple for producers to apply for, they understand how much they can get, and to be able to get the assistance out quickly. I think that's really going to be critical. I know the Department of Ag and Markets, Commissioner Ball, they've done some analysis as to the relative amounts. There's allocations within that 16 billion, and the 2.9 billion for dairy, I think, as Julie's alluded to, partly because of the formula, et cetera. You know, that may not go that far. And so that is a real concern. I think another one to keep in mind is an issue that I've heard relative to, there's 5 billion allocated for cattle assistance. Well, the sale of dairy cull cows for beef is an important revenue stream for dairy producers, and that's another market that's been impacted both from the marketing as well as the price. So I think those are all things that are to take into account.
Okay. Also, the PPP, I mean, the 75-25 split on that, and how the seasonality in New York also affects that, because it's going to run out at the end of June. And, you know, then all of a sudden you've got to have all hands on deck. Is that really set up in any way to sort of mimic the way that New York farms operate?
No, that's a good point, Assemblyman. You know, they did make some provisions to that produce, you know, because basically the PPP was based on your monthly average payroll times 2.5. There were some provisions of being able to look at a smaller slice of the year other than the full year. But depending on your business, you know, especially in New York, that wasn't a good fit. And I do think that, to your other point, and I heard this actually in the previous panels as well, is that you know, the time frame by which you're trying to bring employees on, and the time frame by which you have to spend it, and because 75% has to be for payroll, that can be difficult. You know, my understanding is that you have 8 weeks from when you get the loan, but still that may not bring many of our producers into the point where, you know, they're at their peak employment.
Right. Okay, thank you. Senator?
Thank you. Next is Senator Metzger, Chair of Agriculture Committee. Senator Metzger?
Am I unmuted? Just want to make sure.
We can hear you.
We can hear you.
All right, great, thanks. Thank you, Senator Kaplan and Assembly Members Stirp, for leading this hearing. You know, we talk about small business being the lifeblood of our economy in New York, and that is exponentially true of our farms that are feeding us, nourishing us, and are a main, if not the main driver of the economy in New York's many rural communities. And of course, their well-being affects many other small businesses up and downstream, from farm supply businesses to the restaurants that purchase their products. And they're essential businesses, but many of them are struggling. I have a few questions. I think I'll ask them just up front and just to be efficient. But, you know, for our small farms specifically, could you talk about whether federal assistance programs to date are really set up to meet their needs? And are there particular kinds of assistance that our farms need that they're not getting? You know, for instance, you know, I know farm worker housing is a big issue in this during this crisis, just keeping, you know, basically reducing the risk of transmission. There are certain costs like that that I think are unique to agriculture. Secondly, the New York Nourish program, or Nourish New York program was mentioned. It's a great initiative. I am extremely concerned. I mean, we haven't seen what's coming out of this $3 billion program through USDA, but there's not necessarily a connection in that federal funding between where the program is sourcing its food and where it's being distributed. And I'm just wondering if our panelists feel it would be more beneficial for us to look to increase funding for state programs so that we can expand programs like Nourish New York rather than try to tweak the USDA programs to better meet our needs. And then just lastly, if we have time to get to it, Julie, you mentioned at the start, the need to really strengthen our regional food systems. And this is an opportunity, I believe, as we're coming out of this crisis, to invest wisely and really really strengthen those systems. And if you want to say a few things about how we should be investing that money, and I think we should really be re-examining how we're using our economic development funding in New York with an eye to that. So why don't we start with the first question? Oh, go ahead.
Well, I'm just going to make a quick comment. I want to turn quickly to Lauren and Julie for theirs. I think one item relative to the USDA aid that I think is important. You mentioned small farms. I also think many of the producers, as we've all discussed, are ones like specialty crop producers and others, or maybe ones who've not often gotten USDA assistance. Mm-hmm. So I think that's going to be real critical how that's done, and that's got to be thoughtful. And and I think they got to find a way to make direct payments to folks who have suffered this economic harm. But why don't I pass it to Lauren or Julie for the other parts of your question?
Yeah, so I think when it comes to small farms and any farm in general, I think we're really curious to see how that CFAP program is going to provide enough payments to them. I think the letter that Ag and Markets did to USDA kind of highlighted the critical need that even for our small dairy farms, the CFAP program was only going to cover about 4.6% of production losses for farms, for small dairy farms, when actually their production loss is closer to 16%. So I think that's a major concern for all of our operations going forward. In terms of farm worker housing, that remains to be a concern. Our county farm bureaus have been working with our cooperative extensions and the county health departments to try and identify in the county health department plans, if quarantine housing is needed for those farm workers, what locations can be utilized for that. So there is a lot of proactive things happening. We encourage folks to keep utilizing the county departments of health and CCEs to help with that. And I'll let Julie talk kind of about strengthening that, regional food system as well, which I think, is a definite thing that this pandemic has brought to light.
Yeah, I agree. And Senator, I just say that I hope if we learn nothing at all from this crisis, then the experience of so many of us have now had of walking into a grocery store and finding either a limit on a purchase or a completely empty store shelf, that I hope that this makes us realize that we really do need to rethink how our food system has been behaving. And I am not invalidating the wonderful efficiencies that do occur from having just-in-time delivery strategies and greater.
The time to answer the question is up.
But it's really important to invest regionally, because I think we're going to continue to see supply chain disruptions like we're seeing. And so your question on the economic development, I think is probably worthy of a broader conversation and perhaps a different hearing. But how do we actually restructure our food processors in the future so that there's more of them in New York? We have a good, robust food processing sector so that they're better supported and so that our farms can maintain more economically viable. And that is worthy of a long hearing in and of itself, I think.
We'll hold one.
Thank you, Julie. Assemblyman Sturpey.
Yes, next we have our Ag Chair, Donna Lupardo.
Thank you very much. Well, thanks, Tom, Julie, and Lauren for your testimony. It's very thorough, and of course, we will all review it in detail. I want to thank the members of my Ag Committee who are on the call, the Zoom call as well, and I'm sure quite a few of them are going to have some specific questions for you. Just so you know, we're focusing on the federal response so that we can be better advocates for you to our congressional representatives as this thing goes forward. But also we are keeping a keen eye to where the gaps are so that in our state legislative work, we can benefit you and be better advocates as well. So, Julie, you mentioned something that caught my attention when you said there were some programs that were not funded at the federal level. And I'm curious if cooperative extension is one of them. And as you're answering that question, if you could discuss how the role of cooperative extension has changed in the middle of this pandemic.
Yeah, Donna, thanks so much for asking that. And I want to thank you for your partnership. I think you've been working hand in hand, as has, of course, Senator Metzger, with a lot of our county cooperative extensions, and you know us very well. So as we've had to pivot, as everybody else has, to online and educational programs, we've tried to mobilize in a much more coordinated fashion between our county extension associations and our statewide office. We've done things that I don't think we ever would have imagined, holding distribution events for not just New York State clean sanitizer and face coverings, but also, frankly, dairy donation visits, community food assistance drop-offs. CCEs have been a very valuable part of their community. Our technical side, our statewide extension people have been giving farmers advice from everything on how to actually dispose of dumped milk, things that we never thought we would have to advise people on before, to answering a ream of food safety questions and helping to keep our food processors strong. We have a lot of food scientists who are working hand in hand, day in, day out, along with ag and markets and our food processing industry, making sure that they can, in fact, stay open so that we're able to feed people and also keep those farm supply of ingredients coming. And for those of you who have food safety questions and want answers, feel free to get in touch with me. We have a lot on our websites. But I think overall,
Julie, if I could just interrupt you, because I've only got a couple minutes left. Maybe you could send me a list. That's okay. Maybe you could send me a list of some of the other programs that whether we're not funded. Of course, I'm in regular touch with all of you folks, but I'm interested, Tom, if you could talk a little bit about how you would rate the stress in the dairy industry compared to downswings in the past, and how you see Farm Credit East playing a greater role. It was helpful to know that the funding, was not quite there for you in the beginning of this federal stimulus through the mechanisms that generally are funding farms. But how do you anticipate, playing a better role?
Right. Well, let me make a couple of questions. I mean, certainly the price drop, which, frankly, at the beginning of the year, there was a certain amount of optimism. Prices were decent, better than over the last few years. The price drop has been significant. I think two things I would point out. The price drop is going to be a big issue. And then you've got farms dealing with the disruption to their operations, dealing with workforce safety and all the things that come with the pandemic. And then you do have a fair amount of marketing disruption as well. And that's where we find the dumping of milk, et cetera, in terms of, some smaller co-ops or other folks losing their markets, other co-ops reacting by having to cut back on the permitted production of their members, all necessary steps, but making it difficult. So that's going to make it difficult. We're certainly going to work with our customers to help them through, and we have the flexibility and the financial resources to help them through. But ultimately, I think there's going to be needed some outside aid from USDA and other places.
Okay. And just a minute left. A question to Lauren about mental health issues among our farmers. Obviously, we have a very important program with FarmNet, which I'm sure farmers are using and could use to an expansion. If you could just speak to what you're seeing out there, just give the members a little snapshot as to the level of stress. They were already under a lot of stress to begin with, but now with this going on.
Yep. So as the Assemblywoman said, we really rely on FarmNet, which to provide mental health services for our farmers. So really helps in those times of needs, especially right now. So we're hearing from a lot of folks, just a lot of business uncertainty. If they've had to dump their milk, they may be receiving less money. And so they've seen a whole upheaval of their budgets at this point. So, they're looking for assistance, not only in the business side, but just dealing with, mental stress of this situation. So it's really important that we continue to fund those programs and continue to provide assistance through that program.
We will certainly try our best. Thank you.
Thank you. Senator May, you have next. Senator May?
trying to figure this out. Okay, hi, can you hear me?
Yes.
Thank you so much, Senator Kaplan, Assemblyman Sturpey, and to the panel. Hi, everybody. I wanted to thank Lauren for bringing up the PPE and the housing issues with farm workers. We've had a big problem in my district at Green Empire Farms, which is not a small business, but it's been illustrative of how when the farm workers are housed way too closely together, then you get outbreaks of the virus, and it can spread really fast. So I feel like it's raised one issue for me that I hadn't understood before, which is the extent to which multiple agencies are involved in overseeing things like farm worker housing. And it's the Department of Health, it's the Department of Health in the county, it's, you know, there's also the Department of Labor, there's also Ag and Markets, and it gets very confusing, and you get a sense that nobody really feels a sense of responsibility. So do you have ideas about how we can do that better at the state level?
Yeah, so we've, been working with Department of Labor since they've kind of taken, kind of the step on this. But if there's a way to create, clear guidance through Ag and Markets and Department of Labor, as well as Department of Health, I think that would be helpful, especially as we move forward. If anybody does need to provide quarantine housing, of here are, the 10 steps you should take, and having something just streamlined would be really helpful. And we continue to get information out to our farmers as much as possible of here are the guidelines or things you should be following. And I'll put a shout out to the Cornell Ag Workforce Development. They've done a lot of good guidance on employee safety and just, information for our farmers to provide to their employees.
Thank you. And because I chair the Commission on Rural Resources, I'm thinking about the whole kind of context within which our farmers work. And one thing that we're very keenly aware of is the discrepancy in the number of lawyers, legal representation that's available to people in rural areas compared to urban areas in this state. And I don't know if any of you has comments about that, but it feels like something really important, and we're starting a real push to advocate and pass some legislation about that. But I would love your input, any of you, Julie, Tom, or Lauren.
Julie, do you want to take that one?
I know this has long been a challenge, and Albany Law School does have a Rural Law Institute, which has started to make some inroads there. I do agree, legal capacity, both for farmers and farm employees and also for rural businesses, is not as available in rural areas. It's absolutely true. You would be surprised, but it's definitely a missing service in rural areas. I would note that where housing concerns federally, it would be really helpful if we understand and can find out whether or not FEMA will help reimburse farmers for the additional cost of housing so that we can implement more socially distanced housing. So that would be something that would be helpful to gain clarity from the federal government. It would help a lot of farms.
Okay, great, thank you. And then my last question is about what we're seeing nationwide with meat packing facilities and how many problems are arising there. And so it makes me think about meat processing within the state, and whether there are opportunities to do not just local, but smaller scale meat processing that might not run into those kinds of problems that we're seeing nationwide.
Yeah, that's a great question, Senator. If I can, I'll tackle that, because the Food Safety Institute actually has done a meat-specific office hours just this past week, aiming at that specific question. And in New York State, we have more smaller slaughterhouses. We don't have the large-scale processors. And so that's definitely an opportunity to increase our capacity of smaller-scale slaughterhouses so that we can help meet increased local meat consumption demand. We are seeing some COVID-19 positive cases in some of our processors, as I think I referenced in my testimony. But again, in the actual act of processing meat, the employees are very close together. That situation isn't quite as widespread through other processing operations. So we're hopeful that through education, through really working with our processors, we can hopefully help avoid some of the large scale outbreaks that they've had in other of those larger meat packing plants, both in our local slaughterhouses and also in our other food, dairy and fruit and vegetable processors.
Great. Thank you all.
Thank you.
Okay, next we have up member Carrie Warner.
Hi, everybody. Thank you so much for your great testimony today. I have what's been on my mind is a statistic I heard a couple years ago that in New York State, we produce enough food to feed 40% of our population. And certainly over the last few weeks, we have learned the limitations of that in the hard way, that depending on a national and international food supply puts many of our residents at risk. So my question for you is, as we think about the future, what could we do as a state to encourage or to support the expansion from 40% to 60%, so that in New York, our farmers are growing enough food to meet the nutritional needs of 60% of our population, accepting, of course, that we'll never grow coffee beans, which I really depend on, and we'll never grow bananas. But of the things that are possible for us to grow, what could we do to to support the expansion of food production in this state? In 5 minutes.
So I would say probably the first one is just continued investment in technology and research. And I think, Cornell, we have a great partner there to help, our farmers become more efficient and produce crops at a more efficient level, but also produce things that we may not traditionally produce in New York, and kind of finding, technologies that would help us do that.
Thank you. Cornell and Julie, I know that at Cornell that you have a number of technologies in development that will support the expansion of the growing season beyond our relatively short weather-dependent season. What could we do to try and expand the adoption of those technologies?
Carrie, that's a great question. You've talked in actually towards some of our controlled environment agriculture facilities and our research that is going on. In New York, we've actually seen a significant expansion in controlled environment agriculture, which is basically large greenhouse operations. And I think that in order to really facilitate movement to a regional food supply chain and more of an import substitution model, continued investments in the R&D that makes those facilities more energy efficient, more environmentally sustainable, and then also that we can grow the type of crops that have the agricultural characteristics, taste, quality, freshness, and also, frankly, the ability to be grown in a greenhouse environment succeed in New York State would be great. That's certainly a growing area, and they rely heavily on investments from NYSERDA's green banks and also the REDC programs, which have been quite successful.
Thank you.
All set?
Yes.
Senator?
Senator Borrello, you're next. Senator Borrello?
Thank you. Can you hear me okay?
Yes.
Okay, thank you very much, Madam Chair. My question is actually similar to Senator May's. Not only do I represent probably the largest number of farms in my Senate district, I'm also, a restaurateur, and I was having conversations recently with other restaurants about the whole idea of locally sourced products. My question is, the conversation came up with, could we have our local meat processors and local farmers meet the standards so that they can meet the USDA standards so that they could sell into our wholesalers, our food wholesalers? Because one of the challenges for restaurants is that, while many restaurants are able to, source agricultural products themselves directly from farmers, for the most part, the vast majority of restaurants in our state go through wholesalers. And with the strain on the system that we've seen, could we have more robust process to get our farmers certified so that they could sell into those food wholesalers?
Maybe I'll take a first stab at that, Senator. Yeah, I do think one of the things that we have seen with the pandemic and the large scale meat processing has been a huge issue in terms of that disrupting the supply chain. I mean, obviously there's the health of the workers who are in difficult circumstances, but then it sort of backs up the supply chain. And you know, while I think some of the niche producers, as you referenced, I think are actually, you know, finding some good opportunities in this. You know, I do think, you know, particularly for the dairy industry, in terms of the cull cow market, you know, there's concerns if that part of the supply chain breaks down. And so I do think the ability for, you know, for smaller facilities to become USDA certified would be a huge advantage, because I do think that's a risk point right now.
Is there some kind of a protocols that could be recommended, you know, from whether it's the Farm Bureau or in conjunction, you know, with Cornell to kind of give some protocols that could be acceptable, especially in this emergency situation right now, that we could recommend and advocate for to the federal government, so we could get this done quickly also?
Yeah, and this is a tough one. So I think, you know, we haven't seen any relaxation by FDA or USDA and their food service inspection service on meat packing plants, even those small ones at this point. I think the best, you know, support we could see is, you know, can we provide resources or financial assistance to those businesses or those smaller meat processing plants that may be interested in going the USDA route, so they can, you know, market more meat or have their customers market more meat. You know, and it's definitely, unfortunately, not something that's going to happen overnight due to the way New York's meat inspection interacts with the USDA, but is, you know, if there's opportunities to kind of provide resources or help, you know, those businesses, you know, provide cost share or something, I think that's something we would be interested in as well.
So you're saying there's a bureaucratic disconnect right now between the way the state and federal governments communicate when it comes to this? Is there something that we can, as a group, advocate to, you know, to kind of break that logjam?
So, and not to get into the weeds on the meat packing, but so some states have what's called a state equivalent, which means the state does basically what USDA does. And so they're still inspecting, and that's happening at the state level, but New York has what's called the USDA oversight. So they, you know, USDA does all the inspections of processing facilities in New York.
So is there a, well, and to that end, are you saying it's duplicative and unnecessary for New York to do that? Or is there, you know, how can we streamline that in your opinion?
So New York would have to basically adopt the USDA standards for meat inspection, and they'd have to get inspectors and be equipped to do that. So there would be some, really some uptake on Ag and Markets' part to be able to do that. So that would take time.
Okay, thank you.
Okay, next up, Ken Blankenbush. Hey, Ken.
Hello. Hi, Julie and Lauren. Just a comment, first of all, is that, you know, we went through a tough budget this year, and hopefully that when we see our revenue sources coming in and what we can do to help, is that we're not going to be taking a look at reducing anything more on the ag budget. We hope to keep that where it is right now. But a lot of my members, the members have already asked questions that I was going to ask, but I have with Julie, you talked about, and other people have talked about this too, the meat processing. In my area, we have a small meat processor who is literally working around the clock trying to keep up with the demand. And right now he's seeing that the prices that he's paying for meat to come in, they're increasing, which means that he's going to have to pass them on to the consumer. And I think many of the members have already asked, why can't we have more meat processors, food processors in our area? And I just want to say that I think Julie touched on it, and maybe Lauren touched on it, is that I think that's something that when we get back in session and stuff, we should be taking a look at that. The transportation of meat coming in, we can certainly help cut the cost and the supply. So I know our and I only have small meat processors that are working around the clock. So that's something to be concerned about. The other thing, Lauren, you talked about direct marketers not having the same type of problems. Can you explain what the difference is between a direct marketer and the others?
Yep, so I will try and explain this quickly. So direct marketers, you're going to a farmer's market and selling it direct to consumer, or the consumer is coming to your farm and picking that right up. So there's no middleman who you're selling the good to, who would then sell it to somebody else. The way a lot of our, farms work is they typically would sell it to a wholesaler who's then turning and selling that to a grocery store or a restaurant or another, food sector industry. So because we've seen a lot of restaurant closures or school closures, that wholesaler doesn't have those markets anymore. So it's backing up on the farm side.
Yeah. So why don't they do more direct marketing, our farmers? Is there something I'm missing?
Well, maybe I take this part of it. The economics of it are, and again, a lot of the opportunity that's come for some producers is because just the extreme circumstances that we've had. I mean, it's hard. It's a different setup of the operation to have a customer-facing front, whether you're doing a CSA subscription type based service, or you have a farm stand. Those who have farm stands, because people aren't wanting to go to the grocery store, if they have product to sell, those have become popular. And then certainly, others who are say at farmers market. So, it's just a different structure, and I'm sure many folks are probably right now thinking, and we know many Farm Credit East customers did have kind of adjusted on the fly. They were set up for one approach, or maybe they did some of both, but they really had to adjust their operations. But we've seen a lot of ingenuity and resilience among our members in terms of who are making that adjustment on the fly. But it's not easy, and a lot of operations were set up for one and not the other.
I think a real potential exists, Ken, in the model of a food hub aggregator, right? So farmers have collaborated for a long time, but we're seeing in some of our extension efforts and private sector efforts, I'll shout out a Western New York example. Eden Valley Growers, a cooperative of 8 farmers, vegetable growers, collaborated for a very long time. They started a food hub, and now they take in product from local farms, again, more local farms, a little bit smaller than their own operations, some of them organic, some of them non-organic. And through working together, they're actually hitting more of the New York City market collaboratively by working together and sharing some of that marketing costs. So that's been a good model.
Okay, thank you. Our conference put forward a couple of provisions that we thought could help our farmers right away.
I'm sorry, the question period has expired.
That's 5 minutes already?
Yes.
Hey, Senator.
All right, thank you.
Senator Seward, you're next.
Panel that's on this afternoon. What I'm hearing consistently from the farmers in my area, particularly dairy farmers, is we don't want a handout. We want just a fair price, for our product, our milk. And I realize that particularly in the dairy area, farm policy is basically set by at the federal level. But is there anything that we can do at the state level to assist these hard-pressed farmers who have gone through a difficult period of low prices, and that we're looking to 2020 as a turnaround year? So far, it's not going to be there because of the pandemic. Is there anything we can do at the state level to provide relief?
Say that's a good question, and I think we're still grappling with that because we're understanding, there's limitations on what financially the state may be able to do for our dairy farmers. But I think continuing to provide good resources, good business planning, and how they may be able to restructure are probably the good resources that the state can provide now through existing programs.
Senator, I would agree. Because the pricing mechanisms, as you point out, are really the purview of the federal government. I do think continued state support for sort of the infrastructure around agriculture, certainly for Cornell and its programs, those are critical as well, even outside of the price question of it. And so I think really. This actually gets back to a comment that Assemblyman Warner mentioned. Sort of maintaining that profitability. In addition to some of the research and technology, maintaining profitability is one of the key things to help maintain New York's self-sufficiency in terms of food.
Yeah, I just highlight again the Nourish New York program, which we've talked about a lot. I thought that was a really innovative and groundbreaking new program of the governors and the commissioner of ag and markets. And that's going to do a lot of good for our dairy farms by actually enabling that milk to be processed into a product that then can be donated to people in need. It's a really nice example of New Yorkers helping New Yorkers.
Yeah, thank you. I wanted to jump in on the meat processing issue that's been discussed by a number of my colleagues already. But what I'm hearing from my local livestock farmers, these are basically on a smaller scale, is the actual lack of meat processing facilities in our area. And these livestock farmers are telling me that they're having to wait till 2021 for dates in terms of processing of their animals. Is there anything we can do in terms of encouraging more meat processors to service our farmers? That's part of the infrastructure that others have talked about here in terms of supporting agriculture.
Yeah, I think, Senator, first you have to have an entrepreneur who wants to go into this business, and that's first and foremost. And then once you do find somebody who develops a really good business plan and can make the supply and demand equation work, it's just really important to continue to have that state economic development assistance to really be targeted towards food processors, and expansions of slaughter capacity would be really helpful. I don't think we'll ever become a state like South Dakota with that many animals and that much necessity for slaughter facility just because of our land base. But certainly the need is there to have more local slaughterhouses available, because I think consumers are increasingly turning more and more to local farms to supply them with meat that they can feel good about purchasing. And that's great opportunities for our local farms.
And I would just say, Senator, that I think the economics on that will change with this. And that will be a more, sort of profitable, desirable investment opportunity going forward. Because obviously it does take a fairly significant capital investment for, meat processing. So,
right. Thank you very much.
Okay, next up we have Brian Mantolo.
Yes, can you hear me?
I can hear you, and I see your new beard.
Oh, thank you. Good afternoon, Julie, Tom, and Lauren. Just two quick questions. I know Chairwoman Lombardo had spoke a little bit about this. After being a farmer for 30-some years and understanding low prices, bad weather, and everything else in between, the mental health aspect of it for our farmers is very severe, especially at this time. And I've talked with Congressman Katko a little bit about this. Is there something more that you feel we could do with the federal side as state legislators to help even push this a little further along? Much like our veterans that I deal with, the peer-to-peer groups work very well. Sometimes we don't have enough funding there for them, but is there more that we can do to help our farmers, especially moving through this pandemic?
Yeah, Brian, I think you asked a good question, and I'll just take a stab at this. And I put these metrics in our written testimony, but New York FarmNet has really experienced almost over a doubling of calls to our farmer 1-800 hotline, and also in volume of assigned cases, which mean we need to provide one-on-one personal consultation for mental health challenges or for financial business restructuring advice. So we're certainly seeing the need from the farm community with our New York FarmNet program. The federal government did allocate an additional sum of money, I forget exactly how much it is, to USDA to help bolster the Farm and Ranch Stress Assistance Network. So we're actively exploring that right now, and we'll most likely put in a request for some of the grant funds. You know, they're competitively grant based, so we don't know what our allocation may be. I would share that, you know, by the time you put in the grant application and actually get the funds, we may or may not be on the other side of this pandemic. So that's always a little bit of the challenge for us in accessing some of those federal relief funds. But we certainly hope that more capacity is opened up to meet the mental health needs of our farms, and also, frankly, the agri-service community, which we're also starting to see a great deal of stress in agriculturally related businesses, nutritionists, veterinarians, etc.
And as someone, I would just say that Farm Credit East, we actually did this before the pandemic, but had made our employee assistance program open to our customers and their employees. I know that our National Trade Association, the Farm Credit Council, has a partnership to help awareness and training. Actually, the American Farm Bureau is one of the partners in that. So but obviously resources in that area are critical.
Right. And then my second question is, I know it may be more of a statement than a question. I do know that, you know, as a farmer, as a New Yorker, as a New York farmer, we feel very strongly about the products that we produce and how good we do. And I know that as a farmer, all we need is a little bit of help to continue to move us forward and to continue with our family farms, our bigger farms. And I know as a legislator here at the state level, I'd like to do more for that. And a few weeks ago, we were at a food box distribution, and the apples that we were distributing, again, I think Assemblywoman Warner said something about this. They were apples from Michigan, and I had a fruit farmer with me there, and he couldn't believe it. We took some pictures of the bags, and I hate to say this, they were nice apples, but anyways, is there more that we can do at the state level to, again, help our farmers, giving them that hope that we are going to push to use their products? And I know, you know, tying that in with the federal side, we just want to make sure we give them hope and that they have the ability to move their product within their own state. So again, if there's any thoughts that you could give us in helping us as legislators to move that from the state side, and also anything we can do to pass it on to our federal representatives as well.
Yeah, and not to reiterate this, but I think, you know, again, the Nourish New York is a great model for that. And that's where the flaw of the USDA program comes into play, because they'll purchase products from anywhere. So like you said, we'll often see Michigan or Washington apples coming to New York. So one idea that's been thrown around is providing a block grant to states. So simply USDA would give money to states to help purchase products. So that would be a way to ensure that you're purchasing local products because the state is doing it versus USDA.
And I would just add quickly, I know Commissioner Ball is you know, that's been a big priority of his in terms of getting New York products into New York City schools, working on reimbursement rates for and other things like that to help encourage that. But clearly, you know, it's an important way to be able to, you know, feed our own folks through the different channels we have, which, you know, are admittedly probably changing now with the new environment.
All right. Well, thank you for your answers. It's much appreciated, and we'll do our part too to continue to push this for our local farmers, our farmers from New York. And Chairman, thank you for the time.
Okay, thank you. Next, we have Member Mickey Salages.
Thank you to the chair as also the panelists. You know, we really see that COVID-19 is the third shockwave when it comes to the food crisis that we're speaking about. And so we know that New York is very dependent on imports of food outside of the state and around the world. So, you know, we really need to focus on making buy local, less of a tagline and more of an action that we need to do. So I have several questions, and the first question I have is, were we able to stop the dumping of the milk?
Well, I can make a comment on this. I mean, I don't know specifically right now, but it's, because you basically had a mismatch in the supply chain. When all the food service shut down, a lot of the processing plants are set up for, those particular types of products, which then are no longer being demanded. So, in some cases, there's still not a choice. Now, I think the market is changed. I know some of the processors and handlers are reacting. They're putting supply controls on their members so that you don't have that issue. Because, I mean, I heard can't remember who said it, but the comment was, and I thought it was apt, is that farmers dumping food or milk or any product is like a painter throwing away a paint, and they don't want to see that. So we got to find ways to not let that happen. And I know there are efforts underway, but I can't say that it's stopped.
Okay, so how can we coordinate the milk or any other food from any other farm? How can we coordinate it with the food banks? How can we have a closer conversation and get that direct to the food banks? And also, I know, for example, in the East End, some of the fishermen were trying to sell to the food bank, but the fishermen didn't want to disclose what prices that they want to sell at, because, they want to, of course, make a profit, which is, no problem to them. But now we have an issue of the pricing. So, can there be a closer conversation had? How can we bring all the stakeholders in the room to talk to the food banks and also the food producers so that we can, streamline it as soon as possible?
Yeah, I think, Assemblywoman, you raised really excellent points, and Tom touched on this a little bit. When we talk about trying to build more resiliency into the food system, it's really important that we look at the entire food system, not just farms, not just food processors, and not just food banks, but is working together synergistically. And I know one of the significant challenges that we have in New York agriculture in selling or donating more to food banks is the ability of food banks themselves to actually store and maintain cold chain compliance so that products can be safely held for consumers to have. So I think your question, there's many answers to your question, but we really need to think about the resiliency of the infrastructure that we have that moves food to people, so that our processors, like Tom mentioned, dairy processors, can be able to pivot much more quickly to produce the products that consumers need more immediately. I don't know if that's the right answer to your question.
Excuse my ignorance. Are those people or individuals in New York State, or do we have to ship the milk out of the state in order for it to be processed and bring it back?
We have a lot of processors in New York State directly. We do ship some milk outside of New York State to be processed in whey and some other products, but we do have a lot of New York State processors, particularly in dairy. It's one of our key strengths.
Okay. And then with regards to, a lot of the schools are doing grab and go lunch, and I'm sorry to rush it because I only have my 5 minutes. A lot of the schools are doing grab and go lunches. How are we partnering with the schools and so that we can encourage children to drink more milk? Because I notice a lot of the grab and go lunches don't consist of a beverage. So maybe we can encourage the schools to purchase the milk.
Yeah, so when, this was originally starting to happen and we saw some cases where schools weren't providing milk, I would encourage anybody who's seeing that or really connect with Ag and Markets, because that's been a priority for them to ensure that every meal that goes out to those kids have milk in it. So they're able to make connections between a lot of the processors who have milk and to those to those schools as well. I'm happy to provide that contact info for you.
Oh, excellent. And then with the food hub that we're talking about, how can we start coordinating that? Because I know that, I have a great farmer's market, Crossroad Farms, which is a local farm close to my district, and they're doing a farmer's market and it's packed every Saturday. So how can we encourage more farmers markets and connect, all these individuals to get to the food to the farmers markets?
So
I think we're probably about out of time. I mean, I would just say that that's an important channel going forward, and I think we're going to see greater interest in it for sure.
Okay. All right. Thanks. Next up, member Aileen Gunter.
Hi, can you hear me?
Yes.
Okay, so I did want to talk about something that we did, and I see Jen Metzger in front of me also, that we did in Sullivan County, and we opened a food hub. And since this virus took hold of New York State, we went to selling $4,000 worth of products a month to $24,000 of product per week, excuse me. And I think that it's been a terrible situation, but what we're seeing is that more and more people are buying locally because we can provide the food, and a lot of people don't want to go to grocery stores. So on a weekly basis, we're selling $24,000 a week, and we also do a lot of milk there. It's the A2 milk that I buy, and so we're doing it with dairy farmers, and we're also working with another dairy farmer, as Jen knows, that he has a kosher milk, and we're going to turn it into yogurt, and they do sell in Rockland and all over. So I think that, you know, because of the COVID virus, people are beginning to buy locally because they trust local. And I think that, you know, as a go forward motion, it's really been important to our farmers. And I think that it will spread throughout New York if you advertise. And it started with a little square building that no one was using. And from there, we've built up this incredible business, and it's really helping the farmers. And we do pickups, and you know, you become a member of the food hub, and each week they tell you what products you have. You order online, and then you do pickups on Friday. So it's been a pretty amazing thing, and Jen will attest to that. So I think that that's a positive thing, the only positive thing I can actually say that has come out of this horrible virus.
Yeah, I just have to say I could not agree with you more, Assemblywoman. I really think that is the significant bright spot, is that we've started to realize the benefits of having local farms.
And we did, as a community, we went down to the Bronx to try to see if we could sell some of our farm goods to the schools in the Bronx, and nothing really materialized. But as a go forward motion, I think that we should consider really selling the fresh food products. And we sell milk, we create milk, we have kosher milk, and I think that upstate will benefit, but also New York City will benefit tremendously. And that's all, folks. Do I have to turn this off?
I'm sorry, that's me. Okay. Next up is member Rodney's Bichat.
Hi,
Hi there.
how you doing? Great. I'm so happy we have representatives from the Farm Bureau. Thank you so much for all that you're doing. Very essential to our economy, our living. We know there's been some issues with, again, the transportation of the food, getting the food here to the urban areas like Brooklyn. But we have a number of opportunities to really receive those foods. We have trucks available, and we would like to receive those foods. There's potential farming markets, as Assemblymember Mikhail Solaj had mentioned, and we just need to connect. You know, we're hearing that food is being thrown away. We're hearing that animals are being euthanized. I mean, that's outrageous. And I know it's of no fault of the farmers. It's a matter of there's just issues with the whole value chain. And so how can we connect? How can upstate and downstate farms and urban areas connect? Because we need the food.
Well,
Definitely.
Go ahead, Lauren.
Oh, I was just going to say, so, you know, I think the best avenues, you know, currently during the crisis is, you know, ag and markets. We've been working through them to help coordinate, you know, the movement of food to where it needs to be. Also working with the New York State Food Bank system, trying to, you know, coordinate the movement of food as well. So I think, you know, going forward here, we can help provide those connections and see, you know, how we can use the Nourish New York program to get, you know, into the city and get food to where it needs to be.
Yeah, I think there's a real-
The only comment I was going to make, and then I'll let you go, Julie, is just that, and this actually goes back to Assemblywoman Gunther's comments about their efforts in Sullivan County, is that, I do think we got to think of kind of the support network that goes around that makes some of these things possible, whether it's the Department of Agriculture and Markets, the research and the expertise at Cornell, all those things are kind of needed to do what's being done, but especially since I think things are going to be changing going forward in terms of being able to take more advantage of that. Julie?
And I just highlight, Assemblywoman, that the state, the governor and the commissioner and the legislature has made an investment in Grow MIC, which runs the New York City farmers markets. And so they'll be opening at some point, I've lost sight a little bit as to where exactly the project is, but they'll be opening effectively a wholesale space where upstate farms can more effectively store and then sell their commodities to more people down in New York City. So I'll find out the status on that project, but that will be a significant step forward in the capacity of upstate farms to be able to supply more consistently, persistently into New York City.
Thank you. And that's with the Grow NYC project.
Grow NYC program. Yep. I think it's under construction, but I shouldn't be too firm. I'll find out and get that back to you.
Okay. Thank you so much. Thank you all for all that you're doing. Thank you. We really appreciate you all. Thank you.
Okay, thanks. Let's see, next we have Member Smolin.
Thank you very much, Chairman. I really appreciate it. Obviously, this is one of the most essential businesses in New York State, in the country. We depend on agriculture for a safe, secure food supply. It's something that we take for granted. And I think we're learning in this crisis that this is something that we absolutely need to make sure that is not taken for granted, that our response is completely bulletproof. And I'm quite determined to make sure that we don't leave any stone unturned, either now, in the near future, but also going forward. So what I'd like to ask the panel speaking now, is there any agribusiness right now that needs to have the definition of essential business changed in any way to make sure that they're able to not only get through this season, but be able to have the means going forward? Are there any businesses right now in the sector that are being left behind?
So that's a good question. And so through this, we've been writing letters to the governor asking really, a lot of our businesses, ag businesses, were covered under this, including associated businesses, because they were producing food, taking care of animals. Probably the sectors that were left out most were horticulture and equine, just because they weren't considered as essential because they weren't taking care of a food product or, a production animal, although we would say those are still essential and need to be taken care of daily. So just throwing that out there. But I think as we start to reopen, luckily agriculture is considered under phase 1 for reopening. So we view that as a positive going forward, and hoping those businesses are able to get up and running while still maintaining, the guidance from the governor.
Sure. And where else does the sector need help from the state in terms of its regulatory environment of taxes and fees that might either be suspended temporarily, or if it makes sense, permanently, to make sure that we're able to make sure that this sector recovers quickly and fully?
Oh. So that's a good question. And I think, as, previous panels have said, I think taking a look at what's been suspended and, are there workarounds to what has been suspended, and if they were able to be suspended, can we use new technologies or different things to maybe make those work? I would say on the tax front, that's going to be a big, question for our farmers going forward with property taxes, but sales tax as well. And whether or not they're able to meet those obligations as well, and any flexibilities we can provide there.
Very good. And is there anything in the recent law that we passed that needs to be looked at in order to going forward to ease the burden on farmers because of this crisis? I've heard a lot from the federal side about some of the visas that are being changed. Is there any adjustments that need to be made this season or next?
Assemblyman, are you talking about the H-2A and the H-2B visa program?
Yes, yes.
Well, that's a major concern. I mean, certainly labor, a lot of New York's ag industries are very labor intensive. Again, there's tends to be a lot of kind of chatter in this space. I mean, I think in general, the federal government is, supporting the fact that, H-2A workers need to come to the United States to help, with serve as the seasonal workforce. I heard something recently about H-2B in some of our, there's some specialized industries, I believe in equine and some of our ag retail operations that use H-2B workers, and there's some concern there that could get caught up in sort of the immigration discussion in a negative way. I mean, certainly you got to bring workers in safely and make sure, their health is taken care of, but they're essential in terms of being able to access them. So any support you can provide on that area is welcome.
Great. Well, thank you all very much for speaking today. And thank you very much, Chairman, for the time.
Okay. All right. That concludes that panel. Now we'll move on to the next one with restaurants, hospitality. And on the panel, we have Scott Wexler, Executive Director, Empire State Restaurant and Tavern Association. Mark Doerr, President, New York State Hospitality and Tourism Association. And Andrew Riggi, Chief Executive of New York City Hospitality Alliance. And could we get started with Scott?
Thank you, Assemblyman. Before I get started, I too wanted to acknowledge Senator Skoufis and Senator Seward's return. We're glad to see they're healthy and well and look forward to working with them in the future. And I want to thank you for the chance to present feedback on behalf of our members on the federal response to the COVID-19 pandemic and whether the federal assistance provided was adequate and accessible for small businesses across New York State. And the short answer to your question is no. And this is particularly true for our members. As the members can see from our written testimony, as implemented, the Paycheck Protection Program presented many challenges for small businesses, but particularly for restaurant and tavern owners. Our primary complaints were the 8-week loan forgiveness provision and the requirement to spend at least 75% of the funds on payroll costs. You've heard about that during the course of the hearing so far today. Well, those and a number of the other flaws in the PPP would be fixed by the HEROES Act, which was released by the House of Representatives yesterday. And we wholeheartedly endorse this proposal and urge its quick approval by the House and Senate. Another program our members have been working with is the EIDL program you've been talking about. It's a good program. It's an attractive loan vehicle, but the SBA messed it up by changing the rules administratively. And if they would just let the program work as intended, that would be an additional benefit to our members. The other suggestion I hear quite a bit from our folks is to require insurance companies to cover their losses under the business interruption provisions of their insurance policies. Congress is considering legislation that would force insurers that offer business interruption insurance to cover these losses, and they're discussing backstopping the insurance industry for those losses the way they did with the Terrorism Risk Insurance Act, which was enacted following 9/11. We support these efforts to use the business interruption insurance as a means to compensate our members. And finally, if I could, while the focus of today's hearing is the federal response on the impact of small business, I did want to take a minute to express our members' appreciation for the healthcare workers, first responders, teachers, and essential workers for everything they're doing to serve our communities, and to lend our full-throated support for the efforts of Governor Cuomo, Leader Stewart-Cousins, Speaker Hasty, and all of you, you've mentioned it several times today, to obtain federal aid for New York to help shoulder the enormous cost the outbreak has imposed on the state. We've seen the headlines. Without this aid, it's hard to imagine how you and your colleagues will avoid imposing layoffs, furloughs, or other economically damaging measures on these very workers we universally hail and whose services we've defined as essential. So while we're here asking for your support for our member restaurants and taverns, we're also here to pledge our support for your efforts to make sure our fellow New Yorkers get the support they need and deserve. We were pleased to see the HEROES Act also provides aid for the states, and we're hopeful to provide the relief we need to keep our heroes whole. Thank you.
Thanks. Mark?
Thank you. Good afternoon. My name is Mark Dorr. I'm the president with the New York State Hospitality and Tourism Association. We represent 1,000 hospitality members in the lodging, attractions, and the tourism promotion industry. And I'd like to thank the members this morning, the legislature for allowing me to testify on this important issue. And most importantly, I just wanted to commend the leadership in New York has shown in the swift response to the actions, as we've all seen, to flatten the curve here in New York State. I wanted to kind of just kick off most of our members are predominantly hotels. And one of the misconceptions that is always out there is that they look at the flags out there that say Marriott and Hilton and Hyatt and Holiday Inn. And while those are major chain hotels, 99% of those hotels in New York State are owned by independent business people who pay a franchise fee to those big brands. So we're really in the hotel industry still talking about small businesses, usually under 50 employees, that are being run by local people within our community. And those local people make up the tourism industry in New York State, which is the third largest industry within our economy. And it supports nearly 1 million jobs with a total income of $35 billion. And as you can imagine, tourism is always at the top of every headline in the paper about its impact on our industry and the overall impact on the state revenue that is obviously going to be significant. And the anticipated cuts are what I wanted to try to zero in on in the state budget that will reflect this shortfall. And the tourism industry as a whole relies heavily on the funding to provide the tourism industry the ability to market itself and bring people into New York State and to grow the economy. And a lot of that money is in the aid to localities part of the budget, and namely the Convention and Visitors Bureaus, their marketing funds, the money for the I Love New York program. So without the infusion of the federal money, which is what we're here to talk about today, this funding obviously is vulnerable to the cuts at this time when we should be investing in responsible tourism as we make our way back and have further recognizing that it's critical to make sure the funding to promote tourism throughout the state is there. Just to give you a context of the jobs lost in the hotel and hospitality industry since we started, 120,000 direct hotel related jobs have been lost and over 500,000 jobs that support tourism throughout New York State. And historically low occupancy, as you can imagine. The impact to travel is 9 times worse, they say, than in 9/11. And the revenue, and I talked to a few of our members just this morning, is going to be more than 50% decline in the hotel industry. And this is going to be across all sectors, but being such a huge economic driver, I just wanted to give you some context of how tourism is going to fare going forward. One of the things that we were asked to do today is to help educate and talk about what you can do as a state legislator to support our efforts. And a few of those are to continue to advocate at the federal level for funding for our state to help defray the expected cuts to, as I mentioned, our aids to localities, which helps with our marketing and promotion. The other thing, we've talked about it over and over for several hours now, is the assistance in advocating for changes to the Paychex Protection Program, maybe going from 2.5% of the payroll to 4%, and expanding the loan repayment, which was one of the initial things talked about this morning. Another thing is your support for the Convention Visitors Bureaus, again, that are not, and I know that it was mentioned by the Business Council, those organizations are not able to get the PPP program. So for us, those Convention and Visitors Bureaus that promote and bring people into New York State when the tourism industry in the state opens up have not been available to get the PPP program. And they've had to lay off almost all of their staffs, and trying to bring them back later on is going to be difficult. So if we can get that money in there, that would be one of our big requests to have those C6 organizations included. And through all this, we continue to be encouraged again by the governor's commitment to tourism and the responsibility that tourism is going to play in our economic recovery as we open up and welcome visitors from the Northeast at first back to our great state. Thank you very much for your time and consideration.
Thanks, Mark. Andrew?
Yes, thank you. Good afternoon. Thank you to the chairs and all the members. My name is Andrew Ridgey. I'm the executive director of the New York City Hospitality Alliance. We are a not-for-profit association that represents thousands of restaurants and bars and nightclubs throughout the 5 boroughs. However, we recognize we are part of a statewide ecosystem. Our restaurants are serving vegetables and fruits and beers and wines that are produced throughout the state. And our industry is in crisis. We are in so many ways the fabric of our communities and the economic backbone of so many neighborhoods, and we employ people from all walks of life. As far as the PPP goes, many of the speakers were just so spot on. We need a longer period for loan forgiveness. We need more than 25% of that loan to be able to use for rent, utilities, and other expenses. So we support all of that, including the monies for 501c6 not-for-profits that are really the conduit between the business community and government in so many ways. But Scott Wexler made a great point. Business interruption insurance claims. This is something being addressed at the federal level, but there are bills in the state Senate and Assembly that would get insurers who are now denying claims for restaurants that have been paying their premiums for years when there's a business interruption. And I won't get into all the nuances at this point. I'm happy to answer questions, but we really need to get these premiums paid, these claims paid out. The insurance industry has an infrastructure to timely pay claims. We wouldn't have to invent the wheel, whereas we know you create a new system, there's always unintended consequences. The system's there. We can get the claims paid. That would help with rent, which some of the small business owners said earlier is such a big issue because it's a fixed cost. So even if you're not open, you're still paying your rent. And there's no way small business owners are going to be able to pay back multiple months of missed rent. Also, this is something a little New York City focused, but it's also really throughout the state. If we open under a reduced occupancy, we will need to reimagine how we use public space, streets, sidewalks, plazas, parks, to set up restaurants outside. We think the health benefits are clearly there, gives consumers a peace of mind, also helps to bring a little bit of vitality and energy back to our state and our city and all of our towns. And I think it could be an incredible way to help generate additional sales outside that are going to be limited indoors because we will likely have some reduced occupancy and need to have social distancing measures in place. Another thing that's going to be really important is there's this thing called the 80-20 rule in New York State. And basically it prevents a tipped worker, like a server or bartender, from participating in a tip pool if they work more than 2 hours or 20% in a non-tip capacity. And it's been problematic for years and resulted in lawsuits and other challenges. And it also is bad for workers because they don't often get the ability to learn other skills, like they're a busser or a bar back and the chef says, hey, I need you to come here and cut some carrots. Well, that's non-tip work. So if they do that, they get in trouble. But we're talking about public safety. Workers are going to have to focus a lot more on public safety when we start reopening, sanitizing, working with PPP equipment, and doing other duties that may be outside the scope of their direct tip work. So we think we can really, in a fair and equitable way, amend the 80-20 rule to allow workers to participate in a tip pool when they're working in a tip capacity, but then doing these other important job functions related to safety and other matters when they are not doing the tip work, but during the same shift. Lastly, because I see just the time's running out, is one of the things that there's been some talk about, but I think we need to focus on is getting grants or long-term, low-interest loans to small businesses for reopening. There's a lot of talk about the PPP, but for a restaurant or bar owner, it's going to be like and many other small business owners, frankly, it's going to be like opening up a new business. You're going to have to hire people back, purchase products, and do all of this. So they're going to need some money there. So with that, I'll turn over the rest of my time, but I just want to thank all of you for your incredible leadership. The Hospitality Alliance is here to support in any way we possibly can. And we believe that our industry is such a part of the state's backbone that for us to fully recover, both economically and socially, the hospitality industry needs to be at the center of that recovery. So thank you so much, and I'm happy to answer any questions.
Thank you, Andrew. Let's start the questions with Harvey Epstein.
Hi, thank you for unmuting me, and thank you for taking the time to join us on this hearing. I know we're all living in these really unusual times. I really want to focus on tourism and hospitality, and a lot of it is storefront businesses. And I'm just worried about what it means to be able to come back. So what is it, what are the lease experiences that are people having? What do we think we can do on the state level to support those small businesses who need to come back? Have people been able to negotiate with their landlord rent forgiveness? Is there something the state should be stepping in to do to support that? The second idea is whether we should be doing, like if we can't get the rent waived or get some state or city money to cover the cost of the rent, how about just allowing to be collected but to not result in eviction? And the last thing is whether some kind of city or state tax forgiveness. I know there's a budget problem, the city and state has it. Would that be at all helpful for both in the hospitality and tourism industry?
Sure.
Andrew, I know you've got doing some work on leases. Do you want to start with the answer?
Yeah, absolutely. Yes, thanks, Assembly Member, and thanks, Scott. Yes, so today the City Council of New York is set to pass, if they haven't already, a bill we've been advocating for that would suspend the personal liability provisions in leases from March 15th until September 30th. That's basically the good guy guarantee. I think a speaker earlier referenced it by. This is critically important. This means that a business owner won't only lose their business, but now they could potentially lose their home or their personal assets. This would stop that from happening. Quickly, I would say on the rent issue, businesses are going to have to move to a percentage rent, where instead of paying a base rent, they pay a percentage of their sales. This happened during the Great Depression. And there's some interesting correlations there. And I know landlords may need support because some of the mortgage agreements don't let them not collect the base rent. So in those cases, there may need to be conversations with the landlords and the banks, but I think going to a percentage rent is the way of the future if it can be done.
And any of the other panelists that want to answer that?
Assembly Member, on the tax issue, we were very appreciative that the governor delayed the March 20th sales tax payment that was due by 60 days. But of course, 60 days from March 20th is May 20th, which is a week from now. So we recognize the dilemma the state's in. Obviously, anything you could do on the tax front would be helpful, but most especially an additional delay in that sales tax payment. Our restaurants still aren't open. We can't pay the bill any better now than we could a few weeks ago.
And just another quick question, just if I can, just on this topic. So I understand the idea of the percentage of rent. How do you do that if the landlords were not willing to renegotiate the lease term? Do you feel like we should be able to allow you to do early termination of those leases as a leveraging tool in these negotiations?
Yeah, listen, I think everything needs to be on the table. I also think that this is going to start hitting landlords in a way perhaps they were hoping it wasn't. The fact is most small businesses are not going to be able to pay their rent. They have not been able to pay their rent. And I am hoping, and I don't think we can just rely on the goodwill all the time, but that they're going to start realizing soon, wow, if I want to keep this tenant, particularly if they were a good business beforehand, we're going to have to move to this type of deal, because otherwise the reality is they're not going to collect their rent. Then they're not going to be able to pay their mortgage. They're not going to be able to pay their property taxes, which I think are due in July or so. So I think there will just be pressures created that are already happening to push them in that direction. But if there is something that can be done to support the landlords through this process or compel if needed, then that makes sense. But yeah, I mean, it's going to be a challenge, but there's not going to be many businesses waiting to go fill all these vacant storefronts. And tenants can just say, you know what, you're going to push me out of this place. Well, guess what? There's a fully built vacant restaurant across the street, and I'm going to go out in there and, that person maybe give me a percentage rent. Look at legislative issues or look at sort of tax incentives I've heard from landlords would be very helpful because they want to, in those cases when they do want to work with the tenant.
Thank you.
All set, Harvey? Senator?
Thank you. I want to thank Scott, Mark, and Andrew. Your testimony was really very good and answered a lot of my questions. But one thing that I keep coming back to, I held a small webinar on Facebook where I heard from multiple business owners in hospitality-based industries and were worried that they couldn't meet the requirements of hiring back the same number of employees who were previously employed by them. Have you had this discussion with your members? Have you come up with any solutions? Do you believe maintaining this employment level will be possible during what would likely be a reduced tourist season for New York?
Senator,
Scott.
Yeah, thank you. Senator, that's one of the really important things that's been done by the members of the House in the HEROES Act. They have, because you're absolutely right, when restaurants are allowed to reopen, we're certainly not likely to be allowed to be open without the limitations. And even if we were, the public's not going to come back. Some are saying it could take as long as 2 or 3 years to return to old levels of business. So one of the things that the House has done in the HEROES Act is to extend to the end of this calendar year when we would have to expend the PPP money. If that's passed, that's really important. That gives us much more runway. But also, Andrew and I and Mark and others in the industry have been pushing for a special package out of the Congress focused on restaurants and the unique needs of restaurants, just like was done for the airline industry and some other industries. We're not the only one that have this kind of a unique situation.
Yeah, on the employment question, our members again are predominantly hotels, and they were deemed essential from the beginning, so they've been open to unless they chose to close. But that is the biggest thing we hear from our members is even when people start traveling, they're not going to be up to full capacity or have their employees. They might have 50% of their employees back by the end of the year. Because it's going to be a slow summer, slow fall. So that's going to be a big concern for a hotel. They're not going to get there. And on the PPP also, bringing them back to the extent where they'll have the loan forgiven, they're not going to get those employees back in time because there won't be the work available. Even at 50%, they're not going to be there.
Thank you. Back to you, Assemblyman Sturpey.
I think that's all I've got, so you can move on to the next senator.
Okay, Senator Krueger is next.
Hi, everybody. I really appreciate the testimony. I know I've been hearing a great deal from restaurants and hotels in my district, which is Manhattan. So I'm curious. I do think landlords will be willing to negotiate some kind of different deal because they also know it's going to be a much slower time for commercial, much slower time for retail of all kinds. And I'm curious, when you referenced, I think Mr. Riggi referenced the idea that this has happened before, was it sort of a plan that was put together with government, or did just individual restaurants and individual landlords make these kinds of deals? Is there actually a model we could look at to help, at least particularly in our cities?
Thanks, Senator. I'm not sure if there was a model. I went back and our team did some digging in the New York Times archives and elsewhere, and we just found articles that this was the thing to do during the Great Depression. They were trying to figure out how to survive. So I'm not sure, if there was a formal process. I'm also presume maybe some of the mortgage agreements were a little bit different. But I do think, based on conversations that we've had with the real estate community, that many of the landlords, they get it. We are all in this together. It's a very unprecedented, unique situation. So I think if we could incentivize them or address their issues, such as what would have to happen in their mortgage agreements to permit them to do a percentage rent, that would be very helpful. And I've heard discussions about, you do a lower base rent perhaps, or 7% of sales, whichever is greater. So you could almost even do a combination of it. So I think there does need to be flexibility versus, if it's a REIT versus if it's a small, neighborhood landlord or something in between the two.
Right. And that may play out differently in the cities than in others.
Correct.
Next question for any of you, the three who testified. I am very concerned that we shouldn't reopen the restaurant unless we have a really solid new set of policies about how people keep distance from each other, how the people who are working in the restaurants, are protected from the visitors and vice versa, how the food standards for safe handling of the food is followed. And I'm wondering whether you all in the restaurant industry have been working with anybody at Department of Health to come up with new guidelines or mandatory guidelines for at the time of opening, these are the rules of the road, because I think we have to do that.
Well, Senator, we would, as an industry, not be doing our job as a hospitality sector if we weren't doing those types of things. And I will tell you, and at least in my capacity with the Tavern Association, I'm spending many hours looking at resources. There's been some really excellent work done by the CDC and the FDA on this. Of course, if the president would allow it all to be out there. One of the interesting thing was that the interim guidance for industry that got a lot of attention last week for being quashed actually had been published, at least the guidelines for industry, and we had seen them and were basing our preliminary proposal or recommendations based on them. They're outcome oriented, so they have mandatory outcomes, but provide flexibility because of the recognition that different types of establishments work differently. But they cover areas of employee wellness and protection, of cleaning and sanitation of restaurants, of social distancing, signage to communicate, and also, we think most importantly, an element on contact tracing, so that as we do go back and eventually there are outbreaks and we have to get ready for that phone call, both to the restaurant and to the customer, we want to have that. As a matter of fact, today I reached out to the Department of Health to start working on the contact tracing element. We are expecting ESD will come out with that. There was some discussion about that earlier today. And we certainly hope they will put that out. Our restaurants need that guidance from the state and federal government.
Exactly. I mean, we all need that guidance to have the confidence that, that we can allow you to reopen and that it will go well for all involved. So thank you. I think I would be very interested in knowing if there's some way the legislators can help in that process if for some reason the Department of Health or whomever seems to be moving too slowly on this. Because for this set of businesses, it seems to me, doesn't matter what region you're in.
Question period is over,
We
please.
can't let you open unless we have this set up. So thank you.
All right. Next up is Assemblymember Ra.
Hi, thank you guys for your testimony. I think we all know what a central part of our state's economy your industries are. So I think you're a very important part of this hearing today and this discussion. I just wanted to go back to something that was said, just looking at this in the long term, going into the future. We know that different states are approaching this in different ways and talking about reopening these types of establishments with different limits on capacity and things of that nature. So I was wondering if you have any thoughts in terms of some of the temporary things we've done and whether those are things that maybe should be extended into the future, not just because of capacity limits, but also maybe people's reluctance to go out to an establishment, like off-premises alcohol and things of that nature. Any thoughts on those type of things, temporary things that we've done now that might need to be extended or might be beneficial to your members if they were extended out as you're allowed to reopen, even for on-premises use?
Yeah, I mean, I would just say I think many of what has been extended, should all be considered to be extended because again, we don't know when we will get back to a new normal. I do think as far as the kind of occupancy goes, that's going to be, a big issue. So businesses are going to have to think creatively, as do lawmakers, about how are we going to generate that additional revenue while consumers' purchasing behavior is still unknown. When are people going to be comfortable going out and eating and drinking out? So I think, again, everything that has been done without looking at the whole list should be under serious consideration. But I do think the outdoor dining aspect is going to be the only way to really help generate that additional revenue.
Assemblyman, the point Andrew makes is very important, and it's going to be part of our request to the governor's office. I actually reached out to the State Liquor Authority this morning to give them a heads up, so I feel like I can comfortably share it with the panel. The cocktails to go has worked out very well, and we're going to ask for that to be extended as long as there are restrictions on us. And Andrew just mentioned seating. Senator Krueger asked about social distancing and spacing. We're going to have to reimagine our establishments. Restaurants can't survive on 25 or 50% capacity and customers long term. So one of the things we're going to ask for is to allow us to temporarily extend our premises, set up seating in outdoor areas that aren't currently licensed. This has to be done in conjunction with the localities to make sure that we're not violating zoning rules or also creating nuisance problems for our neighbors. But some flexibility so that a restaurant or a tavern can provide the social distancing without losing half their customer base.
Yeah.
Yeah, for our smaller members, the alcohol to go, which was mentioned, was big for some of our smaller inns, smaller B&Bs that have a restaurant within it. Able to do that was helpful to them. So again, I think that's one of the things that may be able to be looked at long term, because I know that helped with some revenue for some of our inns and B&Bs who were out in the wine country and could do that type of thing. I think that was beneficial for our folks.
Okay, great. And thank you. That point about outdoor seating, I think, is a very important one. I know we're already seeing some local governments kind of start to talk about that. Our town, the town of Hempstead, which I represent a portion of, was talking about streamlining that process for that very reason, because if you can extend the amount of space they can put tables, you can even though the capacity is reduced, you can get much closer to what would be a full capacity in terms of revenue. So thank you for your continued efforts on behalf of your industry and your testimony today.
Senator.
Next is Senator Serrano.
Oh, hello. Did you say Senator Serino?
Yes. I'm sorry.
Oh, sorry. No, that's okay. There's three of us that have similar names. Thank you, Chairwoman. And I'd also like to say thank you to Scott and Mark and Andrew for a lot of your great ideas. And really, it's time for us to all think outside of the box. I spent most of my life working in the restaurant industry. As we know, it's a huge economic booster, not only for tourism, but our local communities as well. It is our local community. We already know that they will be part of the last phases, and my heart goes out to the business owners and to the employees, a good portion of which we know live paycheck to paycheck, that we've been helping with unemployment, which is the debacle. That is a whole nother story. But there's already a lot of talk about the federal money should not be used if a business cannot hire back everyone they laid off, as Senator Kaplan said. And I understand that. But when it comes to the restaurants and the other hospitality industries who are going to be required to host smaller capacities, whether it's 25% or 50%, how do we justify that? Do you think that there should be funding specifically for those businesses that cannot come back at the 100%, 50%, knowing that they cannot hire all of their employees back? And another part of my question is, in many cases, the hospitality sector is setting the standard for health and safety, and what we know now from that industry can actually help use to develop best practices for other industries. I also understand that the National Restaurant Association is currently offering Serve Safe training, and I believe it's free right now for the folks to take. And are you familiar with that? I know it's a few-part question, Scott.
Senator, thank you for your question. On the funding issue, both the National Restaurant Association and a group called the Independent Restaurant Coalition, which was started by a bunch of restaurateurs, including Tom Colicchio, who owns a bunch of restaurants down in New York City. They're seeking a federal fund to do the kinds of things that you addressed. And it has a number of, I don't have the summary at my fingertips, but it has a number of different elements that would bail restaurants out. One of the reasons, and I do recognize the impact on the insurance side of this, but one of the reasons that we like the business interruption solution is it really gets money to restaurants quickly and in a controlled way. But we do have to backstop the insurance industry. I think you're right about the restaurant and hospitality industry having a good track record on cleaning and sanitation as a rule. Obviously, there are exceptions. And I think we will do a good job maintaining sanitation and cleanliness, but we do need a cooperation of our customers. Some of the establishments that are open right now, the retail, convenience stores, and others are having a real problem with occasional customers refusing to socially distance or wear masks when they're not socially distanced. So the only way that we're going to be able to open our restaurants up and not have outbreaks break out throughout Dutchess County, Manhattan, wherever, is if we all kind of work together on this. We pledge to do that. I know that Andrew and Mark and their associations are doing the same thing that we're doing. And yes, I do believe the Restaurant Association is offering Serve Safe for free, and that's available through the NRA website, which is restaurant.org.
If I would just add this, I would just say Serve Safe is a very good curriculum. In the city of New York, however, our health department that regulates the restaurant requires that you take your own certification. There are some instances where they allow that curriculum to meet their standards, but you still need to then take the City of New York's food protection course. I'm not sure if other jurisdictions throughout the state have that, but those are all very good courses. And we need to, again, make sure that it's not only the business, but also the consumers that understand what the expectations are when they go in. Because the last thing we want is restaurants to open to only then have to close again. So we want to get open as soon as we can, but we don't want to rush it, and we want to do it as best as possible because we feel like we really have one opportunity to get to it.
And I agree. And I think you had mentioned about the alcoholic beverages too. Would it help for the restaurants because you have to do the safe distancing now? You know, sometimes you can only have it at maybe in a certain party. You can't be outside. Would it help if we lessen the regulations, right, to offer it to be spread out a little bit more so your clients?
I'm sorry, the question period is over.
Oh, thank you.
That's a tough moderator.
Good, I like it. But thank you. The answer is yes, it would be helpful.
Assemblyman, you go ahead.
Sorry about that. Up next is Yulin.
Hi, thank you so much for taking the time. Again, I just wanted to say that, first off, it's been a very long hearing, but I just wanted to say thank you for everyone for being able to speak. Just very quickly, again, Chinatown has been hit really, really hard in my district, for example, and a lot of our businesses are obviously restaurants, sit-down restaurants, dine-in restaurants, and some restaurants are already telling me that they can't survive because, obviously the effects of COVID-19 had hit my district in a particularly difficult way because there were two epidemics happening at the same time. One was, of course, the virus itself, but the other was racism and xenophobia. And the racism had caused for our district to lose a lot of foot traffic, and this was in particularly difficult times because it was during our Lunar New Year holiday that, around the world there was, before even the United States had a single case, or before New York had a single case, there was reports of COVID-19, and folks were already avoiding Chinatown due to racism, not due to the actual virus itself. And there was less foot traffic and loss of sales by about 50%. And I just wanted to see if you guys had any thoughts or ideas for small businesses like Chinatown that have already used up their entire runway starting January, February, and now going into June almost. They're shuttering and they're shutting down, and there's no all of the difficulties that you've talked about when it comes to rent, when it comes to the hardship of starting up again and shutting down again. These are all on their minds, but it's exacerbated and amplified by many months. And so kind of wanted to see what your thoughts were on what they can do right now, and what are things that our state can do to help especially the ethnic enclaves with their small businesses when there is a difficulty with language access, and none of them have gotten any of the federal or city loans or grants or help. So.
Assembly member, thank you. So I was actually with Ming down at Jinfeng a week before everything was shut down, and we brought restaurateurs in the neighborhood, and we've been speaking frequently about this issue. No, it's just even more pronounced in many of these communities. I don't really, unfortunately, have a good answer of what can be done immediately, but I really, really believe that we need to start thinking about, when we are able to reopen, what kind of just campaigns can we put in place, like was starting to happen early on, to get people to the neighborhood, to go eat at a restaurant, go visit a shop. So maybe it's even like tours, and giving people like a sense, when it is safe, of course, to kind of get out and go visit these neighborhoods that were hit even more hard than others. So I think the best thing people can do, and if they're closed, restaurants are 24/7, nights, weekends, holidays. So a lot of people now find themselves with free time on their hands for the first time. They can start thinking about, how can we do some sort of community campaign to specific neighborhoods. We have our commitment to help work on that. And if we can provide any kind of advocacy, but I think these bills, whether you're in Chinatown, in Lower Manhattan, you're in Flushing, or anywhere in the state, the business interruption insurance and everything else, these are the things that need to get done, because they will have the most meaningful impact for them. And I do think the business interruption insurance, and then getting either grants to reopen or very low interest long-term loans, because they're not going to have money, and they're going to have to restock. They're going to have to hire people back. So that's going to be really important too.
Yeah,
I also think for it's going to be a confidence thing. You could go; those communities could go to the folks at I Love New York City and Company, and be proactive and say, "Here's what happened in this particular community," and go after that funding, marketing dollars that are provided a lot from state to grow give some confidence to those areas, being proactive ahead of time, saying, hey, here's why you should come back to this area to support tourism and restaurants. For all the things you said, those communities go and be proactive and make the ask.
Okay. I mean, the thing is, I hear you, and I've been one of those people who have been promoting our areas, but at the same time, you know, the big difficulty has been that they fall through every single crack in the system of asking for help and getting that kind of access to the PPP, for example, or even.
I'm sorry, the question time is over.
No, sorry.
Senator?
Next is Senator Borrello. And in the interest of time, I'm going to ask everybody to please stay within the 5-minute period. And if you can help it, please take less time. We still have 2 other panels to hear from. Thank you.
Thank you, Madam Chair. Once again, as someone who actually owns businesses in the hospitality and restaurant industry, I understand how particularly hard hit we have been. In fact, you know, in New York State, I would say our industry is probably more highly regulated than any others. State Liquor Authority, Department of Labor, Sales Tax, Department of Health, just to name a few. So, and now this industry has been hit hard by this virus and the impact of it. And you know, on top of that, we are now seeing that, you know, while some of us are surviving with takeout only, that you know, the idea of coming up with plans, and I think the plans that I've seen from our industry have been great, whether it's plans supported by the National Restaurant Association or others, or individual plans that innovative restaurateurs and hospitality operators have come up with. Well, we need to start to move forward. My biggest concern, we've already touched on the, you know, occupancy. Can you do 50% occupancy? Will that work? We've talked about all these other things, but my biggest concern right now is that our neighboring states are going to move forward. Already where I live here in Western New York in the Southern Tier, Pennsylvania is already open. And those restaurants that were surviving with takeout are likely going to now suffer as people have choices to go into restaurants in other states. As far as the hospitality and tourism business goes, we're going to now see New Jersey likely go opening up its tourist destinations, its beaches, and so forth this summer, and that's going to further strain our industry. And I just like to ask the panel in general to talk about the fact that you know, while we can have somebody crowd people into a Walmart and people walking up and down aisles, brushing up against each other, picking up the same box of cereal and then putting it back on the shelf, we can't have people responsibly socially distanced at a restaurant. And how can we advocate for that to happen?
Thank you, Senator. What we think is the best we can do to accomplish that is to put together a strong plan that our member restaurants can implement, so that their customers will see that it's safe to come back into our restaurants. We're looking at some research data which shows that, frankly, the vast majority of the public is not ready to dine out. And you see in some of those states that have already opened and allowed restaurants to open that the public is not coming out. In fact, many restaurant owners haven't opened their restaurants. So we think we need to work on a plan with the state that will require restaurants and other public establishments to have the kinds of elements that we discussed earlier, so that the public will feel safe. And then we can open our doors and welcome our customers in, and they'll actually come. So we appreciate your support. We agree with you. We need to open soon, but we need to open safe, and we need to stay open, not be open and then be closed again.
Well, I totally agree that it should be and can be done safely. But I also I feel like as of right now, you know, the plan is just kind of you know, arbitrary on the part of the state, and we've had, you know, we had a punch in the gut before we left Albany with new mandates, including you know, the new paid sick leave that was going to hit our industry and all small businesses hard. And I think that's you know, we haven't been doing any favors in Albany for this industry or any other small business industry as well. So I think we need to certainly look at how we can relax some of these regulations that were hurting the industry before COVID-19 and are certainly potentially devastating going forward.
Thank you. Assemblyman Sturpey.
Yes. Next up, we have Tom Abenadi.
Thank you again. Thank you all for joining us this afternoon. You've all highlighted how the hospitality business industry is really different and requires some special treatment. I'm the chair of the banking committee. In 25 words or less, what would you tell my committee to do to help you? What approach should we take with respect to the lending industry in New York? Give me some quick guidance on where we should go from here until things get back to normal.
Well, I can talk from the hotel perspective because they all, they really don't, like the restaurants, lease their buildings. Our members own them and have mortgages on them. And one of the things that I get the most calls on is there any way we can get some mortgage forgiveness and put the payments out a little further? Again, it would probably be working with their local banks, but that's been their biggest concern, that they, the sales tax deferral has been great, but I think just on the mortgages, they, like I said in the very beginning, our members are local community people that own the hotels. The hotels aren't owned by Hilton. They pay a franchise fee to them. So the local mortgages, when they're looking at, we had a hotel that is in Saratoga, just for an example, is they're already looking in August with mortgages on some of their buildings. They're going to do, the last August, they did 1.5 million. This year, they're projecting they're going to do about 300,000. So you're looking at $1 million in 1 month in August that they would pay their mortgage with. So any type of mortgage relief or help or
just move it to the back end. Or just move it to the back end. It's a period of time and say, we'll put it at the other end rather than that.
That would be and they've talked to us about that too. That would be great. Just until they're back up, even running 75% would be welcome.
And I would just add to that, I think we're going to have to restructure mortgage payments. One thing that I always try to reiterate here is that we have to make sure that any benefit that is going to the banks and to landlords, a proportionate amount is passed through to the commercial tenant. And I know these can get complex because all the different agreements are structured differently, but whether it's tax relief or some sort of benefit, everything in my opinion should, or I say in our opinion, is that it needs to be proportionally passed through. So if there is mortgage forgiveness, that proportional amount needs to be passed through to the commercial tenant, because they obviously are the ones that are right there on the ground. And, I don't think the top floor tenants come back if we have a bunch of vacant storefronts.
Okay.
Thank you. Next is Senator Seward.
Thank you, Senator Kaplan. And I want to thank Scott and Andrew and Mark for your testimony and the great information you're providing us today. I have two questions. The first is on I think Scott may have mentioned this earlier, but how important, I would ask all three of you, how important is the limiting, liability and some protection from frivolous lawsuits? How important is that to your industry as you proceed to reopen in the coming days and weeks?
I could talk to that. That was a big discussion for us on the liability aspect, because in the rollout of reopening, one of the bullets at the bottom that you needed to have as a business to be able, as part of your plan, was a statement of liability. So we had our members call and say, okay, well, what exactly does that mean as far as my liability when people start to travel and stay in hotels? We went to our legal firm and they're kind of said, well, we got to get some direction from the state on what that actually means and what people would be liable for. So for liability in a direction that would be able to protect the business owner would be very welcome. I think that was kind of the question, is what is that going to be going forward, and what do they need to be protected from once we open up and cases are still out there circulating and people are still testing positive.
Okay, thank you. Coming from the Cooperstown area, I'm a big supporter of the hospitality and tourism industry, because I know full well the importance of your industry to our economy. I don't complain in the summertime when it's hard to get out of my driveway because of the traffic, because I know it just ain't a thing for our.
You're the only one.
Now, however, this summer is going to be very quiet. We've postponed Derek Jeter's induction into the Baseball Hall of Fame, for a year, and many other activities, of course, are canceled for this year because of the pandemic. My question is to Andrew and to Scott. You both mentioned the business interruption insurance. My question is, have you or your attorneys reviewed your insurance, the contract you have with your insurers? Is this covered at all? Or is there an exclusion in your contract? Or is it silent? Can you just describe what that says in your contracts if you've reviewed those?
Good question.
Go ahead, Andrew.
So I say it falls into three buckets. You have policies that, and there's not as many, but there's policies that have virus inclusions. Then there's bucket 2 that is silent, and then there's bucket 3 that has exclusions. One of the challenges has been, and I'm not sure about the governor's order, I do know Mayor de Blasio's executive order to shut down did include language to the extent that COVID-19 has a propensity to stick to surfaces, therefore causing a dangerous property condition, which should then trigger the coverage under civil authority. So they fall into 3 different categories. I think there could be different levels of being paid out where the insurer should obviously pay out where they have an inclusion, which they're currently denying. The ones that are silent, they should pay out. And the ones where there's an exclusion, government may need to come in and backstop or provide some sort of support. But that would definitely be the best way to get money paid timely in an efficient infrastructure. I don't know if Scott has anything to add, but that's how we see it.
No, I think Andrew's got that right. And Senator, I noticed that the insurance industry submitted testimony to the hearing, pointing out that they can't, that their policies didn't cover this. Well, that's the whole point of the action Congress is considering. They would A, require them to cover it, and B, backstop them, provide the support for the insurance industry to do that. And it seems to me an incredibly efficient way to do it as well. Instead of having billions of dollars or whatever going to the state of Alaska or wherever where they haven't had a lot of impact from the COVID-19 outbreak, this will go to very specific claims where losses are demonstrated. And the insurance industry is very good about this. The insurance industry did a great job helping the state residents and businesses recover from Superstorm Sandy, and they can play the same role here.
Thank you. Next is Senator Metzger.
Thank you, Senator Kaplan. So my district represents the Hudson Valley and Catskills. And we've actually been seeing, we have huge recreational assets out here, tremendous parks. And we've actually been seeing a lot of people coming out from the city wanting fresh air. And, and tourism is a huge driver of the economy. It is the single biggest driver in Sullivan County, for instance. But there's a wide variety of businesses, like things from, we have casinos and resorts, water parks, down to, smaller B&Bs. And I just wanted to get a sense from you. You had mentioned earlier surveys had found that, people were worried about, were still hesitant to, go out to restaurants and the like. But do you see different businesses, different types of businesses facing different kinds of challenges this way? And also, are there actual, we've talked about, we've touched on accommodations that businesses may need, like zoning accommodations or build to, expand outdoor usage and that kind of thing. But is there talk about actual, physical investments that need to be made to just make the internal business perhaps safer, or can we just rely on best practices? Because that would be a cost as well to these businesses.
I think for the hotel industry, it's going to be quite a bit different than the restaurant industry as we get back into it. With the cleaning procedures, the hotels, a lot of the brand hotels have your check-in on your phone. You walk by the front desk, you're going to be confident that room has been sanitized and is clean, and you're in there, and you don't have to, sit really next to anybody to eat. I think that that's going to be different. I think in the summer and the fall, people are already starting to want to get out and go for a ride, go see. We talked as an association this morning about the parks, the historic sites, the hiking and biking trails. People are going to want to get out to those in the summer and stay in an accommodation where they feel safe within their room. So that's kind of from the hotel perspective. They think that people staying in hotels may come back quicker than, say, the restaurants where you're sitting in close proximity to somebody else. I hope not, but that's kind of our take from the hotel industry. You're right. People are starting to travel already just to get out and get some air. We have some parks here in the Capital District, Thatcher Park. Even if you go there last weekend and it's 70 degrees, there are a lot of people out just looking to get out, and they're going to do more of that as the state opens up.
I think we're going to have to, we've been doing some thought experiments, and I think we're also going to have to look at different populations. If you have a younger population, they tend to be a little bit more risk-taking, so they may be more comfortable going out to a restaurant. Obviously, as age increases, you become more susceptible to the COVID-19, so there may be considerations there. We've seen, unfortunately, I have a young daughter, and you've seen, I think, 100 or so children now or have illness. So I do think that depending the type of establishment, their customer base, there's going to be different impacts, and they may get their business back at a different time on a different time frame. So I think those are things we're going to have to think about as well, and what kind of procedures can be put in place to give these different demographics a peace of mind.
Thank you. With that, I want to thank Scott, Mark, and Andrew for your time and for your testimony and for taking a lot of these questions. I think we walk away with a lot of information. And I would like to introduce the next panel, which consists of two people, William J. Mellon, who is the President and Chief Executive Officer of New York Credit Union Association, and John J. Witkowski, who is the President and Chief Executive Officer of Independent Bankers Association of New York State. Welcome.
Well, thank you. If it's okay, I'll go first. First, thank you for including credit unions in today's hearing. I know it's been a long day. I will be brief. We just have some thoughts we want to share with you collectively on behalf of the credit union community. As you probably know, credit unions are not-for-profit cooperative financial institutions. We actually got our start back in the Great Depression when New York State created one of the first charters for credit unions in America. And our mission, our purpose is basically bringing people to a better place financially, helping them navigate difficult times. We're very active in small business lending and have been right from the beginning, which goes back well over, at least for credit unions in America, 100 years or so. Just a couple of comments on what I've heard today. I think we've heard some frustrations, obviously, about the payment protection program. I can tell you that credit unions, and I know community banks, worked very diligently, very hard over the weekends, many hours to get their customers, to get their members approved, to get the money that they needed in order to get their employees employed or continue to keep them employed. I would suggest that we continue to work with banks and credit unions in that regard, not try to bring it into a government-sponsored kind of an organization. Let banks, credit unions do their job. They know their members, they know their customers, and let the SBA and the government work behind the scenes to create the programs and help people move forward and help small businesses move forward. Quickly, we just have three suggestions. I know today's program hearing is based on looking at the PPP program.
I'll do that.
those
Thanks.
types of opportunities to go forward. But again, I think the PPP program helped, but in some ways it doesn't help. And we've heard that from some of the witnesses today. Small businesses need the opportunity to use funds in different ways. Unfortunately, during a recession, a depression, small businesses just reduce staff. That's just the way life is. It's unfortunate, but it's true. So we're proposing, number one, that the state consider creating a pandemic government guaranteed loan program for small businesses. Again, created by the state, but administered and facilitated through banks and credit unions. It would not be a forgivable loan program, and it would not be specifically related to keeping people employed. But it would give them, and we heard that from some folks today in the restaurant business, give them some better flexibility, greater flexibility of how they can open up their businesses almost from a startup situation. There would be underwriting criteria. There would be documentation requirements, which obviously did not apply to the PPP program. But there would be some type of guarantee that if the bank or credit union cannot collect that debt, even though it was made prudently, that the government, the state would come in and help that financial institution whole. So we think that's something that I know we have a lot of budgetary concerns here in New York State, but I think it's something that really, if we could find the funds to do it. Again, it's not a grant, it's not a forgivable loan, but it's a guaranteed loan that the state would make through their banks and credit unions. And the other two suggestions are really focused on credit unions and how we could help. Number one, we have state chartered credit unions in New York State. Because of the structure of credit unions, they're restricted as far as their field of membership is concerned. We're proposing that, at least on a temporary basis, remove that field of membership restrictions and allow New York State chartered credit unions to help any small business, any consumer that lives or works here in New York State, operates here in New York State. For example, if you're a state chartered credit union, you have New York City in your municipality as your field of membership. If there's a company in Westchester County or Nassau County that you could help, why not give that credit union the opportunity to extend services to that entity, that small business? And then third, and we talked about this, Assemblymen and Senators, for many, many years, but give municipalities the option of using savings and loans and credit unions for their banking needs. We can show you that by doing that, we can save taxpayers money. We can help municipalities get a better deal when it comes to handling their banking needs. Now's the time. We know what school districts are looking at. We know what cities are looking at. We know what towns are looking at. But why not give them every opportunity to see where's the best deal that they can make for their banking needs and let them move in that direction? Again, we've been talking about that for many years. Many states have already adopted that process. And again, we can, from a credit union perspective, we can show you that in the long run, we save taxpayers dollars, we save municipalities money. And again, those kind of little things will hopefully help this state move forward. And I can tell you that credit unions in New York State were very active in the PPP program. I mentioned that before. We ranked, SBA tells us we were one of the most, we dispersed more PPP loans than almost any
testimony
other
time
state,
is up.
state. So thank you very much. I appreciate the opportunity to participate.
Thank you. Next, we have Andres Thompson giving his testimony today for us with regard to the Independent Bankers Association of New York State. Mr. Thompson, please, you have the floor.
Thank you so much, Senator. I appreciate it. I'm pleased to be here very much representing the community banking industry and Ibanez. You mentioned John Witkowski. Obviously, we support communities across the entire state. A little bit about our company to give you some perspective, and I'll tell you a little bit about what we did through the pandemic so far, which should help give you some perspective as well. We're the oldest locally owned and managed community bank in New York State. We've been around 186 years. In fact, we just hosted our 186th annual shareholder meeting today. We're in 32 offices across 12 counties. We're in the southern tier, the Finger Lakes region, and across the Capital region. We serve approximately 49,000 households in upstate New York, and we've been doing it, as I said, for a fair amount of time. We have 360 employees. supervised by the Department of Financial Services and the Federal Reserve Bank. So needless to say, we're deeply connected and have deep roots into the communities we serve and have for many, many times. And obviously it hurt very much to see the pandemic take hold in our communities and have the really immediate and dramatic impact economically on our communities and the healthcare scare that's occurred. So the coronavirus has been intense. The temporary closure of business has led to layoffs, furloughs, terminations, et cetera. We've had really, really hard hit businesses. You've heard from hospitality, accommodations, tourism, the hospital, the healthcare communities, the education, nonprofits. These are our clients. These are our customers. These are the people we serve. And there's a tremendous fear of the unknown economically, but also a very real thought about making sure that our neighbors and our families and our communities are safe and healthy. So that's been really important. So like we have for many, many years, we immediately felt the need to support our communities, and we had two primary goals. The first goal was we knew the importance of providing financial services to our community. It is a backbone of our region. Access to people's money, access to credit had to continue through this process, and we were committed to do that. And we needed to do it in a way that was safe for not only us, but for our clients and bringing that home to our families. So we had to dramatically change how we did business and make sure we were still open for business. Some of the things that we did, and we've talked about it a lot here today, but we immediately waived ATM fees, overdraft fees, CD withdrawal penalties. And for those businesses and people that were having cash flow issues, we modified nearly 25% of our loans. That equaled $320 million in loans for nearly 1,000 different clients that we helped structure new payment structures to help them get through this. We helped families take on and access money through the EIP. 19,000 direct deposit payments, made sure those found the right home. As for the PPP program, obviously a lot talked about there. We were deeply involved with this, with both phase 1 and phase 2. In phase 1, we provided 405 loans and $150 million that averaged $350,000 per applicant. In phase 2, 590 loans, $36 million, $61,000 per applicant. So totally different, nearly 1,000 loans provided, on average 182,000 loans, but that doesn't really tell the story. The median loan size was $45,000. We provided loans less than $1,000. 54% of our loans were less than $50,000. More than 50% of our loans went to people who had no borrowing relationship with the bank. We worked hard for nonprofits and all the community to get the money out the door. We closed more loans in that period than approximately 3 years worth of normal originations. We had to double our staff and literally work around the clock. So it was intense and it was important, but I got to tell you, we felt great about providing that service. There were a lot of technical challenges, but we worked through it. I think the intent was fantastic. I want to thank Senator Sanders and all the public officials who we've met with, Congressman Reed, the different senator and assemblymen who reached out and provided their assistance and support. Our regulators have been fantastic, Department of Financial Services, the Federal Reserve Bank, the SBA. Tough job trying to find good intention to get the money out the door to help people in need. And I got to say that I appreciate the opportunity to be here today. I thank you for that. I'm pleased to represent the community bankers across the state and Ibanez, and I thank you for your time.
Thank you so much. Thank you for your testimony. I'm going to ask the first question. Main Street Alliance stated that many small businesses without immediate access to commercial banks continue to struggle to access aid. That banks process loans have been limiting whose application they will process. What steps are you and your members are undertaking to ensure that all small businesses, regardless of size, MWBE status, or location, have access to this capital? And I appreciate that you have actually increased your workforce and have tried to do a lot more in this time, but obviously these are small businesses that really do need our help. These are small businesses that don't have the access. So how do we make that access more readily available to them?
Well, I think that's a great question. And I think, as I said, I represent this community, but I like to think that I'm representative of banks across the state. And we have an intense interest to serve all citizens of the state and all communities and all members of our community. As we sit here today, there's money outstanding and it's available. Someone earlier today said, hey, this is a payroll protection plan, and it was designed originally for payroll protection. And now it's discussion sometimes is certain people and certain businesses have been left behind. And I think we can work to correct that. We're taking applications right now. It has slowed down. We would like to see more people apply. We outreach through our normal channels, be they chambers, community relationships, and through all sorts of our community infrastructure. I was pleased that 50% of our loans went to non-customers, non-bank borrowing customers. And I was pleased to see so many were small loans. So I think we're trying really hard on the bank side. I think the key thing is to communicate that the money was there. Now that doesn't mean that the architecture of the program meets everybody's needs, and that's a challenge, and you heard a lot about that today. So the program doesn't meet everybody's needs. But certainly there's a tremendous interest to provide the capital to those that need it and that would benefit from it. So even today, the SBA is coming out with different rulings and considerations that I think help people. But I think for this next $100 billion, I think we need to continually get the message out to those people who are maybe even smaller or less served or don't have the resources through conventional business means, and try to make sure that those people have access to the money. Because I can tell you the intent of the banking community is to provide the money to all persons. And, there was an intense frenzy for the money for phase one, and it's down to a trickle right now. Maybe a couple dozen a day, 3 dozen a day, whereas we were doing hundreds through the night on the first time. So I think there's a great opportunity to do better, Senator.
Thank you. And I join you. I hope that everyone who's listening to this hearing joins all of us to get the word out to the chambers, to all the MWBEs, small businesses. There is money available. Please go ahead and apply.
Yeah,
just pass it on to Assemblyman Sturpey.
Okay, thank you. Our Chair of Banking, Tom Avenatti.
Thank you, Al. And thank you to both of you for coming forward today. I have some process questions first. How do you determine the amount of money that a small business gets? I mean, do you look at their ability to repay? What are the factors that you look at? Secondly, how does the bank get paid? I mean, is there financial benefit to you? I mean, how do you benefit from this? And then thirdly, when we're talking about the monies being paid back, where do the return funds go? Do you give them back to the federal government, or do you get to do it again? And what about if they don't meet the conditions? Who's checking on whether they're meeting the conditions and how much they have to repay and all of that? Is that you, or is that somebody else? And then lastly, I guess, is what steps would you suggest to change this program? If I'm writing to my counterpart in Congress, what do I tell them they should do a little bit better this time? So I guess the application process, how do you determine the amount, et cetera? How do the banks get paid on this? The repayment plan here, I mean, the banks get the money. Does it go back to the feds? Do you get to reloan it? And what happens if they don't meet the conditions? And then the last one is, what should we do differently on the next round? How should the feds restructure this program to meet the rest of the people's needs? To both
Thank
of you.
Thank you, Assemblyman. I can try to take that first. It's a 5-part question. It's an excellent question, individually excellent. And I assume you're speaking specifically to the PPP loan program, not
Yes, I am.
in general. So the SBA created a process and a formula by which they would determine the size of everybody's loan amount, and it was 2.5 times a payroll number. And there was all sorts of calculations if there was a self-employed person. But in general, there were specific IRS forms that people had to supply that validated payroll amounts, and there was a multiplier effect that's 2.5 times. And then during the, you got approved by we submitted applications, and then we were approved, and you got an approval number. You had to close within 10 days, and then the clock starts. They have 2 months with which that they're going to assess getting repaid that money. And during that time, 75% of the funds had to go through or be credited towards payroll, and another 25% for other expenses, rent, utilities, mortgages, et cetera. A couple of things, the banks, one, have not yet been paid. The forms are still evolving. And, one thing about this, and it's been challenging, is the process has evolved. Even today, there was really useful safe harbor communication from the SBA today on eligibility, which helped a lot of small companies for loans under $2 million. That was great. We still don't have the forms yet to apply for the application fees that the banks will be paid, but we'll be paid a sliding scale based upon loan size. And then once the loan is in place, the interest rate is 1%, which we will get, and that's a fully guaranteed loan from the SBA. Now, another thing that hasn't been determined is how the forgiveness works and the forms work. And I think the ICBA and American Bankers have asked the SBA repeatedly for what is that process. So there's a tremendous amount, Assemblyman, of good faith here in trying to figure out how to get the money out immediately before we know lots and lots of stuff or get paid. So those are all great questions. As far as responsibility for making sure people use the money correctly or the allocations correct, I think we'll know when the SBA tells us this is how we're going to do it. And I don't know if they're going to try and wean out bad actors through that process. I really don't know yet. As we look forward, I really respect, again, the intention of everybody who tried to put together a thoughtful process. More than $600 billion in a very short amount of time. And not surprisingly, it wasn't perfect, but the intention wasn't flawed. And so I think, the mad rush to get the money out was hard. The changing rules are hard. The fact that many businesses aren't able to participate is really, really difficult. Going forward, I do think people need to communicate with their community banks. A lot of talk today about Chinatown. There's a great bank in Chinatown, Abacus Bank, I got a text while I was sitting here. Please let them know that we're ready to help people. Reach out to your community bankers. There's tremendous intent to support these communities. And I think it's a great first step to trying to figure it out, because we'll get it through.
Okay.
Thank you.
All right, Senator.
Thank you, Mr. Thompson. That actually brought a smile to my face just to hear that you're telling some of our listeners that there is a bank out there that is more than happy to go ahead and help them in Chinatown. The next question round of questions goes to Senator Sanders.
Thank you, Madam Chair. Mr. Millens, Mr. Thomas, good to see you guys again. I'm glad you guys stay safe in a difficult situation. Let me take a moment to compliment the small banks, the fintechs, and the credit unions. The first round of this PPP, in my view, was a disaster for small business, and you guys stepped up big time. I was working, as you know well, Mr. Thompson, I was working with the chair of the financial institutions, and we were working and trying to figure out how do we create an avenue, how do we put this money to the side so it will go through small banks, CDFIs, and fintechs, and it's probably well done. Probably well done. We won't know until the whole thing is over. I was speaking to Congressman Meeks, the chair, and he wants me to tell everybody that we still have $100 billion left. Go for this money. We're talking about repurposing the money, repurposing some of the money in there to get to some of these smaller places. So I would encourage those in agriculture and other places to get in touch with me, get in touch with us to see if we can figure out how to repurpose it. If you got $100 billion in, and we're shocked, we thought this money would be gone by now. And everybody who's been involved in this is shocked. Under those conditions, some of the stuff that we're talking here, Madam Chair, Mr. Chair, is actually possible if we could repurpose some of this $100 billion that's left, but we'd have to move fast at that. And that brings me to Mr. Millen, and he had some very interesting ideas. I would encourage him to get them to me as quickly as we can. I'm really interested in them. And that's it for me, Madam Chair. I'm the easy guy.
Thank you, Senator.
Thank you.
Okay, thanks. Next we have you, Lynn.
Hi, thank you so much. And I just wanted to say thank you for addressing Chinatown just a little bit. I think everybody's like very worried. And I love Abacus Bank. I think that they're one of the best institutions here in my community. And, you know, tell the sisters that I say hello. And I just wanted to, I guess, say again that, you know, what some of the other members had already said, I fought really hard for $25 million to be put into our budget for CDFIs and for the ability for community banks and credit unions to be able to have that funding to grow. I know that it came this year, which is like, you know, not ideal. It should have been like 3 years ago. We could have built a network to be able to drive some of these funds forward and try to make sure that folks have the network and the systems and the growth that you guys needed to make sure to dole out these funds in a faster and more expedient way. But we do have it now, and I wanted to kind of ask if it's helpful and if there's a way for us to capitalize on some of that growth in the midst of this. And then I also wanted to kind of follow up again with my banks chair, Tom's question on where does it revolve, or do the funds go back to the federal government? How does that work? Because I don't think that we got that quite answered. And I just wanted to kind of, you know, ask you again on that front, because I also have that question.
Well, if you want, Ms. Thompson, I'll make that. So the funds are actually dispersed by the community bank or the credit union. So as those funds would be returned to the financial institution. So whether it's a forgivable loan, then the funds would be coming theoretically from the SBA directly to the financial institution that made the loan. If it's not a forgivable loan, then the funds would be paid back by the borrower that received the loan. So again, it's credit union or bank money being dispersed out to their members or their customers, and then those funds are coming back either through a repayment program or through a forgiveness program. You know, and the CDFI funds, you know, is incredibly important. We have a lot of credit unions, particularly one fairly close to Chinatown, Lower East Side, People's Federal Credit Union.
People's.
Yeah, it's a wonderful credit union, and I know you would love them. And they're doing everything they can. They're a very small credit union, but they're one of the biggest SBA PPP credit unions in the country, believe it or not. So hats off to you and to the folks down in New York City that need it the most.
Thank you.
I just added, and then so the amount of loan that isn't forgiven becomes a 1% loan that's repaid over the term. There's a no payment window. Then I think it's 6 months, and then the 18 months it's repaid at 1%. The challenge, even though the interest rate is great, I think, is the repayment period is really short. So it's not reliable capital. You really just have to pay it back too quickly. And that is something that the CARES Act, you know, allowed the flexibility to 10 years, and they elected for 2. And I don't question that. But that's something to consider going forward. You know, you asked what else we can do. I also think it's very hard to have the clock start when you get the money and close. You have to close the loan within 10 days of getting the approval. There's this frenetic crush to get the approval and this anxiety around it. You get the approval, then you have 10 days to close, and then the clock starts to spend the money. And many of these businesses aren't even allowed to operate.
Right.
So I just don't understand why the clock should start if someone's not legally allowed to be operating. How does that work? So those are simple ideas. The 10 years is a simple idea. When the clock starts is a simple idea, and then maybe how long should the window of evaluation be open? You know, I don't think, even though we say that, you know, that the economy can now start, we realize that it won't immediately, that it's gradual and it is going to build up over time, and businesses have to spend their money wisely. So I think a plan that anticipates that and allows businesses to adapt and ramp up and serve those communities would be great. And so simple ideas, and we do have $100 billion left, a lot of money. And I do think it should be targeted to those states that have been impacted so greatly, such as New York. That's me and my parochialism, so I apologize for that.
No, I appreciate everything that you're saying. And I also wanted to just say again that I really think that like you were saying, there's so many barriers to the application itself for particular small businesses. And in Chinatown, I think the difficulty, and I'm definitely going to hit up Abacus right now, right after this, but there's the difficulty for especially our small businesses, which fall between all of the different cracks that that we're seeing that have been kind of by design implanted into the application. So thank you so much for pointing it out.
You're very welcome. Thank you for the time.
Thank you. Senator Krueger, you're next.
Thank you very much. Am I on speaker?
We can hear you.
Perfect. So this is a tricky question to ask both of you, but I'm going to. So on PPP round 1, even though now Congress admits they did a bunch of things wrong and they're trying to fix it, it turns out the big banks grabbed most of the money, gave it to the biggest people who were applying for it, not necessarily the smallest businesses in greatest need. And as we heard all day today, small businesses describe trying to get money and not being able to. So now it turns out banks made $10 billion on 2 weeks worth of work giving out the first round of PPP. And there's class action lawsuits that have been filed against the biggest banks for harming small businesses by unfairly prioritizing the emergency loan requests from their largest customers in order to earn the highest fees, because the bigger loans got the bigger fees. So we're suing, they're being sued, Bank of America, Wells Fargo, JP Morgan Chase, US Bank. One, don't you think the banks just ought to give back that money that they made on this, that $10 billion handed back? And two, if in fact they in theory fixed it for round 2, I'm really confused why there are so many small businesses who still have never heard back from their banks that they might be eligible for something. Help me understand these things.
Well, if you want, I'll take, it's great questions. I mean, I really can't comment on the commercial banks. We've read that, we've heard that. I don't think that it's not the case for credit unions, definitely, for sure. Most of the loans that we made were in the $10,000 scenario, very generally small loans. You know, what credit unions did is they didn't prioritize based on how much money they were going to make. They prioritized when the loans came, when the applications came in, and they got those loans. I remember the round 2 credit unions worked the whole weekend, fine tuning, cleaning those applications up so that at 10 o'clock on that Monday morning they could submit them and get them out. But you know, I don't think community banks and the community banks I know and credit unions, we work to serve our members, our customers, our communities. And you know, the large commercial banks, they're very sophisticated. They have huge staffs. They're probably SBA lenders, and they're probably used to all the bureaucracy that goes along with submitting SBA type loans. So they were in a position to move quickly. Whether they prioritize or not, that's an unfortunate statement.
I can speak from our experience, and I can't speak from others, but I think it's representative, and I do respect the question tremendously. And you know, so there was a fee schedule went from 5% to 1%, 1% for the largest loans and 5% for the smallest loans. And more than 50% of our loans, I forget what I said, was under a dramatic threshold, and we did several below $1,000. And I can just tell you from practice that it was not prioritized based upon size or money. I think if you've been around in business for 186 years, you do it by not making decisions that way. And I think we've operated with integrity to the people. And it hasn't been about a quick buck. It's been about an enduring process. You know, in community banks, we value all our stakeholders. And of course, there are shareholders, but they're the clients, our communities, the people that work here. And if it doesn't work for all of them, it's just not going to work at a community bank. And so I can just respectfully say that that didn't happen at our bank, and I don't believe it happened really anywhere. The reality is that the biggest institutions have the most sophistication. Those big companies are fairly sophisticated and understand how to get through a government process, and they use those resources to access money. Now, by definition, you couldn't be a company that had more than 500 employees.
Right.
They defined small business. Again, all imperfect, but I think good intentions in a very challenging situation.
I know it wasn't a question necessarily addressed at your two entities, but the overall banking industry. But Senator Sanders, our banking chair, keeps popping in on this hearing and saying that he's still working with the feds to get better rules applied. So I say, go James Sanders, get rules that actually allow small businesses to get these loans and a reasonable amount of time for them to use them in, as opposed to loans that they won't even be able to legally spend and will have to give back before we've opened our regions again. So I'm just very concerned that we have all these missed opportunities already, and yet all these small businesses that we are hearing from crying out for our help. Thank you, Madam Chair.
Thank you, Senator Krueger.
Okay, next up, Harvey Epstein.
Yeah, thank you. I kind of want to, first of all, thank you for the shout out for the Lower East Side People's Federal Credit Union in my district where I banks. It's really great to hear about our Lower East Side institutions on these at these hearings. I really just question about businesses that you've been turned down from the PPP loan. How many, what percentage of people being turned down? What have you heard? What are the concerns that the credit unions across the state have been talking about, and why those businesses have not been able to get the loans that we've been talking about?
Well,
I can
take it first.
Go ahead.
I'll take it first.
Sure.
But, I don't think people they've been turned down over process if they don't provide the right amount of documentation that's required, or can't validate their expenses, or haven't been in business for the period that they're said. But this isn't a credit test. This is really government subsidy. So, in a government program. So we're not putting a credit. This is not a credit process. This is an eligibility as defined by the SBA. Do you have 500 employees? Have you been in business? Are you an eligible use company? Certain businesses are not eligible for SBA funds, and we can talk about that. But there's no credit filter. So it's really just helping people get the information they need to get through a process so that they comply and get in the queue. And as we know, it's a first come, first served basis. Get in the queue, get the approval number, and then close in 10 days. So if someone didn't get the money, it's because, one, they elected not to take it because they couldn't use it within that 8 weeks, or they felt they couldn't apply for the certification, meaning they didn't meet the level of distress, financial distress that was required for the application process, or they maybe didn't meet some of the other qualifications of the program. But the bankers did not provide a credit filter on determining eligibility.
More of my question is, how many, what are we hearing what the turn down rate is? Like, the people you're saying, like from the credit union's perspective, how many people are not getting the PPPs? Is it a high percentage, a small percentage?
It's a very small percentage when it comes to receiving approval for the loans, if they come in with the proper documentation, which Mr. Thompson said is not a lot. I mean, you have to show that your payroll, you have to demonstrate that you had employees. Most of the people that I think you might be referring to that didn't get the loan, that might have been turned down, were self-employed individuals that just what they were presenting just didn't make sense as far as their documentation is concerned. A self-employed individual that considered themselves an employee and had no employees. So there was a lot of questions about certain types of loans when it came to really small businesses, self-employed individuals, and frankly, some of our credit unions struggled with trying to figure those type of things out. And some, at least round one, some of those funds just, ran out before we could really make those type of loans. But most of them were very small individuals that just didn't have the right documentation to show that they had employees, that they had payroll.
And have you heard that that's broken down by kind of race and gender lines. What we've heard a lot about is people, mostly people of color, women-owned businesses really being turned down because of those factors. Maybe they have too many they had 1099 employees and people who are W-2s. They didn't have sufficient documentation. Have you heard the same thing?
We have not. The credit unions we worked with, I know the NYU down and also New York City, they were struggling with a lot of minority members, but it wasn't relative to who they were. It was, again, the documentation that they either didn't want to provide or couldn't provide.
I would just reiterate, sir, that that absolutely that did not occur, that people were not filtered by race, gender, ethnicity, or anything like that, as of course you can, and we're held to those standards and
Right.
do that.
But it's not the intent, it's more like the impact. It's not like the intent was to do that, but the impact on the program and its designation that it had a race and gender bias.
I respectfully didn't feel that, and you know, we can only manage the applications that come through to the bank, and I can tell you we serviced as many as we could. I know that we went back and tried. There wasn't the reporting probably wasn't as good from that perspective, gender, ethnicity, things like that. But we can go through, since we know so many of our community members, and try and figure it out. But if sorry.
Okay. Thanks, everybody. We're now entering our sixth and final panel. I can hear the cheers through all your muted microphones. And it's really organizations that exist to help businesses. And we have Dale Rice, the Regional Director at SUNY Canton's, New York's small business.
Is this my group?
Yes. Hold on just a second. Small Business Development Center. Shirvan Small, Director, Community Development Project for the Legal Aid Society, and Patrick McCrell, President and Chief Executive Officer of Pursuit. So Dale, why don't you start off with your testimony?
Good afternoon, Chairwoman Kaplan, Chairman Sturpey, members of the committees. Thank you for giving me the opportunity to talk today. I've been with the Small Business Development Center over 20 years now. I started out as a business advisor, and I'm a regional director at SUNY Canton. We serve the northern part of the state. I'm filling in today for our state director, Brian Goldstein, who had a scheduling conflict. I believe that today, more than ever before in our history, small businesses and entrepreneurship is truly critical to the well-being of our local, state, and national economies and our recovery from this pandemic. Above all else, the SBDC is a diversified partnership between the State University, U.S. Small Business Administration, higher education, and the private sector, bringing an array of skilled resources for the direct assistance of small businesses across New York. I know most of you are familiar with the SBDC, but we provide a wide assortment of services through three core activities: one-on-one business counseling, training, and research. In New York State, we have 22 centers and over 40, 22 regional centers and over 40 outreach offices. Right now, about 100% of our staff is working remotely, providing our services through phone, email, and video. COVID-19 has obviously created an unprecedented situation that has devastated our small business communities. The NYSBDC is all too familiar with assisting small businesses in recovering from disasters, having worked in the aftermath of 9/11 and Superstorm Sandy, Irene. All these disasters were relatively isolated, and the destruction was visible. We're dealing with something totally different now. In the disasters I mentioned, the SBDC was able to shift our resources to centers that weren't directly impacted by the disasters to help out. And the SBA was able to direct their loan programs for a specific area, and that's just not the case now. So it affects, it affects the entire state, the country, the world. And it's created a very uncertain business climate on a scale that makes it much more difficult to assist with the recovery. Just to put it in perspective, between the dates of March 1st and April 30th, the SBDC, we've counseled over 7,000 small businesses and another 10,000 in training through webinars. Most of that training and counseling was helping people with the PPP and the EIDL loans, kind of understanding the programs and helping them apply. There have been issues with small business owners understanding which loan is best for their situation, understanding the terms. You heard that from some of the witnesses today. That there's a lot of different terms and conditions. So there's a lot of work that needs to be done to help these businesses understand what they signed up for. Can't really add too much to the conversation we had today about PPP and EIDL. I think everything's been said, but one thing I would like to mention is the 3 SBA districts in New York State, Syracuse, New York, and Buffalo. I can't say enough good things about the Syracuse district office. They were very helpful throughout this. Their staff and their team was pretty accessible 24/7 to us. And I know, talking to my colleagues throughout the rest of the state, it was the same in the New York district and the Buffalo district. One thing I would like to mention is the New York State SBDC has received additional funding through the CARES Act. We just found out about that. We just got the notice of the award Friday. What that means is, through this additional funding, we're gonna be able to bring on 70 new business advisors throughout the state, additional research network team, and some technology to help us provide these services better. These advisors will be on staff up until the end of September 2021. So we're gonna have them for the rest of this fiscal year and all of next fiscal year. And they're totally dedicated to helping with disaster recovery, helping businesses get funding, helping them navigate with reopening plans, pivoting their business, and working forward with resiliency planning to help soften the future impacts. Thank you.
Okay, Shervon, you're next.
Yes, good afternoon. So my name is Shervon Small, and I'm an attorney with the Legal Aid Society in New York City, and also the director of the Community Development Project. Thank you very much for the opportunity to present testimony, which has been informed by our work with low-income and minority small business owners who we represent. So many of you are probably familiar with our work and familiar with our work around housing, immigration, etc. But we are very diversified at the Legal Aid Society. We have tax practice, consumer practices, etc. So the Community Development Project has provided free legal services to qualified low-income small businesses and nonprofits in New York City for over 20 years. We assisted businesses after major disasters, including Superstorm Sandy and 9/11, and we continue to provide assistance after local disasters in our work with the New York City Department of Small Business Services and Emergency Response Unit. As you are all aware, just about every business sector has been impacted by COVID-19, and as such, our services have come into even greater demand. Today, I'm going to outline the debilitating challenges faced by small businesses hurt by COVID-19 and call on the federal government to improve its response by reforming the Paycheck Protection Program to provide technical support for applicants, ensure equitable distribution of funds, and ensure fair access to those funds. So we do applaud Congress for moving quickly with this program, but we do believe that it's fallen short in helping small businesses in New York State, the state which has been hit the hardest by the COVID-19 pandemic. So therefore, we think it should be reimagined. Number one, the federal government should provide technical support for applicants. So we found that there was a lot of confusion around the program between bankers and New York small business owners, many of whom had to apply on their own, were not familiar with grant and loan programs, were not intimately familiar with their own finances because they usually relied on accountants, bookkeepers, and tax preparers. Sometimes the business owners were simply confused about which forms or platforms to use. And once that was cleared up, they were then devastated to find out that the money had dried up and they had to reapply. So the Small Business Administration should ensure a uniform application process or platform for all applicants, and a way for the small business owners who are not financially or technologically savvy to get answers, and more time also to submit a completed application. Two, the federal government should ensure an equitable distribution of funds. The first come, first served nature of the program also created a problem for our clients. While the drafters may have thought that this would be a fair system where every business was treated equally, in reality, it actually favored the larger multi-million-dollar businesses with accounting departments and law firms on retainers who had personal relationship with the bankers and could polish and push those applications. So in order to achieve greater fairness of outcomes with the PPP applications, there should be a sense of equity where small businesses with, for example, less than 20 employees that make up 88% of small businesses around the state and country have as great a chance of succeeding as those with 100 to 499 employees that make up only 1.7% of small businesses. Additionally, while many businesses are unable to open, owners wonder how to spend PPP funds to get the most out of the forgiveness provisions. So the forgiveness calculations will be based on how the business spends their money within 8 weeks. But with New York State on pause, some businesses currently have little or no work for their employees. Others cannot get furloughed employees to return who may be receiving enhanced unemployment. So while the PPP actually encourages employers to get people back to work, there's a competing unemployment provision that keeps employees away. So those who cannot hire will be left with interest-bearing loans that may prove unaffordable for them. Third, the Small Business Administration should ensure fair access to the funds. So under PPP, we do believe that lenders had an incentive. So the last panel said they did not prioritize loans, but lenders did have an incentive to prioritize those larger loans for larger businesses, which brought in greater fees. And over the first 2 weeks of PPP alone, banks earned more than $10 billion in fees processing those SBA guaranteed loans. This resulted in loans to thriving businesses like over 100 publicly traded companies, national chain restaurants, professional sports teams, etc. Additionally, another source of funding for small businesses may be the insurance policies whose premiums owners have paid for years, hoping it would protect them against the losses they're currently experiencing. Unfortunately, the insurance industry, its response has been to generally dissuade policyholders from filing claims. So what policyholders have been forced to do is that if they could afford it, would be to sue their insurance companies in order to be made whole. Additionally, there's a state bill, an identical state bill in the Assembly and Senate, which was put forward by Carolyn Gernardis on March 27th, 2020, that would apply to restaurants and other businesses with 100 or fewer full-time eligible employees, which overrides any provisions requiring physical damage and gets around any virus exclusions. So since the insurance regulatory law is primarily enforced by state insurance departments, it is important that the legislature move this bill forward to help vulnerable small businesses around New York State. Thank you very much for your time.
Thanks. Patrick? Is Patrick still here? Doesn't sound like it. Okay. Let me just start with a question, and maybe well, you both can answer, but let's start with Shervon. I mean, when a small business applies for assistance under one of these federal programs, what's your experience been? Are they aware of the potential legal and financial obligations associated with the programs?
So many of them may be aware of the legal implications of the program because they have engaged in contracting before, whether it's with suppliers, whether it's with their landlords, et cetera. But when it comes to the financial obligations, a lot of them are not so much familiar with that aspect of it because that's just not the area that they work in. A lot of our clients are smaller mom and pop businesses. They're the main street businesses that keep this economy afloat, and they just may not have the technology, the financial savvy in order to really understand how these things work. They may not have relationship with their bankers in order to, pick up the phone and say, what do I need to do right now to get this to you, and so I could get this money now. They may not have any of these resources available. Earlier today, someone testified that they paid a third party to actually help them. Our clients just can't do that. Our clients just do not have the ability to do any of that. And they're stuck and have been, denied loans, have been not hearing anything from their banks. Someone else testified that they found that someone who applied after them got in first. And that's not the way the program is supposed to work. Folks just do not have the support they need in order to get the benefits of this program.
I got to give you 3 stars because you paid attention all the way back to I don't know when. So very, very nice. What about you, Dale? What's your experience been?
I think when the loans first came out, they came out so fast. There's a lot of information out there that people didn't really understand. These when they started coming out, their lives were turned upside down. So it was a really frantic time for them. We've spent a lot of time, most of the stats I gave you for that 8-week window, most of our time was talking to people and letting them making sure they understood the programs. But since then, we've gotten a lot of calls from people that have applied. They're starting to get the funding, and they really don't have any idea what they signed up for.
Okay. All right. That's it for me. Senator, I don't think you have anybody.
I
unless
have
you
a
wanna do-
question.
Okay, you go.
Well, actually, a couple of questions. So I want to thank you both for your testimony and also for your time here. I actually held 2 webinars, and I got really great help from SBDC here in Long Island. And big shout out, they came on board. We did these webinars where we answered a lot of questions. Maybe you can talk a little bit about what advice you could give in terms of any business that is really looking forward to have a business, whether it's an existing business or a different business, because circumstances have changed. If they want to have a new business going forward, reimagining something different, how can SBDC and EAC help them? And if you have any advice for any of these new people who want to take advantage of this time going forward and really try to build a business from ground up.
Yeah, do you want me to? I'll start. It's been really refreshing the last couple weeks. We're finally starting to get calls back from clients that are calling because they want to start new businesses, which is, it's pretty happy about that. The existing businesses, pretty much every business that we work with, their business is going to change in one direction or another moving forward. I'm really excited that we were able we haven't yet, but we just started to bring on the 70 additional staff members. They're going to be dedicated just to working with businesses, and they're going to have a lot of time to be able to work with them one-on-one to help them pivot their business, make sure when they're ready to open, they're going to have a safe business, look at new markets, new ways to deliver their products. So it's going to be really interesting to be able to have that kind of work.
I agree. I agree with. Sorry, I agree with what Dale said. Additionally, I think SBDCs are always a good place for small businesses to start because they will get the training, they will get the resources that they need in order to move forward. Also, legal services providers like the Legal Aid Society. So we help folks determine what the best form of entity should be. We help folks incorporate. So we have been getting calls right now. About 25% of our calls are from people who are not COVID-19 impacted. So we are, it is promising that we are getting folks that need assistance. And we've banded with a lot of the nonprofits and some of the large law firms around New York City in order to move forward quickly. So we've joined the Small Business Legal Relief Alliance, which is a bunch of legal service providers and law firms which are ready and able now to answer questions and help people move forward. So that's what we're able to do.
Thank you. My next question is, I'm aware that the SBDC does really a lot of wonderful programming. I'm aware that EA sees the entrepreneurship assistance centers, the 24 centers that we have throughout the state, do great work in terms of really helping small businesses develop a business plan and go forward, get access to capital, and hopefully help them succeed in their plan. My question to you is, how do we try to really get the word out? Because I don't think a lot of residents, a lot of people are aware of these centers that could be a very good resource for them. Any suggestions?
You're right. You're right, Senator. Folks are not familiar. I mean, sometimes I'm surprised about the types that we get calls every day because the way people, it's so many times is by word of mouth, is by maybe walking into one of your offices and they'll be pointed in the right direction. But I think we need to do a blitz. The same way that, these programs have been announced. PPP was, there were state hearings about it. There were webinars all over the place about it. So I think the same thing should be done to really get the word out. Just blitz the screens, blitz the airwaves in order to let people know that help is available to them, and they shouldn't just be sitting idly by hoping that they could get their business up and running or hoping they could get their business back on secure footing. I think we need to get the word out and do it soon.
I agree. And if you have any other suggestions how we can do that more effectively, please shoot us a text, an email. We would love to hear from you. And I would love to work with anyone, whether it's senators, whether any of the witnesses on this hearing, all the panels that have been here, there are resources available for a lot of people. Just a matter of people knowing these resources exist and for them to tap into them. With that, I want to thank every witness for taking the time and coming today, being part of this wonderful forum. And I want to thank all the senators, all the assembly members, all the electeds who took part in this. And hopefully we got some good feedback, and we'll try to work, and hopefully we'll continue having these hearings to see how we can actually help our constituents, especially our small businesses, because we understand the importance of their succession in our own communities. I want to also thank my colleague, Assemblyman Sturpey. Thank you so much for hosting this with me, and I'll hand it over to you.
All right, thank you. We have three more assembly members. Well, now two more assembly members that want to speak. So let's go to Rodney's Bichot. She's next.
Hi, how are you again? Thank you. I want to thank the witnesses for being here today to testify on the obstacles. I know SBDC, you guys have been very helpful with lending a hand and being a service to many of the small businesses who didn't know anything about how to fill out the PPP application. We actually would refer many of our business community members to our local SBDC. So thank you for that. And Mr. Small, thank you for your work in serving as a legal aid to many of the small businesses. It's certainly needed. I must say, when I heard the statistics, I was a little bit baffled, but that is the reality. The vast majority of the people who benefited from the PPP stimulus loan were not those very small businesses that makes a majority of our economy. And so I agree that we need to roll out a level of technical assistance. And also we need to find a way where there's a better relationship between the banks and these small businesses. Now, we know that there were $60 billion that were given to CDFIs, Community Development Financial Institutions, because the banks were turning their backs to the majority of small businesses, in particular, minority-owned businesses. So I wanted to hear a little bit more on, from the whole grand scheme of things, what was the percentage of minority and women, in particular minority-owned businesses, that benefited from this? Was it 5%? Was it 0.5%? I mean, was it 0.2%? We want to know. That's important. We need to know. Please.
Thank you, Assembly Member. So we don't. I don't have an answer to that particular question. In fact, I'm interested in it myself, because from looking at the statistics, it appears that there were, it's almost like the 1%ers. It's like there were a very few companies on the top who received, a substantial portion. The loans were capped at 10 million, but there was a number of individuals or businesses that did get that $10 million. Whereas we had a number of clients who told us they applied for X amount of dollars, and they were told that they would get $1,000 per employee. We're like, that doesn't even make any sense. So how is folks getting all this money on one side? And most of our clients are minorities, are women-owned enterprises. So we do see it on the ground, and I haven't run the stats, I haven't done the research on that particular issue, but I'm extremely I would be very surprised if the number was anything that would make us happy. It's not going to. So I do think that this is another area where a new PPP should, again, it's about equity. It's not about making everybody have this access to the same application at the same time. It's ensuring that the folks who need the help the most are assisted. Not everybody at the same time, but those who need the assistance the most. And there's going to be the minority, the women-owned business enterprises.
Thank you. Did you want to say something, Mr. Rice?
Yeah, I don't have the statistics you're looking for. Those I think you'd have to get from the SBA. I haven't had a chance to look into that. We're just trying to keep our head above water, keeping up with the increased demand. I do know our downstate centers, overall, the majority of the clients they work with, 65% are minority-owned businesses. And I know that there's been a lot of economic impact in the downstate centers, but I couldn't tell you the breakdown of who got what.
Going to, in terms of the CDFIs, do both of you see that it's more beneficial than working with the banks? Because again, the banks were giving a lot of these smaller business, minority and women-owned businesses a hard time in lending them that money. And that's why the government, federal government, had to set aside literally $60 billion so that CDFIs can do the actual lending. CDFIs in our communities have been the backbone of lending money to our small businesses that are minority and women-owned. Have you seen anything around that in terms of improvement? Or do you have any information around CDFIs versus banks?
I do not, Assembly Member, but I do think that from what speaking to our clients, that they did get a better response when they actually called the banks. The smaller ones were able to give them answers to their questions as opposed to the larger institutions. So, for, just anecdotally, I do think the CDFIs and credit unions were able to better respond than the national banks.
The question time is up.
Okay, thanks. Next up, we have Tom Abenadi.
Staying with us today. I have been attending some community meetings. There was one sponsored by Assemblywoman Bouchard. I went to one sponsored by Senator Sanders. And where I go seems to determine the message that we hear. We heard today about a very complicated process. We heard about some success stories with respect to the process that was set up by the federal government. But we also heard hints of some problems. And when I compare what I heard today with what I heard in some other communities, they're not really telling the same story. I'm getting the sense that the geography, like where you're located, the industry you're in, the size of your business, whether you're a nonprofit or a for-profit, where you have a lending relationship, a banking relationship, and matters. That some banks were excluded, and there were a lot of the people who were in the inner cities, on Main Street, the micro businesses, have the relationships with those institutions that were excluded. On the other hand, some of the other people gave us some great stories about how it's working for them. I'd like your response to that comment. And then I have a second question, which is you're dealing with small businesses. One thing we didn't talk about today was the state is trying to help the small businesses, mortgage forbearance, non-eviction policies. What's going to happen to these what has been the impact of those on small businesses? And what's going to happen when the state lifts the no eviction policy? And lastly, you've kind of given us this answer, but when you conclude, just give me in 25 words or left what you would ask the Banks Committee to do. What message should we send to the banks? So tell me about the different disparities. What's going to happen when our present state freeze lifts? And what lesson should we take? What should we do in the next PPE?
Thank you, Assembly Member. So I'll take the second question first regarding the moratorium. So we've had a lot of questions about that. A lot of folks have questions regarding lease obligations, whether or not they need to contact their landlords, et cetera. And because they worried, they are worried that basically once the moratorium is up, that they're not going to have the money in order to pay these their landlords. So the moratorium is on evictions, but the moratorium is not really on paying. So after the end of 90 days, they will have to come up with the money somehow in order to pay their landlords. So we are encouraging folks to try renegotiating with their landlords. Some landlords we've been successful in getting maybe a month and a half, but sometimes completely rent free, and then maybe a percentage off for the next couple of months. So we have been able to do that, and but that's those are one-offs. I think in general, most people do not have an attorney. Most people do not have anyone to advocate for them. So they're going to find that they're at the end of 3 months that they really have to come up with this money that they do not have. So I'm not sure where we could, so our businesses are hurting. Our individuals around New York State are hurting. Our poor and minority folks are hurting. So something has to be done there. But the moratorium is not going to be completely helpful to them. Regarding disparities, I think you're absolutely right. You are going to hear different stories based on the size of the entity, where in the state they are, who their relationships are with, and that's one of the major problems we have. Again, it's about equity, not really. We need everything to be, people who need the help the most need to get the most help. And I think that's what you're hearing when you go to these different town halls, because the different places, different individuals are not receiving the assistance that they do need. Now, the banking departments, I think someone also mentioned that maybe we need to have some interest-free loans. I don't know how we could encourage the banks to force them to the banks have a requirement to give back to communities, and maybe the Community Reinvestment Act could be used in order to force banks to loan to these companies.
Okay, thank you.
For Northern New York, your assessment of kind of what's been going on with the loan programs. Definitely the businesses that had strong relationships with their bankers in Northern New York, at least, were the ones that made out pretty well in the first round. The second round, in my area, a lot of the credit unions and the smaller savings and loans that are normally not SBA lenders really stepped up.
Yes.
And picked up.
I'm sorry, your question time is up.
Okay. We're going to finish up with Rebecca Seawright.
Hold on hold on a second. I'm on a call. Hi, thank you very much. So I just have a question for SBDC for Dale Rice, and please give my regards to Brian Goldstein. How many centers do you have in Manhattan?
In Manhattan, there's 22 throughout the state. I know we have probably 6 or 7 in the city. I can't name them off the top of my head. I'm sorry.
Okay. And can you just recite over this, the best way for our constituents to contact the SBDC?
I've been telling people in my area the easiest way is to go to our state website, NYS SBDC, and click request for counseling. Because we're working remotely, sometimes it's the easiest way to get the information and get it to the right advisors working from home.
Okay, great. Thank you very much. And thanks to all of you.
Yep.
Okay. Well, looks like we're wrapped up here. Senator Kaplan, I just want to say, you asked if there were any recommendations on how to get more awareness of SBDCs. And what we do in our office, we have the Central New York SBDC that operates out of Onondaga Community College. And we have a database from our constituents of about 6,000. And every month we send out a newsletter, and they let us know when they're having classes or any of those things, and we put it in our newsletter. It's just a way that we help, and I think everybody else could do something like that too.
Absolutely. I think you're absolutely right. We've tried to do that. I actually was able to take a tour. I visited 9 of the entrepreneurship assistance centers in New York State. Those are another vehicle for a lot of our constituents to really tap into. And I think SBDC does a great job. And I do have to give a big shout out to Robert Pihoda, who came on board with us and helped us with a lot of our constituents. So there is a lot of help out there. It's just a matter of making sure our residents are aware of them.
Yes, all the funding they get is for actual programs, nothing for marketing. So that's why it's hard to find out, that they're actually there. I want to first of all thank you, Senator, for co-hosting this with me. And, we made it through, which is a good thing. I also want to thank all the members who participated. And a lot of you, I'm surprised, have hung in there the entire day. So congratulations for that. And most of all, I want to thank all the witnesses who came forward and spent their time with us today. I think no matter how long it took, we got some valuable information out of this, and hopefully we can put that together. And Chair Neely Rosick can transmit that to the federal representatives, and hopefully it'll help them when they're putting together the next package. So thank you all very much, and stay safe, okay?
God
Bye-bye.
bless. Stay safe, everyone.
Take care.
This hearing is now closed.